April 13th, 9:15. We got about 15 minutes to open. We're going to stream the stock market, stream live trading, futures, options, shares. Thanks for joining. Sub up, like up, comment down. Happy money sticks around. Get set up here. Everything cranking. BBBY came out. Jobless claims, pretty close to expectations. Jobless claims is actually lower than what they expected, so sorry, higher. So kind of interesting, the market reaction to the upside, because I think the narrative's starting to change from bad news is bad news. But this could be from PPI too, I'm not sure exactly. Hey Isaac, good morning Greenell. Why is today a big day? Is the old square? I don't know. Up 2% pre-market. Why did it sell off yesterday? Not sure what the deal is. BBBY didn't really get the pre-market pump, so we might be closing out this morning. We'll see. We might get a rally right out of open, back above that level. I'll hold if that's the case. If not, dumping. Okay. GFAI kind of took off again this morning. It's settling back down now. Okay, I've got about 10 minutes. Trusted source. Rip, huh? Should say which ones. Hearing a lot of what, Hindenburg? I don't follow. Yeah, SPY clipped what, 409 in pre-market. Not a huge reaction from day this morning, really. I don't know historically what's a big reaction or a normal reaction from jobless claim to the PPI, but it doesn't seem very big. Starting a short squeeze. Hindenburg starting a short squeeze. Patience. Listen to yourself. Be decisive. Kill losers quickly. False breakouts are common. For to confirm direction. Trade the trend. Trade the range. Zoom out before taking a trade. Don't hold through announcements. Got a couple stocks to look at. I've got GoEV, GTAI, and Fubo still. GoEV kind of had a gap up here a little bit. Highs of yesterday. GTAI is so liquid. Doesn't even trade pre-market. Fubo not looking as good. There's this engulfing candle. Yeah, I'll take that off. Added Turca and SMX. Turca's chart looks pretty nice actually. And then SMX we were watching yesterday. I want to look for another entry today. A lot of strength into close though. This one's pretty illiquid also. BlackRock strategists expect the Fed will stop its rate hiking cycle without getting inflation to its 2% target. Yeah, probably. Morning rally. No, I haven't exited yet. I was gonna do it in pre-market, didn't get our pump. Well, I guess there was something here. I don't know what that was, but if we don't get kind of a rally right out of the gate, I'm gonna close. Sometimes we just rip out of the gate like this. So we get that, and this ends up just being a little false breakout to the downside, then I'll be content. But otherwise, we'll probably close out. Yeah. Even though I don't think it necessarily gonna go much lower, but I don't know. My on what from what I just entered, my percent, probably like, I don't know. It's hard to tell because it's doing an adjusted cost basis. Or no, actually I can tell. Let's see. 31 cents. So 31 is my average from what I just entered. So what, like 10%? Thereabouts. Yeah, you're 9%. I just kept kind of averaging. I averaged too much this day, not enough this day. I just did it a little bit here and then I stopped. Then we broke. So most of my pickups were actually this day. BBBY coming down here a little bit. We've got 5 minutes into the open. Like OEV's chart, like GTII's chart, like SMX's chart. But to me, it looked like it was kind of double topping here yesterday and getting a little divergence. Now looking at it, it looks like it's just much stronger. I don't know, for some reason yesterday I was like, oh, here on the 5 minute. Little RSI divergence. But still looks pretty strong. See if there's a pullback on it at all. GFAI coming back down a bit. Nat gas down some. Can't believe I jumped in nat gas so quick. Yeah, I saw people talking about top. Where did Tupperware come from? Why is that one even speculated on? It seems like it'd be too obvious if it's BBY, but that said, the most logical conclusion would be that it's BBBY. So yeah, I know you guys were talking about top a couple days ago. Was that you, Isaac? Spiraling up a ton. 411. I think it definitely could, yeah. And that's still within this kind of consolidation range we had back here. That we're doing the same thing up here. I'm still thinking this is looking like a double top though, because now we've gotten all the data, and I don't know. Depends on the next couple days, I guess, if we break out. But tomorrow we have retail sales, which isn't huge. Market moving. Next Thursday, initial jobless claims again. We don't have. Yeah, we don't have anything really the week. Or no, sorry, yeah. Next week's not much either. So yeah, maybe just continue to kind of consolidate in this range. That's what I would say for now. But this is at a double top, so breaking one way or the other is the direction I would go, basically. If it breaks this level up here, I would go long. If it breaks the level down here, I would go short. The downside's a little more not as clear cut where the break is, I guess, but if it comes with data, then it'll be easier to determine. Fed meeting in May. Yeah, it seems like there's not much until maybe May. Thanks, MT. You, buddy. Just one time where I see that for Chinese food leftovers. I like how you incorporated China in there too. Let's see. About 1 minute to open. Again, if BY doesn't, if it just does, you know, this typical stuff in the morning, I'm gonna just cut it. Does this, hold it and see what happens. But I think we should know in the first 10 minutes what's happening. Okay, market's about to open. Got GoEV up 5%, SMX up 4%, GFAI 8.5%. Might be a take profit day on GFAI. Morning, Trinity. Keep an eye on Jeff Brands too. That one could be setting up for another rally. Thanks, guys, for your likes. We've got 6 of them. It's not great, but it's appreciated. Thank you. We might get a bell. I'm not sure. There's your bell. Wake up. I should shut that off. Okay. Market's open. Bed Bath not flushing yet. Quite likely though. GFAI moving up very quickly, 13% now. Jeff Brand's up 6%, interesting. SMX up 7. Yeah, I might get an SMX. I was looking for a pullback on it. Stayed pretty strong after hours. I don't want to be staring at BBY all day waiting to exit, but wheels up 5. GFAI now up 16. Jeez, dude. I think it bounced right back up to where it was. Bed Bath & Beyond is just flat. Fly's moving up a bit. Could just put a stop loss on this thing, really. Just volatile and wiki though, sometimes in the morning even. Holy. Opening volume 6.2 million. Less than yesterday at the open. Oh, it's not flushing yet. This is maybe one of the flattest opens we've seen on Bed Bath & Beyond. After I just said it's either going to go up or down quick like it does. It's just flat. Weird. Very weird. ISPO is up 7.5%. Jeff Brand 6.25%. Analyst still up 4.5%. Half mats and candles. This is crazy. Actually not moving here. Still sleeping. Well, there you have it. Guess I'm not playing the SPY right now. I could venture off. SI up over 1.5. GME pretty much flat. GFAI just volatile. SPO up 7. The RSI divergence on there on ISPO. It's definitely a downtrend, but okay, now Bed Bath's down a little bit. Looks like it's starting to flush. Weird morning though on Bed Bath. This is unusual. Yeah, I'm out. Well, broke pre-market low. We'll see. I wait. There's the flash. Okay. A little while this morning. It was not a bad sell to sell SMX because you made money. You need to have risk management and stick with it. Get all your emotional trading crap out of here. Alright, let's look at other stuff now. Got cash grid puts on Silvergate and covered calls. I want to buy some GTII, I think. Yes. Spy's coming down. Might get some Turca and some GTII. I think those are gonna be my. Moving down here, filling that gap. I don't want SMX, but it's, I just want to wait a bit. Get some GTAI shares. See what kind of spreads on here. Oh, it's not bad. And let's see, what else is on here? OEV, GTII, Fubo. OEV kind of gave up a little bit. Yeah, this one I'm kind of see it going both ways. Don't like Fubo anymore. Turca I still like, and SMX. Alright, I'm looking at Turca. BBBY, wick down there to 2604. Jeez, nat gas is coming down again. Literally should be inversing myself on nat gas at this point. Nat gas is flushing. Broke the level on a UNG for the inverted head and shoulders. Dang it, I played this stupid game before on it. GME is up 1.3. GME down 1.6. I'm now green on those puts. That is neat. There's oddly strong. Yeah, I kind of want to cut out of that spread. SPY moving up here. Beery's up 6%. You got out of UNG. You made money on it though, congratulations. Jeez, it's really flushing. See if it double bottoms down here at $2 again. Cash, man, my entry on that was so impatient. BY down 5. BY sells Tupperware. WW is moving. Oh yeah, was this the merger? The spin-off or whatever? Rubo's up 5%. Oh, I got filled. Alright, so I picked up Turkish shares. Or didn't make any noise. I pull today. It's kind of hard to have price targets on it for a pull. GME bouncing above that breakout level there again. Nice SI, well done. Jeez. Nat Gas just found the floor. Now it's at the low. Like, I don't know, multi-year low. $2 on the futures. 2025. The size moving up. Thought about getting more shares. I don't know, all the bank earnings and then their own earnings, a little sketchy, but this thing might honestly rally on their earnings because anything that's not like bankruptcy might go crazy on this. So IV's high, but maybe getting some spreads. Fall spreads. 1.3. BBY down 6.7. Bank stock speed earnings, yeah, potentially. Yeah, so I was just thinking about, especially some of these ones that have just been crushed. I feel like they could have a big upside. SI and FRC. Don't have exposure on FRC yet. Open door up 8. Yeah, the big banks. Yeah, I don't know. Maybe, yeah, because Schwab I guess sold off a lot, right? Was it SCHW? This one had a big, I guess a lot of them did. AMC's moving. Yeah, AMC's up 3. GME's up 1.3. A lot of volume in the last few days here on up. Getting some buying pressure. Western Alliance. Should this thing hit 7? Crazy bounce. Wow. BY down 7%. Almost to a quarter. Almost to a quarter. All in 2,000 shares. I know what you mean. I saw those Wall Street Bets post also. You guys got like 1 million or something in FRC. Wait, is that till 0? That's the thing with going down. You can just always go down. Continuously, endlessly. Zero is 33% from here. 33% down. There you go. You're gonna buy some at 0? Oh, free! This has got to be one of the most dramatic continuous sell-offs I've actually ever seen. Like sustained selling off with 0 relief rallies or bounces. I don't know if I've ever seen something like this actually. Pretty amazing. It's another exciting reason why I want to be in it. I just feel like something special. I'm part of history. Not really to be part of history, but because it seems like something special is going on. Gosh, these manipulated stocks. Why do they attract me? BY hit 26 cents. Did it. Got my Turkish shares. Turkish chart looks pretty nice. UTI has a nice channel. I think it's in. There you go. EV go. One I was looking at. Oh, EV. I don't like there's divergence on the bearish side also. Yeah, I'm gonna wait on SMX. Still has that divergence. Me up 1.6. This MU. These puts were up 80% at one point. Hopefully we get back there. Why I didn't sell? Thank you guys for your likes. Got 16 of them. Well done. Well done. Eyes coming down there. PBLA. Oh, you're not therapeutics. Yeah, I might pick up some of these approval stocks coming into the calendar here. I have to look through those. Cancel a call? Cancel it. Right click it and cancel it. Put 5K on BY, 2605. Well, alright then. 5,000 shares? Or Lotus. BBY flushing new low, down almost 8%. There's 25 cents. See if it finds any support here at the even 25. There's LMFA kind of rallying here. This chart looks pretty nice actually. Things up quite a bit already, but just break out of this resistance over here. Yeah, SMX up 1.5. Buy a little BY. Don't want to crash too much on a big buy. I'm looking for 160.10. Put an order for that, or even down further. 150 is for support. My GTAI never filled. So liquid. Turker got filled. $25.60 is the low there on BBBY. I cut out this morning. Guess I should have waited for the momentum to fully reverse. I don't know, that day with that volume, that engulfing candle, definitely felt like something we weren't going to break below. So I don't feel like that was a bad buy. but at the same time, this was not a bad sell, as it did break down. I buy back in, very well could be the same price I just sold it at, but you never know. BBBY covered calls. I mean, can you make any money on covered calls though? That half a dollar, 2 cents, 3 cents, and they don't lose value because they're already so cheap. Hey, Julian. My $1 target. Backing in Neo, huh? Yeah, I was saying earlier, I think this is maybe the longest sustained drop I've ever seen. Like, with this amount of pace. Without any relief rallies or bounces. It's pretty incredible. You had it here, but look, you had a pretty good bounce here over the moving average, another bounce here, and the degree of drop was less than this. This was our only like little bounce, and that didn't even break the moving average. Pretty incredible. $25.60, that's a low on BBY today. As a maximum 0.6. GME's coming down, SPY's coming down a bit. Wheels Up just popped. Went from 6% to 9%. Yeah, the volume picking up coming down here does seem like some buying pressure, even though it's still declining in price. Finger motion. Buy kind of coming down. Down to 11 cents. Bed Bath consolidating down here. SMX down 2% now. Gas literally at the lows. Jeez. At 5 cents, sell making $80. 300 shares. Not $300 shares. No dollar sign. Yeah. Yeah, I mean, if you're wanting to hold them to expiration too, thing with them, since they're so cheap, I don't know what date you're using, but they're so cheap to be getting in and out of them is up 11 now. 11.3. So if you're looking at next week's, which are the monthlies, which are the most liquid, if you were able to get a 3-cent fill yesterday, I mean, yeah, you should have to get more time on it. I mean, look at May, 7 cents. But for that to decay to 1 cent, you pretty much have to wait the whole time because it's basically all the way cheap. Right? And then you're stuck with a covered call if you get news after hours and it gaps up, 100% or so. But I know what you mean. I think covered calls is great. I guess at this price, and yeah, it just doesn't seem worth it to me. I'd rather just sell my shares and buy back in later. Aren't you glad you didn't buy SMX yet, Rick? There's $1.60. Look for $1.50. That doesn't hold. You're looking for probably $1.20. Ubo up 6%. Climbing. All in on OnlyFans. Yikes, those are rough alternatives. Buy close 4/11/20. Okay. That's today's date. Weeklies. Oh jeez. 2 cents to 5 cents. Yeah, so it sounds like you're letting him expire. Regal turning around. Maybe. Does have an RSI divergence here. And this day was an engulfing candle. So yeah, it could be a nice buy there. Morning, it's me. Need a 6,000. That gas. Is this a new low? It's getting close. Oh gosh, I'm gonna have to cut that thing. SMX down 1.57. Thing moves big, man. It doesn't look big here just because it's moved so much. 12% move from the high today. Crazy. I still like this though. I like the fundamental behind it. Them fighting shorts. So I'll probably be looking to get exposure again. The tweet, to me the most logical thing is that it's about Bed Bath & Beyond. But this, for the same reason, it almost seems too obvious that it's about BBY. So I don't know. I don't know if it's some new company, but from what we have, most logical would be that's BBY. But part of the reason that I don't think it's that is because that's the most logical, and Brian Cohen, you know, likes to troll, likes to throw people off, it seems like, so maybe it's too obvious. SPY moving up there, new high on it. HD has been volatile these last like week or so. Look how big these candles are on here. I didn't take it as bullish, but then his last sentence, that made me bullish if he was talking about Bed Bath. So I already assumed he was out of it. I didn't have any preconceived notion that he was involved anymore. So to me, that tweet, if it was about BBBY, was pretty much only bullish because it says he's still communicating with them. Seems like he still has interest, and he says things are about to get interesting. So I don't think you'd say things are about to get interesting if he says they're gonna go bankrupt, or nothing's gonna work out, or you know, whatever. So to me, it's only bullish, that tweet. But that's because I didn't have any. I wasn't like banking on this master plan with him and BBY behind the scenes. So yeah, I saw the people thinking that was past tense. So he could be talking about anything, but yeah, most logical to me is BBY, but maybe that's exactly why it's not BBY, because it's too obvious. SPY's moving up there. GME bouncing a little bit. Show you guys this natural gas price chart and where the price is right now. Very interesting. It's at 201. This is the 1 year chart. Here's the 5 year. So it has dropped below that $2 level before. This was COVID. Around COVID. Moving up, GME moving up, wheels up almost 12%. SMX, good. Be patient with it. Wait. The slides uptrend, everyone and their grandma will jump. The gamma. And with earnings and reverse split, this will take over Microsoft. We're sure to listen. Internet Explorer sucks. Chat GME. How can I flip my chart? Nice. Wish is starting to move up a little bit. See that big sell-off from the split. So I think could rip. MCOM is just similar to BBY in the fact that it's just down 5 to 10% almost every day. But this has been since it's split. That's awful. It's like BY is getting its sell off from the split already, even though it hasn't happened yet. Ubo 7.8% up. GME holding well, holding good, holding well. Bounced off that channel still, so it's still looking bullish. Yesterday we did have this engulfing candle, which kind of sucks, but price action wise, it would appear that it's holding at this level regardless. So I'm not going to hold too much weight on that. Similar to back here, see where this engulfing candle, the green side was bullish and didn't really have anything from it. I mean, rallied a little bit, but not like it was anything significant. Climbing up. But Bath just flushed down to that 25 cents level and is just consolidating down here. After 25 cents, looking for 20 cents. And Ace asked the question, how much further down is zero? And that was kind of interesting. Only 30% away. Only 30% away from the pain being over. That's only like 4 or 5 days on BBY. This chart looks like it's breaking out. It's an oil chart. Four or 5 days till BBY is at zero if we keep up this pace. So you're looking at by 420. Then you can buy all the shares you want for free. He's natty. I'm moving up. BY looks like it wants to climb. GME holding a level. SI up 1.6. SMX did bounce from there. Things still liquid and super bouncy. That's crazy. Down 12%. It was just down like, it's up 4%. Up 7%. This is sketchy stock. We saw it yesterday with my sell doing this, or this, whichever it was. Gotta be careful getting in and out of this thing. There goes SPY. Yeah, Dillard's was a great one that many missed. From the $19 low and the COVID. 417. Tesla up 2.3. I want to get a short on Tesla though. Today might be the day. But Beth, pretty flat down here. London Stock Exchange unit to clear Bitcoin derivatives. Jamie Dimon of JP Morgan says banking crisis raises risk of recession, but it's not 2008 all over again. Investors should take a deep breath. Breaking through the levels to the upside. Hungary government says Hungary to quit International Investment Bank. Cities with the lowest take-home pay of $100,000 salary in the U.S. New York, Honolulu, San Francisco, Washington, D.C., L.A., Long Beach, San Diego, Oakland, Boston, Seattle. In that order. High tax states and cities. China's launch of weather satellite on Sunday, reason for no-fly zone north of Taiwan, official central news agency says. Tim Cook starts every day at 5 a.m. by reading emails and notes from customers about the impact of its technology. Ukrainian Defense Minister Reznikov. There's no alternative to Ukraine's accession to NATO. It's taxable if you claim it on your taxes. If you put it in cold storage and lose the key, nothing they can do about that, unfortunately. All in on Neo, back into Neo. What do you know? It's up 2%. Nice little head and shoulders built there. MACD's still bullish. SMX back down 2.4. These things. Might just put an order for 1.5. Maybe it'll fill. See if it gets a little dip down here. Thank you guys for your likes. I appreciate it. Got up to 20. Well done. I still ripping here. $21. Thanks, Rick. Orders for 2.5 strike price year 20. You're going back to leaps? least you got time. Leaps aren't really meant to be quickly traded in and out, though, as they don't move with much velocity. You can, but you have to have a big move to have a leap move. GME's ripping up a bit. It's up almost 2%. Hey, something filled. What'd I get? Oh, that's just from before. No, what did fill? Oh, cover calls on SI? Is SI going? Ah, yeah, little pop on SI. Okay. I've got 3, 4, 5, 6, 7 cover calls. I can do 2 more.
Space.
Sure. Capgemini is a large professional services company. We're the number 5 company in the world of our kind that provides technology, digital, and engineering services to our clients across a variety of industries. We're fairly unique in that we do have a heavy emphasis on the engineering side, which blends in today's world with technology and digital for particularly certain industries that are heavier industries like manufacturing, life sciences, automotive, high tech itself.
Neil's going back to 150.
Types of industries where we lean in. So 50? We're kind of a roll up your sleeves tech, digital, and engineering company.
Okay. And here in Chicago, based right in that bright, big Nuveen building on the river. I think I can see the sun maybe coming through it. I don't know if you are based in Chicago. Jim, so tell me about what you guys are expecting here over the next quarter as public market traders and investors. Everybody's keyed into an earnings season here after a 6-month rally in tech. Seems like expectations are now a lot higher than they might have been 6 months ago in the middle of a deep bear market. Is the reason for expectations to be high? Are we going to get a big confirmation of strength in this sector?
Well, we will see. I don't have a crystal ball, but our view is a long-term one where we are very clearly in a multi-year cycle where the world is moving in the direction of technology and digital and integration with the engineering types of services that we provide. So that is meaning very good things, and we've been recognized in the market for that over the last several years. Nearer term, I think it's a situation of mixed signals where there are particular sectors, and we discussed on our earnings call, others in our field have discussed as well, the softness in the tech sector, where while it's been a great momentum over the last few years, tech companies have ratcheted back. They've pivoted in 2023 into more of a year of efficiency to balance with aspirations around growth.
Moving up 3.8%.
That's rippled in the pool a little bit into financial services. And the question now is, do those ripples continue to spread or do they start to contract? And I think in my mind, economically in the U.S., there's 2 things I'm watching. One is as everyone is, the actions of the Federal Reserve, and then the second is the confidence within the consumer. What we see in our business has been caution in the last quarter or so, where businesses also are looking at these macro factors and trying to decide. They know they're on multi-year investments, they're pivoting their business, they're pivoting their products, they need to invest and they intend to continue, but it may result in a 1 quarter delay or a shift into a project that maybe was envisioned for this year going to next year. We're actually seeing that retract a bit, which may speak to your signs of green shoots, but it's still too early to tell, and everyone's kind of waiting for that business confidence to continue to build, and there have been some good signs recently, so we'll keep fingers crossed.
Jim, the rates of growth in sales, when I think particularly about the cloud sector now relative to COVID, when there was a mad dash for technology to enable us to work from home.
GFAI moving up.
Are we ever going to be able to
5%.
reach the quarter-over-quarter, year-over-year rates that we got from 2021 to, or from 2020 rather to 2022, basically? Or is that going to be a long-term top in terms of just the rate of growth?
What is this?
Yeah, I never say never, but I think there's a
huge,
reality that we've been on a cloud journey. Our clients have been on a cloud journey for many years. There's still a lot of that journey to take. So we will see. With the growth rates in the last many years have been phenomenal with our cloud partners and in our cloud business. I think the situation we're in now is clients have a fair amount of cloud capacity as a result of that rush and that emphasis. And as clients look to perhaps be more cost focused in 2023, I think it plays into the cloud world as well, where clients say, we've got existing commitments we can work within. Let's not bite any more of the apple off. Let's use what we have. So there's a bit of that dynamic going on as well, but the great majority of the cloud journey still lies ahead of us and will continue to play out over the next 5 to 10 years, and that should mean good things to cloud companies.
Where is the incremental customer coming from right now for
I'm trying to get GTAI.
Cloud companies? I mean, I know there's obviously tons of different services and specific products that cloud offers, but still generally speaking as a segment.
And I have an order for SMX also.
Where is that marginal customer? Because it seems like a lot of the products, like just from a work from home, to kind of use that again as an example of where there was so much growth. I mean, if you're a business operating, how do you not at this point have all the tools that you need? Is it getting harder to find that next customer, or is that not a problem if everybody that was acquired as a customer now is going to pay on a recurring basis? Is that where we're at, where it's not about getting the next person or client, but just wringing out as much money as you can from the ones you got?
No, I think there's plenty of growth to go, and you need to segment the market a bit from the existing market where clients are taking front office, mid office, and back office functions to the cloud. That has been underway for quite a while. The piece
that little divergence is still there on the hourly now
that we refer to as intelligent industry. Some people talk about IT, OT, ET convergence of information technology, operations technology, engineering technology, really coming together where they were separate worlds. And you take
there's
an example of where we're going with energy transition, and you look to the auto manufacturers, you look to the battery manufacturers that are building gigafactories all over the United States and elsewhere in the world. You look to the utilities that need to pivot to be able to support that next electric car. You look to the public service agencies that need to support that ecosystem. And all of them are seeing a convergence in what we refer to as intelligent industry of products that become increasingly software driven every month, blended with engineering, blended with and wrapped with services to support them. That is creating a whole new pool, I think, of consumer for cloud services. And it will far eclipse what we've seen in the information technology world. And that's one reason we're so excited about our business.
Up 3.7.
Jim,
1.5 levels a huge level for it.
Kind of subsectors right now are the strongest. Any particular products, themes you can tell us where you're seeing the most activity?
It's all covered calls in it too, though.
Back to this notion of mixed signals in the market.
But I'm going to try and close them before
a couple of areas of softness. There is still strength in a number of areas where clients are doubling down. I've talked to CEOs this month where
I'd like to get
they're
some more
not only
shares,
continuing their long-term investments, they're doubling down in new programs to drive the transformation in their business. And a few that come to mind, we're working with one of the world's largest conglomerates, where I spoke with the CEO around their offerings around carbon management. Sustainability has grown tremendously in the U.S. We're seeing a dramatic growth rate in 2023, where in this case, this client, which is a industrial products client, is looking to help their customers in their sustainability journey through more effective and innovative carbon management.
It just broke out.
We're working with a major energy company around their sustainability strategy. And so on. So that's one area, but things continue to be quite strong in manufacturing and automotive and life sciences.
18 this month?
In telecom, where clients are fundamentally on a multi-year and potentially decade-long journey to re-architect their business. We're in an age where there are technologies available to us like generative AI, artificial intelligence, machine learning, today. Blockchain,
might be getting one of these days
driving.
again.
There's a long list of technology capabilities that are allowing clients to reimagine their business and re-architect the business given those new realities, which often is very different than the way it may have been architected 20 or 30 years ago. So that long-term investment cycle continues in quite a strong way, despite the fact that there are sector-specific issues in the very near term.
Hey, Jim, maybe a tough question to answer in less than a minute, but got to ask you, AI and blockchain in the same sentence. We heard so much hype about how blockchain was going to change the world. Still don't see it other than crazy speculative assets. Now we hear first, then we heard the metaverse next. Now it's AI. Is this one going to be legit? Is AI going to really change the world? Is this just another hype train?
Yeah, I think yes and yes, right? That we will see a substantive impact from artificial intelligence over the remainder of our lives. I think it's important to recognize that AI has been evolving for many years, though the news cycle has really spiked in the last couple of months. And I think for investors, it's important to understand when you're dealing with companies and looking at opportunities that may be priced in the hype cycle versus priced in the long-term growth trajectory and strategy for that company. But absolutely, artificial intelligence is for real, though it will play out over time. We are seeing clients experiment at this stage, and
my gas is actually bouncing a bit low, thankfully,
because there are unintended consequences of incorporating artificial intelligence into parts of our business that we really don't fully understand and will only understand as we get through that experimentation and deployment cycle. But it's real.
Okay, thanks, Jim. Appreciate the convo. Interesting stuff.
My pleasure.
Good context ahead of earnings. Thank you, Jim Bailey, CEO at Capgemini Americas. Chart Master coming up next.
MCOM.
We're going to take a look at WWE.
Chart Master.
Seagate, Electronic Arts. An interesting mix. Video games, chips, and wrestling. Renita's going to walk us through some analyst notes, and Kevin Green's going to take us on a technical journey.
Do it. Amazon's up 2.5. SMX had a bounce. This thing's so liquid, it's just gonna chop. Volume is. Yeah, you have whole multiple minute gaps there. 22, there's no trades until 27. 27 to 29, 29 to 31. It's sketchy to trade. But that is the advantage of us small traders, is we can trade those more liquid ones without problems. My VWAP's not on. Up. 12.3. Me 1.4. Dude, is this IV just getting lower? 49% for weeklies on GME. We're getting into like AT&T territory. Not really, but this is crazy. I don't know if it should make me want to buy it or just not buy it. Dude, that's crazy. After years of having triple digit IB, where it would rarely drop below triple digits. Literally years, it's been years. Just in the last like month. Well, it was starting to get low here too, in a couple months. Oh, really just like a month. IB just fully gotten sucked out. Ooh, SI up 6. Got more covered calls I'm trying to get filled. 168 is definitely a resistance on here. .7, this thing's rallying. Need to pick up some more shares. Double bottom was a nice buy. So many things I wanted to buy when this was down here though. Should raise the price. Up 15%.
And we can actually check this out and the reason why here. First and foremost, if you look at point A on this 1-year daily chart, we will see a situation where the stock is trading at a gap range at this point in time. That gap is at around the $66 level. So bulls are going to want to see that stock move above that $66 level and hold it in order for another continuation move to the upside here. Point B, we are seeing a wedge pattern forming. One is going to be the primary trend line to the downside from those highs, and another one's the intermediate upward sloping trend line that we have seen for the last several months here. So that's going to actually form this wedge, and actually we're probably 4 or 5 trading sessions away from seeing a significant breakout either to the upside or downside. Last but not least, point C, we're looking at the volume. Volume on down days are actually lighter than on the up days. So that actually does potentially show that bears are starting to lose steam. That does provide a little bit of potentially a movement to the upside here when it comes to the bulls. But obviously having a note like Renita just talked about is not really good if you're trying to make a bull case for the stock.
Yeah, it's interesting because usually for stocks, generally your volume goes up on the down days. So if it's actually a little bit lower here, then maybe it's not exactly the most strong conviction sell-off. A pretty fun chart, though, coming to a point here. Love when that happens. A little upward momentum in the last couple quarters, but the downward trend is still on the year.
It breaks this 168.
So could be fireworks here on the near-term horizon like that. Okay, let's talk something a little bit more positive here. The other two notes are bullish this morning, Renita. You got Electronic Arts and then WWE. So 2 types of entertainment. Let's start with wrestling. Yeah. After the deal, the stock has been doing great. And, I mean, long term, it's been a huge winner, WWE. How are the analysts responding? to the sale, though, and what comes next?
Well,
there's a
Morgan
rejection.
Stanley raised the price target to $120 a share, and this is on the fact that WWE is combining with UFC to create what more appropriate name for this combined company? TKO. So appropriate. The last time, or the first time I should say, we reported on this, they didn't release a name yet, but there it is. Now that would be about a 17% move to the
You guys, you
upside
got
from where
this.
it's trading today. And the firm sees some clear cost
Wriggles, trick one
synergies
up.
between the two companies. Obviously,
I mean, my analysis on it was
front
much
office,
longer term than
will not need to be duplicated.
minutes.
They'll be able to have
but yeah,
some
good to
sort of
hear.
a cost sharing with that,
I'm
or
looking at daily
synergies,
candles.
as this analyst put it. And he says that the revenue
it could be playing out over
opportunities
the course of
are
weeks or
also
months even.
potentially meaningful with this combo of these two companies. Not to mention the marketing, everything else that these two companies do separately.
Up
It's a
15%.
natural. It's a natural progression. It'll be a natural synergy, just as this analyst said. But he sees it as offering an attractive risk reward, given three main things: the live content that both provide, the defensive characteristics of largely contracted revenue growth that's
what is
been
this?
happening over the past couple years, and also
They fighting
the
shorts?
secular
Doing
tailwinds
it?
that are behind sports and entertainment
Class
media
action?
revenue venues, or venues and revenues right now. So this is seen as something that will grow, but he also says that this pending transaction is going to create some value and a pure play sports and entertainment
this is what-
equity when it comes to everything here.
I tried to
Okay.
join.
Pretty encouraging note.
I tried to do this with,
I think,
birds.
That, fans are going to like to hear that. 'Cause
birds,
it sounds like they'll
they
be
had-
able to do even.
they-
they'll have
they've
more money to do
misrepresented
cool
their,
things.
numbers in their
Unfortunately, it's probably
filings.
Going to make some layoffs in the meantime.
But I don't think my position was
efficient
big enough, or I
business.
sustained
As
big enough
traders in the
losses.
stock, how do we approach this now after this
annoying.
combo, Kevin?
I got 30 grand's
What's it
not
going to
enough.
be like?
Yeah, well, when we look at the chart here, it has been amazing to see this move to the upside. The one thing we always just want to keep in mind, you never want to fight against the trend. When we're looking at point A, the stock tends to try to retest recent highs
don't know
before
if it'd
moving
be
higher. So
rallying
if
on
that is
this,
going to be the case, we
though.
could see a support area at around
think so.
$90.80 before another push to the upside. The resistance is going to be $107. That is because of this channel line that we just drew here. We do
Buy
see
shares
that it's
in me, so
also
can rip.
expanding. That does show that continued volatility is going to be priced
Hey,
into the stock.
David.
You can see that in the
What
implied
about it?
volatility when it comes to the
I
options.
closed back out this
Point
morning.
B, volume is declining in the near term here. That may show that the price
So,
right now is potentially
took a
stalling
small
out,
loss on
but
my
that does
purchase
not
from
indicate a
yesterday.
reversal in the stock. So we may need to see some more positive news
And the day before.
coming in order for it to push to the upside here.
back to looking
Last but
for
not
those
least, CCI
even
is
numbers.
actually a very reliable
25
indicator
cents,
when
20
it comes
cents,
to
15
this
cents.
name. It does show
Today is confirming that.
pullbacks in the
25
stock.
cents here.
Right now it is showing overbought, so we
But we're
could
only
see potentially a
30%
pullback, but
away
it does not
from
show
zero.
or provide the degree of the pullback or the severity of that pullback, and it could be very short like we have seen in the past here. So right
Got
now,
into SI
still
literally
on a
at the
bull
top.
trend to the upside.
Right at
If
the
I'm a
resistance.
bear, I would not be trying to short the stock right now, Oliver.
Yeah, this thing is
But,
berserk,
yeah.
man. It's unstoppable.
There's bank earnings coming up.
Okay.
SI's earnings is coming
real
up.
fighting versus fake fighting. Put them
This thing
together
has potential to
and we'll see
force
what
me to
happens
make a big
there.
move back
It's gonna
up.
be fun.
Or
Let's
go
talk
bankrupt.
electronic arts, a different form of entertainment for those of us that don't like to get our hands dirty. Like in the ring. Okay, what do we got here?
SI was
for,
good at
electronic
147,
arts?
at
This
168.
note is really kind of mixed because Barclays is
could sell it.
raising the price target on this stock to $124 a share, but that's
Did I
about a
ever get
3%
GTI?
decline
Did it
from
work?
where it's trading right now, and they maintained an equal
It did.
weight
I got
rating.
GTI.
So
Yay.
this might feel a little bit more like a hold than anything, since this stock today has already surpassed that move. As a matter of fact, it closed out last month already above that move, and the value, it would be just a 3% move to the downside. But this comes ahead of the first quarter results. Now, last quarter, Electronic Arts, it's worth noting that they missed earnings expectations, and revenue was down about 9% for that quarter, as there was a downturn in video gaming. And this analyst feels like, yeah, this is still happening. However, he prefers Take-Two Interactive and Match Group for the interactive and subscription entertainment sector for this earnings season over Electronic Arts. And this stock has had some mixed news lately. Just today, or yesterday I should say, they announced a $10 million investment in a grassroots football program that will start in London, and then last month said that it would lay off about 6% of its workforce, which worked out to be about 800 people, as well as just continue to cut costs. So it's a mixed view of this stock right now, and even a mixed view in this particular analyst note, which is probably why it's not a whole lot higher today than it may be on this type of news.
Might have hit harder 3 months ago when we were, 20 bucks lower.
Yeah.
So this comeback that we've had here, Kevin, take us through it. I mean, it's like quite a U-turn that it made over the last, 2 months, 3 months?
It has been, Oliver, but this stock here, this chart is actually every technician's dream at this point in time. And here's the reason why. Very easy to identify resistance and support areas. If we're looking at a 1-year daily chart here, point A is going to reflect the stair-step resistance level. Resistance level 1, 129.20. Resistance level 2, 132.20. Resistance level 3, 135. Even here. Very easy to be able to identify that. But we do see a situation that does occur in this stock very often. Point B is this channel line. It does tend to trade within this range for about 3 to 4 weeks, and it's about a $4 to $5 range. So we want to keep that in mind. Knowing that, we are potentially setting up for another trading range right now. So expect or potentially expect the stock to trade between, let's say, $124 and $129 before testing that gap resistance. If it does, and we do see the same type of situation here in the past, it could potentially break down to the downside here. Last but not least, point C is going to show volume is actually declining after this rapid expansion over the last 2 months. That could lead to the stock trading in a range once again, which is going to give us a little bit more credence to this range trade that potentially could be happening here in the near term before trying to break out and then trying to reassess if the stock could go higher. Those resistance points are going to be very significant, going to be very hard to be able to break through without good news for the stock as well as some significant volume.
Yeah, that is going to be a fun one. Pretty clear levels to watch here, and lower highs still consistent on the chart, so a battle coming up after this big swing higher. Really good perspective like that. Thank you, Kevin Green, on the charts. Renita Young on the analyst notes.
Ace, thank you, man. I appreciate it.
Here. We got a big rally, but one big earnings sell-off we haven't gotten into yet. Jenny's going to give us an update on Progressive's post-earnings response. This market is looking pretty good today.
Appreciate your donut, man. Looking at BBY flushing through today's sport. Let's rally on GFAI. GFAI is selling off. Not jumping in yet. I didn't bomb on XXII. I gave clear exits if it didn't work, and I committed. So this day I closed out once it broke through that support. I was in it for the bounce, didn't happen, so I closed out, and so far it's been a good close. Pretty much. Not really. Blackberry looks nice. Nice bull flag there on the daily. But you got engulfing, and it's kind of at a resistance, so maybe not. Are tagging Jib Carrier on Tasty Works? It's TW. No, I cut BY this morning. I waited, I gave it a little bit of time from open. Where'd we open? Opened here. I was hoping for a bounce pre-market or after hours, and never got it. So this morning, if we got a, I thought we might get a rip out. This may be a false breakout to the downside. On this candle though, right here, I just closed out. So yeah, we'll see. very, very well could be getting back in at my same cost
I would
basis,
say
or
what
maybe even
happened
higher at
was
some
this
point.
company
But I
reported
just need the
half of
momentum.
what the street had been expecting on an adjusted earnings basis, so that's never what you want to see, and some pretty negative remarks released in the future of this company going forward. Now, the insurer did turn in these worse than expected earnings for their first quarter, but showed a 2023 rise in their combined ratio. So their net loss came in around 26 per share in March, which swang from income we saw at 38 cents per share a year ago. And as you can see, adjusted earnings coming in around 75 cents per share versus estimates of 144 on sales that did slightly exceed, but fell pretty sizably from a year ago. Now, in terms of their net premiums, they wrote about 16 billion. This was up from about 13 billion last year, and their net premiums earned came in around 16.5 billion. That was also up from 11.8 billion last year. Their combined ratio of 99% was slightly higher than the 94.5% reported a year ago. So those metrics rising on a year-over-year basis. But for the month of March, they also highlighted that specifically their ratio rose pretty substantially to over 106. Their total pre-tax net realized
just cruising around the SPY.
was about 17 million compared to the losses of 445 million last year. And in mid-March, we did see pretty negative remarks regarding this earnings report from Wells Fargo, calling for these premiums in this space and that we could see some weakness going forward. And the street community is fairly mixed on this name. Of the 12 analysts covering this name,
I still don't even really see the catalyst on GFAI.
3 are neutral, but 3
Just
lean
like
bearish.
AI?
There is one
Is that the catalyst?
rating, and the average price target also not very
It's strange. I'm not seeing more people talk about it either.
Today's slide, it was actually 142, which did imply some downside. Now with
the only thing I see on here is this reverse split. Again, another candidate for a
the 12-month
rip into the split.
Pretty much at where we're
It's all off
trading.
after it.
Although I will say, to end on a more positive note, this name is still up 7% this year, and over 12 months actually, it looks pretty strong. It's still up 21%. So you have to consider the strength this name did see in the end of 2022, because all things considered, most charts on a yearly basis, frankly, don't look like this. Now, today's move pretty substantial, putting it on pace for its largest percentage decrease since November of 2020. But I do just think you have to consider that this name was outperforming ahead of this report, Oliver.
Okay, pretty big drop here. Definitely standout move to the downside when you miss by a solid half. That usually doesn't do it. Okay, but with more situations that have surprised on the disaster front, insurance is a little bit tricky right now. So it seems like it's starting to weigh on the bottom line numbers. Thanks, Jenny Horn, host of Next Gen Investing. Let's talk some about today's market action. Kevin Hanks and Nick Theodorakis are joining me. Kevin's host of Fast Market, and Nick's our financial risk management director. Things are picking up here a little bit, Kev. Pretty solid little rally in tech. NASDAQ up 1.5.
Well,
almost.
You know, you're getting perilously close now to first quarter earnings season in large cap tech. So I think where you're seeing yields right now, where you're seeing the U.S. dollar, this favors stocks. Now, Oliver, when does remember, we're still trying to figure out from about a week or so ago, what does a weakening economy mean? Is it bad for the market or is it good for the market? That's still kind of out there. I think first quarter earnings are going to really provide a
SMX did move up some.
Trading guidance in how these things look. Remember, a lot of these large cap techs have had unbelievable runs during the first quarter, big percentage moves. So there's the risk there. I think banks that we're going to get tomorrow, they're going to talk about SVB. They're going to talk about everything that happened. They're all beat up as well. So if they show no real damage from SVB, a lot of these bank stocks are pretty beat up. They can jump as well. So there's a lot of catalysts out there. We're going to get probably a weak retail sales number tomorrow. Oliver, looking down 0.4. That's another catalyst. What does it do to the dollar? What does it do to yields, Oliver? Okay. And then there's that whole crude oil thing.
Right now, yields are down. Dollar's down sizably. But we have seen a little bit of resistance throughout the session here, where there's been some bond selling since the morning pop, and dollars kind of stabilized to some extent. But it does kind of look like with the dollar making year-to-date lows, the cat's out of the bag here, Nick. Market's really happy about this disinflation and economic slowdown.
Yeah, VIX down 4% today, right? Cash VIX, so you're below 19 now. I think that's another telltale sign here, guys, that markets are digesting this data pretty well.
Yeah, we'll
it
see.
feels
We'll see
a
if it moves
little,
up.
and Goldilocks is probably an overused and too strong of a term for what I'm about to say, but it feels like a nice fit here with slightly weaker data, but it's not a huge surprise, right? Markets don't want to see analysts getting these numbers totally wrong, and to see jobless claims come in a little bit high, continuing claims come in a little bit low, that kind of fits right in. And then PPI, the headline number is a little bit weaker, but not crazy, right? You're not seeing
BBY
things
is moving
fall
up a
off
little
cliff.
bit.
So I think the Fed story
Up
fits
at a
right into this,
VWAP.
where they can say,
So
we are seeing a drop back in inflation, but it's not quite there
we get
yet.
a
I think
wick
it's all
down here
adding
today
up
on
to
the
what
daily
markets
candle.
are starting to digest is a higher
That'd
for
be pretty
longer,
bullish.
but
That yesterday's level was the
increased
actual
rate
bottom.
environment.
Or, I
And
mean,
I
today,
believe
but
that's what's being priced in. And you look across the
pretty bullish.
the
Is that
sectors
this is
today, we're kind of
flattening.
mixed. We've got
Building
3 or
a
4
level
sectors negative, seven
up to 30
or so
cents or
sectors
so.
positive. Tech leading the way, and it's quiet, right? There aren't sort of these outsized giant moves, even on Progressive. I mean, like pretty bad earnings miss, like Jenny highlighted for us. It's a move, but it's not, it didn't completely fall off the cliff. Think about the 30, 40, 70% moves we were having in
That's
the
high
penny
holding
stock
W up.
just a
That's
few weeks
nice.
ago. It feels like these numbers are in line, and the market's sort of taking
the
a
option
breather
scale
and likes the
from what I
fact
know.
that the narrative the Fed is trying to tell us is sort of playing out.
The drop here in rates next to the dollar seems to confirm that we're going to get something dovish from the Fed. But the evidence in their words from yesterday's minutes still leave
they just
a lot
split
of
the same
doubt
way
in our minds, I think, Kev, that's
with
coming.
with the stock price. So
there were some members that wanted a 50 basis point raise ahead, slightly before the SVB problem came out, which came out right in the middle of that. Then there was discussion of pausing during that. So this Fed meeting, I had the feeling these minutes were going to be substantial, and they were.
Actually, Wish is a good example.
The market sold off. S&P sold off about 27 points from when that news came out till the end of the day. So yeah, the Fed minutes were significant. I think the way this is going to play out with the Fed and earnings and all the, remember that the dollar is going to be the interesting thing. I think you're going to look at a 2-digit handle on the dollar fairly soon, Oliver. If we raise rates on May 2nd and 3rd and then pause, the dollar's going to go lower because Europe, those economies, they still have a long way to go to fight inflation. If we're pausing here, that could mean a dollar into the 2 digits.
Okay. If that happens here and stocks start to ramp up, our VIX at 19, 18 levels, I mean, this is pretty low by the standards of the last couple of years.
Just broke this high.
Oftentimes starts to bounce here. Man, this is going to be really interesting if it breaks through there.
This was the gap
that
down.
would be a huge development. We haven't really made a meaningful low in VIX beyond this level for quite some time.
Move down.
Thanks for the context, guys. Appreciate it. Nick Theodorakis, Kevin Hanks. All right, that's it for MTL. Bulls in control right now. Trading 360 with Nicole Petalides is up next.
I'm confused by these options, actually. I didn't look at them before, but yeah, maybe it screws up the options. There's no open interest on any of these, which seems strange. Maybe it's a different options chain. MSGM up 8.6. This might be a nice trade here. This solid support it built. SMX moved up a little bit more. Yo, it's up 1.5. BBY is over VWAP right now. It happened. Channel seemingly small is actually huge. That's 270% that move there. That range 160 to the top 270 again. Yeah, SMX broke out. There you go. Freaking, it's a liquid though, man. It's kind of sketch. I might buy back in on this breakout. See if it holds.
Travel are the areas that have been the consistent laggard, as leisure, it feels like, has been back for quite some time. At least it definitely feels that way when you're at the airport and the TSA lines are very long once again. But they did say with this solid March profitability, they do expect now a very strong outlook into their June quarter. Encouraging remarks, and when we discussed this stock on the Future Show this morning, it was all positive. So it does feel a little bit like we're seeing a mismatch now with shares lower and now only up about 3% for the year. The sentiment in these airlines, Nicole, has really reversed over the last several weeks.
Yeah, without a doubt.
I don't know, like,
we saw American Airlines, for example,
the most logical thing
lower. You did that story
for me about his tweet. Jeez, this thing is so gappy. Is it would be Bed Bath.
after some, I would say, mixed results.
Maybe it's not
they are
because
down
that's
about
too obvious.
2.75% now on the session. They did post higher sales and earnings
to me, that
for their
from what we
current
know
quarter,
about him and
but
what
we
he's been
saw demand
involved with,
now
that would be
continuing to build. But there was some pieces of this report
my first
that I think were concerning. They did post
conclusion.
a profit of $295 million or 52 cents
maybe he's
per
trolling
share.
or
Compare that with the $269 million or 47 cents per share a year ago. So slightly ahead of forecast, slight year-over-year growth, but nothing extreme. Their sales rose 9% to
I have an order to pick this up. It's just so hard to get in.
And the company highlighted that unit sales were up during the quarter due to growing demand from markets tied to industrial capital goods and commodities, which offset some sluggish demand for their construction supplies. The company also benefited from higher prices, which they implemented last year, and some additional price increases during the recently ended quarter. They said they were able to keep their labor costs in check, which is a huge aspect of this company. So that was also a positive here. But I just think when looking at their results, it wasn't necessarily a grim picture, but it just wasn't enough to excite the street. And the analyst community that covers this name, fairly mixed, not a name that gets a ton of coverage, but not a name that necessarily sees some great upside either. So it just feels like these results weren't enough to wow the street, but definitely disappointing on a day when we see strength now across the board.
Yeah, absolutely. And this is just the beginning of earnings season. We'll get a lot of banks tomorrow, and there's a lot of skepticism about what earnings season will bring. Jenny Horn, thank you so much. Markets correspondent here on the TD Ameritrade Network. All right, let's get some insights, the news shaping the markets. And for that, we welcome in Mike Singleton's with us.
Morning,
Senior
Jonathan.
Analyst Principal, Invictus Research. Thanks for being with us. So the pullback, the drop that we saw
BBBY.
for wholesale prices was the largest drop in nearly 3 years. This
Me,
comes
that
on the
means you're
heels
just
of yesterday's CPI print. What are you thinking? What's
don't
your
want to
takeaway
be about
here?
BBY no matter what. Whereas that does seem like the
I
most
think what
logical
everyone
conclusion.
is focusing on with the PPI
So you
print
have
is the big decline
something
in
else
the
to
year-over-year
offer.
numbers, right? Headline dropping considerably versus February, core coming in a little bit more firm. And I think that probably the takeaway that this is dovish on the margins and disinflationary surprise is right. But as Bob Farrell once said, every dark cloud, or excuse me, every silver lining has a dark cloud. So if you look at the PPI numbers over the last 3 months and annualize it, both headline and core are running at pretty close to 3%, and they don't really show any signs of decelerating. And so that's a very important short-term gauge of momentum that we think the Fed will probably consider as a hawkish policy input into the reaction function.
Right, understood. So at this point now,
oh, I know, it's got a nice big gap until there. Oh, saying all yesterday, 274 really, 277.
So
Invictus doesn't mean it's not going to just
that our
have
outlook
huge
on interest rates
pullbacks.
and monetary policy is neutral, and
But
I
at
know
this
that's
point, it
a
seems
really
like it's probably
boring
breaking
answer.
out.
But on the one hand, you've got economic conditions which seem to favor
man. This thing is
higher for longer and more hikes from the Fed, right? You've got services inflation still running about 6% in annualized terms, and you've gotten over the last few months sort of a resurgence in inflation in durable goods and non-durable goods, and obviously the goods economy.
From what we know that he's been invested and been involved with
the last since June
specifically
of 2022.
mentions stuff about BBBY that we know he's done with them and no other company.
Into 6% plus services inflation.
So yeah, you could. Other guesses are just that they're just
you think the
guesses.
Fed would be very likely to continue.
Same as with BBY, but from what we know, that's the most logical. Unless if you know of another company that has done those things you mentioned in the tweet, which maybe I don't know. I don't know. That's the only one I know of is Bed Bath. People out here buying rubber plates. So Blockbuster, Toys R Us, Sears. Yeah, sure. You could say anything. Say it's Nordstrom. Say it's Tupperware. Say it's, but that's just not as logical. Do you understand how that works? Because he's specifically done the things mentioned in that tweet and been involved with Bed Bath & Beyond. I mean, he could be talking about Apple, like. Okay, Thinkorswim, dead. Come on here. Hold on. It killed Thinkorswim. Like he's a rat. BNED, huh? That's Doctor in. Snail actually looks pretty nice. I think we traded this one IPO also. One's a liquid as well. Fury's starting to fill that gap. A long ways to go. Yeah, I mean, it's a pretty simple process of elimination and come to BBBY on what he's not talking about based on what he said. There's actually a post on Reddit even. I didn't share it because it seemed pretty obvious, but I guess some people need that. So I could probably try and find it again. Go through everything point by point, and it rules out Toys R Us, Sears, all those ones you mentioned. But we don't know. I'm just trying to use logic, and most logically it seems like it's Bed Bath & Beyond. But that's also why I think it might not be, because maybe that's too obvious. But I wouldn't think it's not that, because it doesn't seem like that based on the wording and what we know. Alright, I got back into SMX. I got filled. Getting filled. Holy smokes, it's the liquid and slow. Reddit DD should have lost all credit a long time ago. It's like over 60% of bonds and institutions credit their trades from Reddit. Like they originate their trades from there. Reddit's just people, so as stupid as people are on Reddit are as stupid as people are on the internet. As stupid as you are, as stupid as I am, so it's just people talking. There it is. Got them all filled. Do you do Coke in the mornings? I'd like a little Coke with breakfast. He's young and emotionally driven in the stock market. It's a great recipe for losing money quickly and with stress.
It just seems like that there's a lot of demand for the sector. We've seen the ETFs like SOX,
SIBAX 55,
SMH really, hover and hold above key levels as well. And collectively, when the market is bullish, we've seen the semis be the leaders. Now, this entire bull run in 2023 has been manufactured by pretty much the top 10 of the NASDAQ, top 10 of the S&P 500 to a degree. It's all the big tech companies. But semis are also one of the biggest gainers in terms of tech sectors this year. And so AMD has been a quality name. I don't think NVIDIA is going to pull back to a range that I want to buy anytime soon, but AMD is not too far. I'd like it back towards this 89, 88 level. This is where old highs were. It just seems like when stocks are extremely bullish, they tend to find a lot of demand at previous resistance. The 50 SMA is right underneath as well, near 87.50. So that could be that slight deflection zone. I'd probably stop out if we get underneath 84.50, but for me, I'm targeting this bounce as high as possible. I think the run back up to right around $100 is proper, but I really think that this could really start working towards that 105 to 109 price. It wouldn't surprise me if a name like AMD is pushing on 52-week highs like the rest of the other major tech names that are starting to happen.
But you want to get in on a pullback. Get it. I understand. Ben, your thoughts when you take a look at AMD?
Well, if you pull out the fine-tooth comb, Nicole, you're actually seeing a little bit of a pullback here right now. Let me show you exactly what I'm talking about in terms of, I understand the bearishness and bullishness we're seeing from Charles associated with shares of AMD, because it has been on the hourly, 4-hour actually, this is, since the middle of October, trending higher from 54 all the way up to this $100 level. I went ahead and identified some of these areas of consolidation that have formed along the way up. And if you're talking about a bullish attempt to participate in this trend of the upside, well, you're really looking to, either buy a breakout above the range that we've been forming around this 96 level, or you're looking to buy a lower extreme test. So to that point, again, we just tested that lower extreme. We held above key levels around 82. Also those highs that we saw end of January, beginning of February, again, around that 90 level. So let's move away from the candles here on the 4-hour, because I want to point out, as we look at a bigger picture, we're even seeing the potential to have reversed a bit of a longer-term trend of the downside, going all the way back to the end of 2021, beginning of 2022. Stock was trading up around 164. We bottomed out here in October of last year around 50, 60, and look what's happened since. We've started to take out some key areas that were established on the way down. As I look at this, I'm thinking, all right, 92 was that key areas. We're forming the area around 60 here, the October, November lows, and then look at that move up that we just pointed out, the trend on the 4-hour time frame, possibly invalidating the working assumption that we're trending lower. But I want to show you another look, and this is not what Charles wants to see. This is what the bears want to see, right? The kind of fat crayon, put that fine-tooth comb away, and look at this on sort of a longer-term, bigger trend that's been playing out since the beginning of 2022. And in that instance, we're really just kind of pivoting around this $81 level. I want to show you where things stand real quick in terms of the 50, because Charles mentioned that it is down around 87. It's that blue line here. We're holding above the 200-day moving average. So yeah, there's some bullish sentiment here, but look at this RSI down in the lower third of this screen. You can see that it's not really participating to the same extent. And in fact, it looks like we could start to take out the lows that we saw back in February for RSI. So again, I'm not 100% on the longer term, but I like Charles' approach if you're talking about that 4-hour more intermediate time frame, because there's a lot of strength there.
And as you show the RSI going down and some of the feeling that's a little bit worrisome, Charles, I have to ask you, because there are a lot of people who are worried about retesting lows, 10% pullbacks. Are you worried about that?
Oh, of course, absolutely. You know, the whole thesis is that 2022 is still very fresh in our mind, but you know, data is starting to point out that the macro environment is starting to change, and the markets are now anticipating rate cuts for this year. So, you know, ultimately, all of this is getting to a point where we're getting back to where we came from if the economy is starting to shape up the way that the Fed has anticipated. The market has been driven by Fed policy. This is only going to help Fed policy, you know, either at least pause hikes and then maybe consider lowering hikes later on down the road. Now, the Fed has been pretty adamant about not looking to cut rates at any point in 2023. But of course, things could change. You know, CPI data continues to descend. PPI data keeps coming in softer. And then, of course, we see the jobless claims coming in a little bit higher. These are all the things, these are all the conditions that the Fed was looking for to consider a shift in monetary policy. And generally speaking, while the macroeconomic outlook may not be extremely bullish, that is a strong positive overall for the broad markets, especially in you know, not only just large tech, but growth. So, you know, as we see the NASDAQ really leading the way in terms of recovery this year, you know, we're starting to see a lot of signs, a lot of demand really funnel back into these names. And quite honestly, a name like AMD, even on this pullback, should be highly attractive in the near term, especially when we compare it to where it was just a year and a half ago. There's still great value. There's still great opportunity. And again, when I look at demand, when I look where retail and institutions are looking to buy, I've seen the semis be the clear-cut leaders. They've outperformed, you know, the growth cloud names, the cybersecurity names. This is where a lot of money is being you know, shoveled into, and that's really why I really like AMD to the upside here in the near term.
All right, thank you for that, because you said it's somewhat of the same concept that you have for Apple, which has run up about $40 from the lows of 124, right? It's getting close to 164 right now today. But you have the same sort of mindset for Apple, right?
Yeah, you know, it just seems like the bigger tech names, even with negative news, and Apple does have some negative news, although they had a very strong positive news report today. You know, it just seems like they don't really.
Actually, a little food here, guys. Thanks for your thumbs up.
Again,
got 26 of them.
Last year,
the drops
were a lot more volatile, a lot more sustained.
Pull another company.
You know, we'd see 15% pullbacks and think that's enough, and they just slide for another 10, maybe even another 15% before they bounce. It's a lot different. We're not facing the same type of.
I don't know how RC selling BBY is a rug pull anyways.
This is definitely a more risk-on environment. Again, we've seen the Qs be the leaders. Everybody's been referencing the SPY.
If you think he's out to help make you wealthy, then everything he does is going to be
and most notably the top 5 in the Qs.
Bad, because he's not. He's out to make himself.
Number 1 in both the SPY and in the QQQ. Microsoft is another player as well. Google is another one. And these
if you
are
can
three
look at
names that have been
things
really
from other people's
performing
perspective,
very nicely over the
help a
last
lot.
month. Apple's been performing strongly since October as well. And this is a name that, again, it just gets to a reference range. It's
Are you
above
playing
these
GFAI?
key levels. It's above the 50-day simple moving average. If it holds that 57,
I know it's crazy. It's such big moves, like intraday.
The 50 SMA is right around.
That's what I was looking at yesterday. I was like, I could have just even VWAP bought it.
If it slides underneath
here.
Right around 153.24.
It was a 45% move, 50% move after that. They just had like a pretty tight stop loss to drop below VWAP.
But they're going to put a lot of pressure.
So even here intraday,
for 170.
Yeah, you've got 13%
from the bottom to the top.
Back to VWAP. That's
very
great.
bullish in a very
I don't know if you missed anything. I sold back out of BBBY.
You know, the news report yesterday was a very tempered response to CPI. Today has been a much better response to PPI, and this is just for me a kind of
bought back into SMX
how this market is
on the
performing.
high.
And of course, we're seeing a
sold
lot
cover
of
calls in SI.
Yes, absolutely. So he's looking for the bounce back then. After we've gotten in our
These are pretty
inflation
liquid though, you gotta
reports,
be careful.
thinking there's some upside here. Tell us your thoughts, Ben.
Absolutely. Charles mentioned the strength we've seen over the last month. Nicole, you talked about the move we've seen since the 124, 125 area. That's where we began the year. And I think that's where we can begin this discussion of a stock that's been trending to the upside in a very well-defined fashion and leading the broader market in many ways.
Lows again.
You can go all the way back to, again, beginning of the year. We were down around 125. Nicole, that's that point you mentioned, all the way up to 167. You said we're trading around 163, just off that high. Taking a look here, you can see this is what Charles is focused on, that well-defined migration of value to the upside. Again, 126, 132, 136, just a staircase type pattern. And notice how retracements have been limited. They haven't taken out key areas that were established on the way up. So this is about as textbook as it gets in terms of that bottom left to top right type depiction, as I often reference. And then stepping away from the hourly candles, I'm going to show you how it wasn't just over the last year that this stock has done well. Nicole, we're going back 6 years to 2017 here, and you can see the well-defined trend environment to the upside. I'm noticing the 155 area, and I think that was key. Look at how, again, we're talking 2020 into 2022, we were kind of trading around 120 here. We broke out to the upside up to the 180, 185 area, and then we were kind of teetering around 155. Just recently taking out the lows from last spring into the beginning of this year, rejecting that lower level up into and through the middle of this range, opens up a door for a retest of that upper extreme. Let me show you where things stand in terms of the 50, the 200-day moving average, just so we can see the strength in this move. To Charles's point, over the last month, a retest of the 200-day held. That's going to provide that bounce. We got it. Definitely set on that high. You can see in the left third of your screen up there from last summer, last fall, up around 176. Before we saw that move down to 124. The bulls have some momentum here, to say the least, Nicole.
Yeah, and I love this chart. It's showing us the highs and the lows there, and going all the way back to 2017, so giving us some of that much-needed perspective. Okay, last but not least, Charles, let's take a look at Marathon Digital. Why are you looking at Marathon Digital, which today is around 1145?
Hey, SI is number one on the cover call screener. That's exactly what I'm doing.
Yeah, so
that is neat.
There was a lot of indecision, right? Short
Just want to do more of them.
Being very short term, knocking the stock back at a pretty consistent range, buyers buying it back up. And then all of a sudden we had a day where Mara kind of just jumped above resistance. Part of that resistance was the 200 simple moving average on the daily chart
annual return on that.
And they immediately held it, and
annualized is 1,400%.
You just saw a high level of volume and demand, and it really started shooting up. Now it started kind of holding a bit yesterday, but today it's now breaking free. It's almost up to that 1225 price range, and that's where the second leg starts coming in. Because if we see that break above that 1225, I think the possibility of seeing somewhere between $15, $16 is absolutely in the picture. This is really a sympathy play on Bitcoin, right? Bitcoin has been actually far more bullish than the overall stock market as well.
Yeah, I was looking at NC
some people could play coin and
gap up
STR
pre-market
as well, but I do like the miners here. Hash rate is acceptable, which is really important for the miners. And more importantly, one of the things that I actually account for stocks like this that have that quick upside potential is having a higher short flow.
Oh, bar chart's
Marathon, Riot, these two stocks have very high short flows.
Tesla.
And when we see that squeeze start taking place, that starts to become a propellant for these stocks. And that's why I really like this breakout opportunity. And again, I like the potential to 15. I think this could happen by next week.
Wow, I mean, that's a pretty big call. Ben, your thoughts? I mean, when he's talking about a breakout here, but a quick one too, Ben?
I mean, come on, you guys had me with breakout of consolidation, right? That's my language. That's my vocabulary. It's catchy, isn't it, Charles? And much like the other two names we looked at, a well-defined trend to the upside. We're talking about beginning of January. We were trading around $3. Look at this, all the way up to 11. Speaking of that breakout of range that we're in right now, it's a vertical phase. So along the way up here, you can see these areas of consolidation that formed. I took out the fat crayon on this one, drew this area around 8, but let's go back to the beginning of January, because look at this. You get a big breakout to the upside, sideways consolidation, another one. I mean, this is wash, rinse, repeat here multiple times over and over again. You can see that pattern playing out, and then again, 10, and I question mark this. Do we see a new area of value form at a higher level? That's what the bulls want to see to solidify this working assumption that we're still forming areas of value at higher and higher levels. That staircase type pattern playing playing out. Let's move away from the hourly time frame, taking a look at the daily. You're going to see now somewhat counter trend, right? So I support that narrative, the strength we've seen on the more intermediate time frame, but going all the way back to December of 2021, you're going to see a different story playing out. Now, into a pivotal area, much like we talked about Apple at 155, look where MARA is, right at 11. If we get some momentum, we saw what, again, Apple's capable of ultimately, and the strength we've seen through that level. We'll see if that continues. I wanted to point out where MARA is in terms of, look at this, a nice lift through the 50, through the 200-day moving average. So again, much like the other two names, the intraday time frame supportive of this bullish narrative here right now. The bigger picture, again, there's a little bit of argument to be had in terms of where we are longer term, but let's keep an eye on what Charles is talking about in terms of the momentum we've seen recently and potential to follow through in some of these names.
All right, thank you for that, Ben Lichtenstein and Charles Murray, Prosper Trading Academy. What a great
GFAI.
big three today. Really appreciate you
It just
both
sounds
coming
like a
on
volatile
today
ticker.
and taking a look at some three big names in those trades. Coming up next, we're going to spotlight Bitcoin. Look at this rally that we've seen, what it means for investors. Next on Trading 360.
Yeah, I was seeing their news about their solar stuff. GME. A little nervous with this pullback. Yeah, see if it finds support on this moving average again, like it did here. Or you could just cut out now. Miss G. H. Birds is down 10%. Oh, I got a partial fill today. At 4:30. Okay. Oh, I got a perfect exit on EVTL. Little double top. Just saw it come in. This divergence now in the hourly. See how far it pulls back. GNS down 5%. Yeah, I'm glad I didn't buy into that thing yesterday. Still looking for an order down here. HKD down 4. F-Brand's down 3. feel like that's psychological?
Like Bitcoin. It's been a lot of fun watching Bitcoin of late, right? It's moving to the new highs we haven't seen since last June. Let's bring in an expert, Yassine El-Mandra's with us, blockchain and crypto asset analyst at ARK Invest. Thank you for being with us. So I can tell you what I hear around here, but I wanted to know your thoughts on the recent rally as we approach 31,000.
Absolutely. I think this is an ultimate testament to the power of Bitcoin in the midst of macro uncertainty, regulatory uncertainty, and it's up 90% since the bottom in late November. I think people are starting to realize that Bitcoin's value proposition of openness, global, decentralized, permissionless network is particularly compelling, especially in the face of a regional bank crisis like we've seen.
Basically it's the love of Bitcoin and its value. And I don't disagree. I think there's a lot of people who think there's a lot of value in Bitcoin. I mean, we saw it closer to 70,000 at one point, and there's people who've come on the network who think it's going to 100,000. What can drive this? I mean, it's my understanding that some of the catalysts could just be what we saw in the banking crisis and people looking to Bitcoin, the fact that it didn't have the volatility during some of the recent headlines and crisis we had, even during FTX, pulled back but didn't tank. It has shown, and every day that it stays strong is a good day, right?
That's right. I think people are increasingly looking for a resilient, anti-fragile flight to safety. And I think Bitcoin being decentralized in the sense that no one really controls this network and allows for you to transfer and store value in a permissionless, censorship-resistant way is an extremely compelling use case when we see the macro backdrop that we've seen in the last few months. I think a lot of people don't understand just how active the Bitcoin network is. In 2022, $33 trillion of value was settled at the Bitcoin base layer. When you compare that to something like Visa, that's 3 times the annual volume that Visa settles. When you think about the active addresses, the transaction counts, the number of users that are using the network on a daily basis, the future of Bitcoin is bright, but it's here, and we're seeing it play out in real time.
And before I get to trading ideas and things like that, I mean, just some other things that have come up and that are on my radar. There's definitely talk of a short squeeze or some short covering going on. Some other things that could be catalysts, and that would be the halving, which happens next year, once every 4 years in April of 2024. And like stock splits, sometimes that can give a boost to the numbers. And also Bitcoin ordinals that are directly on the Bitcoin network for something like NFTs. Are all of these ideas that you are talking about?
Absolutely. The Bitcoin halving is consistent with Bitcoin, performing over 4-year market cycles, and a stark reminder of the scarcity that Bitcoin provides and being capped at 21 million. We're starting to see emergent use cases, as you referenced, like Bitcoin ordinals, where now you're able to inscribe data types within Satoshis, which is the base denomination of Bitcoin. 100 million Satoshis consists of 1 Bitcoin. I think that, we recently had a conversation with some crypto powerhouses across the entire industry. And one of the things that they pointed out was the regulatory uncertainty in the US, Bitcoin being able to thrive in this regulatory uncertainty is indication that the US needs to provide a little bit more regulatory clarity if it's going to embrace this innovation. And if it isn't, it will move offshore. I think that Bitcoin being up in the last few weeks in the way that it has, despite this regulatory uncertainty, is again a reminder of its global nature. And those who aren't willing to embrace it are effectively going to be left out.
Yeah, and you noted within your presentation, you noted some that did make a commitment. You said those that don't, they'll be left out. But institutions that did commit to Bitcoin during a somewhat bear market, right? BlackRock, Bank of New York Mellon, Eaglebrook, and Fidelity, just to name a few. That being said, what do you tell investors here? I mean, I think a lot of people love to watch crypto and love to be invested in it. What are some ways to get their feet wet, either in a big way or small way? But you also noted that a lot of these Bitcoin investors are long-term investors.
I think you hit the nail on the head there. It's important to emphasize the long-term nature of this bet. You see fluctuations on a day-to-day basis, extreme volatility, up and down. But over longer time horizons, Bitcoin has been the best performing asset in the last decade. It is a very compelling portfolio diversifier. And we estimate that, a sensible allocation to these larger institutional investors can range between 2.5% to 6.5%, 2.5% if you want to minimize volatility, and 6.5% if you want to maximize risk-adjusted returns. And that translates to above $1 million per Bitcoin over the next 10 years. So those who thought that they maybe missed the boat are now seeing Bitcoin surviving in this uncertainty and chaos. And institutions who employ a long-term time horizon, I'm sure will stand to benefit over the next decade.
I want you to say it. The price of one Bitcoin could exceed. Go ahead. You could say the sentence. I want to hear the sentence.
It could exceed $1 million. It sounds pretty crazy, in its value, but $1 million is really a 20-fold increase from here. If you look at where Bitcoin has started, really as just a digital collectible with no market price, and now is trading at $30,000 after the catastrophe that we saw happen in 2022. I don't think it's unreasonable to think that over the next decade, as the digital economy starts to become the focal point of the entire economy, to have this monetary asset that facilitates economic activity. You think about Bitcoin now at sub $1 trillion market cap. You think about gold at around $12 trillion market cap. There's no reason why Bitcoin can't at the very least reach parity with gold, being in our estimate a much better version of gold, especially in this digital world.
Yassine Al-Mandra, it was great to speak with you about this. Really appreciate it. From ARK Invest, saying the price of one Bitcoin could exceed $1 million in the next decade. But a lot of great conversations and thoughts in this discussion that we've had. Thank you, Yassine. Appreciate it. Coming up next, the disruptors. George Sills will be standing by. He's taking a look at First Solar.
Going crazy, man.
First Solar downgrade this morning. He'll break down the report.
I don't think it's from this news, but. Geez, MU's rallying. Cut out of that one. Yep. Neil has a head and shoulders. See? Head, shoulder, shoulder. So you're getting a bearish MACD crossover. See if it closes that way or if it pops back up to green. This is not a cup and handle. You've got 2 years on it. Doesn't matter if it has a cup and handle. You're looking at like monthly time frame. There's no reason to look at a short-term cup and handle if you have 2-year leaps. No, you've got plenty of time. Turn your computer off and go outside. New high there, up 22%. That would be very strange to me if this is the catalyst. BNGO up 8.3. I haven't seen this one rally in a long time. That chart actually looks pretty bullish also. Has just come down. %, on up. SMX, new high there. Up almost 22%.
But on a forward basis, they're looking at some stable organic growth in terms of sales and earnings. In other words, we're not going to necessarily see the same huge situational increase in price that we saw in the last 52 weeks. So they are still constructive. They still increased their price target from 190 to 230, but they actually see the aspects of the price movement moderating because of the huge move it's already made, at least in the last year, but also year to date.
Yeah, and that's the question. Well, you know, how much of the good news is priced in? How much of the efforts that have been put forth are priced in? How would you go about trading it, particularly after the run-up we've seen?
Yeah, so there's a way to trade this. Looking at the chart, Nicole, at least in the last year, there's a gap in the chart on February 28th. That was based upon the last earnings. So you could see essentially a gap and backfill of that particular gap. It's around 180, but at the same time, the stock is still in an uptrend. So there's a situation where it can continue to move up from here. So we can play the both ways. In other words, a continuation pattern to the upside or a pullback to that 180 area by selling an iron condor combo, but it's skewed more to the upside. So what we'll do is for May, we'll sell a 230, 240 call spread. So that gives us quite a bit of flexibility, about $30 or so to the upside, but also to the downside, we'll sell the 180, 170 put spread. So altogether, it's a four-legged trade where we'll earn a $3.50 credit relative to the $6.50 risk. So you're essentially selling $10 wide spreads on either side of the price action of the chart. But at the same time, again, you're earning $3.50 with risking $6.50. So your return on risk is relatively high. It's close to 50%. And the probability of the stock staying within the short strike range of 230 and 180, which is a $50 wide range, is still over 60%. So we're basically looking for moderating price action. We don't necessarily care which direction the stock goes as long as it's below 230 or above at 180. Between now and expiration, the third week of May, you got to keep that premium as it erodes in value over that time.
All right. Thank you for that. George Sillis, love having you on the show and giving us these disruptors each day. Thank you, George. Coming up next, it's time for our 360 round, and we're looking at today's PPI data. We'll break down those numbers on the wholesale level and find out what the Fed may be thinking. Trading 360, we'll be right back.
Thanks, guys, for your likes. Got 26 of them. SMX popped up there. So liquid, dude. %. SPY's coming down. UI still hanging out. Below VWAP now. 25.97. I sold? No, still holding. Hold till 2774. Like I was saying yesterday, but yesterday it looked like we're getting a double top here with an RSI divergence. When I went to sell, I caused this huge drop, which sketched me out. I didn't have that many shares. And it held up nice in extended hours and everything, so. Stop it, Rick. Go outside. What are you gonna do today? I bought a Turca, GTAI, SMX today. Turca. That one that rallied the other day. Chart looks pretty good. Not crazy about it, but I like it. Getting started. GTAI is in that range. So might have a couple more days of consolidation like it did here, but hoping for a move back up to the top of this channel. Bigger spreads.
I think that the Fed has probably done as much as it really needs to do. I think from a sort of a maintaining
the
their
range on GTAI is actually really nice.
Standpoint, they might do another quarter-point hike in May.
I don't know how SMX is actually, because
I think
doesn't look big. That's 86% from the bottom of that
what happens
channel to the top.
In terms of the effects of the rate hikes they've already put into place.
Large.
I think the inflation trend is certainly
SMX
going in the right direction.
I
think a lot of the more sensitive and more timely indicators are saying that the inflation pressure has really been moderating over the last 6 to 8 months. And then a lot of what you're seeing now is either the skew from the shelter cost component of the CPI or the data from 9 to 12 months ago before the Fed had even really started raising rates and when oil prices were much more of an issue. So I think a lot of the pressures are really being reduced, and it's more a question of how the Fed wants to frame the narrative in terms of their ability to deal with it rather than the actual need to raise rates.
Yeah. And John, I know
SMX just popped up to $2 there.
And you said, look, just because the CPI pulled back and was cooler
Rick
doesn't mean it's time
selling
to
his
celebrate
Neo and buying into SMX.
Is the Fed stuck in a tough spot? Is 25 basis points in May most likely, and is that enough?
the Fed is in a tough spot. I think that's the one thing that everyone can agree on, that there are these competing forces right now. I think there's two questions out there. There's what we think the Fed should do, and then there's what we think the Fed will do. And I guess on the latter, I would say, what the Fed is really looking at right now is core PCE, excluding goods, really looking at that core services PCE inflation. And on that front, I just don't think we've seen the progress that the Fed needs to see to feel comfortable. It doesn't mean that it won't happen soon, but if you look at the banking crisis that we had and how that translated to the macro picture, it really has a fairly limited impact thus far. Again, it's not to say that tighter credit conditions won't impact things down the road, but if you just take the perspective of the Fed's dual mandate, it's not being successful right now on that very key price stability mandate. And so it's difficult to see sort of from a administrative or an institutional perspective how it can say that it's already time to move on.
And the concern is, look, you mentioned the bank. Any other bank goes down or has some trouble, that could really affect what the Fed does. And recession is getting thrown around too. Final quick thought here, Sam.
Yeah, I think you're right that the recession comments in the FOMC meeting minutes suggest that they're starting to think more about the potential weakness of the economy later this year, early next year. And I think some of the recent comments from the Fed governors, like Daly and Goolsbee recently, have been a lot more mixed about the outlook and probably laying the groundwork
I'm not going to buy more here now.
Pause in the next couple of months, if not sooner. So I think that
look
the
for
narrative
consolidating
starting to
more.
shift a bit.
Here was a consolidating.
How fast they will be willing to do that, and how much the data will shift
Ripped
over
up,
the next month or two
consolidated.
before the next meeting.
So this is where I'd be buying.
And while there's concerns about consumer confidence
It's
slipping
so
a little
liquid, it's
bit, we'll
kind of
get
hard to read,
retail
but
sales tomorrow.
ripped up,
I know you're both
consolidated.
watching that. Sam and John, thank you both for being with us
So we're
today.
in the rip-up
Really
phase right
appreciate
now.
it. Sam Burns, Mill Street Research, and John Lear, Morning Consult. Thank you. That's going to do it for us here on Trading 360. I'm Nicole Petalides. Every day, 11 a.m. and 2 p.m. right here.
I know it's true.
The New York Stock Exchange.
Sketchy to short it though. With these,
Market is next.
it seemed. But yeah, 7% a day. That ain't bad. Let's see if I can short on this account. Oh, I can. And short on my Thinkorswim. Didn't know if I had permission for that. Open up a short on Tesla. I am short Tesla, yes. SMX up to 2150. I just did it as a test, but I'm not gonna day trade, so I'll hold it. I might average into it. I already thought about shorting Tesla, instead of doing options on it. We suck again. Greenish gray Ace Ventura. Same? You're short Tesla shares? The thing I don't think I like about shorting is the buying power effect. Because it looks like, yeah, since it is a short position, it takes more buying power effect. So, I shorted at 185.16, but the buying power effect is 259. That's a margin position, of course. So, that's kind of a bummer, but it makes sense. You mean with the bounce there, bounce puts? Yeah. You already have puts on it? I might get puts too. But this account, I'm shares and shorting options. Data farm. SMX 26, 22.774. I think it's a pretty big void vacuum till that level. Really, that was just, yeah, nothing really traded in there. It just sucked down there. So let's go. Oh, you just opened them. Wow. Wow, wee, wow. Oh, you did wee, wow, wee, whoa. Whoa, wee, wee, whoa. Volume's picking up on this thing. That is neat. %30 now on it. Good luck, us. I don't want to close my GME call. Let's see. I don't know.
You know, last month it was in the 70s, low 70s.
Yeah.
I mean, it got down to below $65 a barrel for a couple days there. So.
Oh, I didn't do a recap video yesterday, so no one on the video side heard about
our strategic
SMX.
petroleum reserve when
Just
it
you guys
was
on
down
stream.
there, right?
Well, they said they were going to, and then they didn't.
I'm sure we did, because that
I
would
did
be
the whole video and then I went to stop the
responsible thing to
recording
do.
and it
Now
hadn't
that it's
started.
83,
You know, when
Oh
Saudi
my
and
gosh.
OPEC Plus cut another million
All my
barrels,
enthusiasm and charisma
they
had just been
said that
poured
might have
out.
been
I
in
couldn't redo
response
it.
to the fact that, hey, that the U.S. was taking
Couldn't do
their
it
time
twice.
on actually
Ridiculous.
stating that they were going to refill SPR
At
when it got
Bath, a
below
little
70,
pop-up
which
to
they
fill
had
up.
previously
Buy,
stated. So
breaking out to the
maybe a little
upside.
politicking going on here. But one of the stocks that's
411.40
not
or
doing well today,
so.
Kevin,
On the
and
next
that's in the
little level
travel
here.
space, and Delta Airlines, which is down about 1.5% on the day. It seemed like the report missed on top and bottom lines, but let's bring in Jenny Horn, markets correspondent here on the network. We're seeing some weakness. I mean, they gave us a good outlook. I mean, you know, the CEO, he's pretty upbeat about moving forward into 2023, Jenny.
Yeah, Tom, my narrative on this stock has completely changed throughout the session because this morning, actually, pre-market, we were seeing shares higher. It was like, okay, the market's just brushing off the top and bottom line miss, but I guess all things that matter are outlook. So now with shares lower, it seems like that outlook wasn't able to hold on the session. Although we are seeing other airlines lower, but I was looking, United is higher, so it's not even collective airline weakness, really. We're just seeing down 1% now in Delta after they did post a wider than previously estimated loss for the first 3 months of the year, but forecasted revenue growth and profit for the second quarter.
What's
that
your
was
date
ahead
and
of
strikeout on Tesla? Oh. Thinkorswim's not doing too hot today. Second crash. Not during Gen A. 616, 170. Nice, it's not bad. Good amount of time. Pretty nice strike. Looking for a gap fill there. 146. That's gotta be pretty expensive.
It's getting pushed back, and now Delta shares are this year. It feels like it was just a month or two ago that we were talking about the outperformance of the airline and travel space. That sentiment has completely given back here as we are seeing all of the airlines collectively erase their year-to-date gains.
Jenny, I'm going to put this a way that our viewers can understand it. Delta is the Lululemon of airlines. They're the Michael Jordan of airlines. So if they can't get it right,
I don't know why my aspect ratio is weird.
Is down,
I've noticed
how
that.
are any of these other names going to expect to rally? I mean, shouldn't we look at the rest? You know, like Folio's data confirmed that Delta is the leader in all parts of quality, a well-run company. Ed Bastian, their CEO, is an extremely positive delivery mechanism for news to the market, and yet this stock doesn't rally. How does this industry not get this right, Jenny?
I think it all has to do, Kevin, with the lead up into earnings. So we saw American shares fall as much as like 8% yesterday on some preliminary first quarter guidance. So
wow.
I think the fact that we already got that massive move lower in American then prices it more attractively.
Over $1,000.
I think Delta has been looked at as some.
Well, you got time. You're pretty close to money,
so that maybe is then I'd say
should be a good trade.
For them reporting
that way you
their
can
earnings
take
first.
profits at 30% or so easier.
They've already said they'll be back to pre-pandemic levels.
Value.
I guess will they be able to actually achieve that when they report
Notional value.
in several weeks? We'll see. But I think a lot of this has to do with the sort of the strategy. American did the same exact thing last quarter.
Jenny, how did I not get it right, Jenny?
Forward-looking
numbers. SMX finally breaking out.
After their earnings, so it's
almost
up 35%
like
too
now.
much of an expectation actually ends up hurting you here.
2240.
Although it is somewhat of a mystery to me why
2774. I'm looking
Delta
for is
still
the first
hold
resistance
lower with now the rest of the airlines starting to rise. So yeah, I completely agree. This is the Lululemon of airlines, Kevin. I feel like this is one of the airlines that actually people have more positive than negative things to say on social media,
more than
which
usual.
is pretty much unheard of.
I mean, he started seeing the red flags.
Southwest and American, the what? Athleta of airlines.
Bearish end time stuff.
How do we
6
compare
months ago.
I'm sorry, I'm on a tangent here.
Athleisure to airlines. I don't get that.
They're saying I should buy more SI.
But, you know, the CEO did say that he doesn't see any anxiety as far as bookings goes going into the end of 2023 too. So that's a positive for this stock. But taking that on the chin here today. Thanks to Jenny Horn, markets correspondent here on the network, bringing us the info on Delta post earnings. But now let's bring in Nathan Peterson, director of derivatives analysis at the Schwab Center for Financial Research. Nate, you know, positive inflation
we saw this
data,
thing start
it's
to
trending down. I thought one of the key points in that PPI today was a core rate lowest that we've seen since early 2021, April of 2021. So it's going in the right direction. Markets are up on that news, but it doesn't seem like over the last couple days that the markets have rebounded like a lot of people expected with weakening inflation data.
Yeah, I think that's a good point, Tom. I mean, if you look at the 10-year, I mean, it's basically flat right now. I thought that, you know, the PPI report, you know, it's good news on the inflation front. Maybe the bond market and equities just have that already priced into their expectations, and they're basically saying, hey, inflation is going to continue to trend lower. We're not going to get to 2% this year, but we can kind of put that topic on the back burner. At least that seems based on the probabilities. Basically didn't move. We're at 69% on the Bloomberg probability for a 25 basis point hike, which it would suggest that we're still going to get one.
2250 was the top there on SMX.
3.4% on the 10-year. I think that's a support level there. But I think it's really going to come down now, of course, to earnings. And, you know, guys, I still think that the economy is digesting a lot of those rate hikes. So even if inflation is off the table, let's say we get 25 basis, I don't think it's going to make that big of a difference. Whether we get 25 or whether we don't, and the Fed stays pat, I think we still need to give time for to assess the economy, to see if those rate hikes are actually doing anything. Earnings season will get some clarity. Markets seem fairly buoyant. Maybe optimistic heading into earnings, -6% year over year. Maybe the estimates came down a little bit too much, which could set us up for a relief rally. But we'll have to wait and see as we get those earnings reports. But, the last thing I'll say, guys, is that, valuation is kind of full. I feel like that there might be a lid on the S&P 500 around that 4,200 level. And the reason is if you start to get back above there, then you're going to move up to a 20 forward multiple in terms of a PE, and I think that's tough given the uncertainty that's still out there at this point.
Yeah, those are a 20 PE in the S&P. That's the frightening levels right there. And anything over an 18, really.
Yeah. I don't have any reason to believe. Holy smokes.
And typically, Kevin, we've seen some of this in some uncertain times.
This was from all that hype, wasn't it?
Level.
It has to have been.
It can go lower.
Yeah, it can go lower, right. As we're, it seems like the uncertainty in the markets, people are sitting on their hands right now. We're not really powerful as far as the breadth of the moves.
Is this from that tweet and people speculating?
Down a little bit. Maybe that's due to spring break season.
And here's something that can't be ignored. The fact that we're getting close to the end
I don't think it's related.
of raising interest rates, and maybe Europe
was the catalyst for this dropping
near the end of their interest rates.
Yeah, they came out.
You're going to have a two-digit dollar very soon. It's going to break below 100.
Well, it's near 12-month lows today.
Right, but I mean, it's going to continue to work lower, especially if we come out and say
near-term
we're raising
liquidity
25 basis
pressure.
points and pausing. That's going to put pressure on the U.S. dollar, which will favor stocks.
Yeah, and Nathan, it's favoring the tech sector today with the NASDAQ leading to the upside. I mean, you got most of the FANG Plus names up 1.5% to 3% today. Is that,
class action
as that
deadline?
base grows, we know how big some of these stocks are, Apple, Microsoft.
Upper Brands takes action to improve capital structure and liquidity position.
Indices at this point, but they're helping drive the valuation. I'm not going to call it a bubble, but the expansion, I guess, of valuations at this point.
Yeah, and those big mega cap techs certainly are important to the market, but they.
I don't know what he's talking about.
Been, the darling so far in 2023.
The most obvious thing is BBBY.
It might be setting up for the potential disappointment.
Anything other than that would be
Taiwan Semi in terms of their revenue in March.
Just a complete shot in the dark.
Took a hit there,
but could be. There's probably at least 10 or 15 stocks that.
Look, tech, they're going after it because we know when rates are going down,
maybe fall into that criteria that you mentioned.
Tech's a good place because it's not
the only one
financials. There seems to be more stability and
majority of it is BBY.
Safety there in terms
and one that we know he has a
potential
history with.
Earnings to hang in there. But, we'll have to wait. I think the last week of April is going to be a big one, of course, when we get those mega cap tech names that come in. But Taiwan Semi, to see that that March quarter dropped off,
up 24%.
Does that suggest that guidance, even from the likes of an Apple, is going to be tough to come by as we get there? So we'll have to wait and see.
Yeah, I mean, it's not only that big cap tech. They're all flush with cash, right? Free cash flow is pretty solid. They've got a good base. They've got good ratings as far as their debt, if they have any debt. But then you look at, rallies, Kevin, in like AMD, in the NVIDIA rally, the snapback rally.
People are picking bottoms in semiconductors and tech in general.
Well, it's not a bottom anymore. I mean, they're
still going, man. 25%.
That's, I think, the concern that I'm bringing up, and Nathan kind of hammered home here, is the fact that valuations getting a little bit rich here. But you can't fight this trend right
now. Why'd you get in
because it doesn't seem
like the comments on that
the Fed meeting's still 3 weeks away.
May 2nd and 3rd.
Yeah, I mean, so we have to rely on earnings, and I think the number tomorrow, retail sales ahead of J.P. Morgan,
expected to be down.
I'm agreeing on my Tesla short.
I mean, that's going to be a big telltale sign because we've heard that commentary from some of the Fed members. Demand is softening as far as spending goes. Maybe not on the services side, but definitely in goods.
I think Thomas Barkin made a really clear point when he said, we're starting to see softening, but it's not hitting inflation yet. It's the overall economy is softening, but it's not really showing up in the inflation numbers. Now, today's was different, but I'm telling you, this energy component.
Because you were on it since 4 a.m. doesn't mean it was from that tweet.
Has got me concerned about, inflation that.
And you saying that you're on it since 4 makes me think that it probably was from that tweet.
Yeah, and it's the demand side.
Because you saw
of it, right?
last night. You woke up pre-market.
And when you look at the earnings season
that
unofficially kicks off tomorrow
morning, it's bad. I'm just wondering.
Financials. Will that set the tone, Nathan? I guess is my question because of the turmoil that we had in mid-March with a lot
I want to get more than just one
companies at this point, or is it going to be maybe overlooked as a one-off coming out of that?
Yeah, that's a good point.
I feel like 70 we bought the price you bought the first time.
Given what happened, of course, with SVB
what are we talking about here?
So the regionals may be a little bit more important, looking at deposit flows, net interest margins, of course, looking for those big banks.
You had no idea about the tweet, really?
Get hit and
that's right. Okay, so you were the one talking about the other day.
Since the beginning of
Why did you
March,
buy it at
so
4 a.m.
did
pre-market?
They take out enough? And so I think we're gonna, learn a lot.
That's right.
From
No,
that.
I remember you were talking about it after it dropped here.
You're going to be looking to some of more of the
I don't know
cyclicals and
why you were talking about it, but
discretionary.
I remember.
In terms of those earnings reports, I feel like you bring up a good point about the retail sales. We need the consumer to hang in there. We know what they've been doing with credit card debt. We know that they've been depleting those savings, and they're expected to go below pre-pandemic levels by Q3 of this year.
Looking for a dip buy on something?
I think the emphasis is going to be more around financials are in their own bucket for this quarter. I think
moving up further.
To your point. And then I think more of the cyclicals and
almost
looking
new
at
high
the
in the
overall
day.
health of the economy
Yes.
is going to be
I am
important.
short
That does include
Tesla.
technology.
Short one share.
Yeah, and definitely watch those
Up
conference
23
calls
cents on it.
from the banking executives.
Because they're off the guide.
Yeah.
I mean, if the overall economy is looking for a recession second half of the year, what are the CEOs looking
that's
for?
the first short I've ever opened.
Stuff. Right. All right. We got to take a quick break here, guys. When we come back, though, we're going to look at the biggest bank, and that's JP Morgan Chase, as investors turn their focus to those bank earnings. Earnings season kicking off unofficially tomorrow. Fast Markets coming right back.
Oh, you've just been scalp trading it. I see. What was your, when you mentioned it the first time, I never caught your reasoning on why you wanted to buy it. I wanted to go long. SPY testing that 411 level now. High of the day. Back to the high of, not quite. Almost the high of yesterday. Bed Bath up through VWAP a little bit. I'm trying to think what I would need to see on BBBY to buy back in. And I'm not sure if they could do really anything today that would get me to. I suppose an engulfing candle to the upside I would. So that would be a close over 322. Would be a big day. But anything other than that, I think I'm gonna need some indicator. It is kind of interesting that TUP did get all its volatility today, though, after it was just tweeted about. That person that started talking about TUP, those people maybe just had longs on it already. Like they maybe weren't thinking it had anything to do with Ryan going. I don't see why TUP were over anything else. Rick, oh my gosh, dude. You need to turn your computer off and literally go outside. Go lay in the grass. Consider your life and consider the money you have. Think about how you'd feel if you didn't have it anymore. The next coming down. Thanks for buying in, Rick. Got a nice flush. I got filled. I picked up some more SMX. 80%. I mean, I saw the drop the other day. This one, yeah. What about it? Gap down. Oh, I do. I'm stoked I got a fill there. Sometimes the illiquidity helps. There's a fill at 2. There's mine, I think. 12.19.45. Yeah, that's me right there. TRF, eh? Oh, so you're just playing the overreaction? Well, good. Good on you. Artificial intelligence. Well, GME's had a pretty good rally there. 2% up. Wee woo. HD is now green. Green's up 1% now. I saw this thing start. It's only up 4. I mean, but pretty nice rally there on run. I don't know if that was news. Price target cut. That. Buy at the high of the day. Breaking out a little bit. Up 27%. Yes. Why did you have eyes on it at all? On top. Go along with Tesla right there. Tesla's getting to move up with the SPY. Yeah, SPY's pulling it up. SMX back to $2. We've got VWAP at 195.5. Nice when volume comes in on this thing, because otherwise it's super liquid. Opens up the spreads. Missed out on FedEx when it had its crash. But you were looking at TUP before the crash, you said. But Bath might get a big rally up by end of day. Thinking it might be its future. Today is looking a lot kind of like this day. Our Cody day around VWAP. And that big rally end of day. By a little bit of breakout, yeah. 411.49 high of the day. Just wicked above yesterday's level. 412. Got kind of a little level up there. At the top of those wicks. Up 0.81%. Oh, kind of coming down there. MU up 1.5. Big reversal on this thing. He's been making huge candles lately. Self is bullish or not still. GME up 2%. SMX holding above VWAP. Up 27%. You're just watching it prior because RSI levels like here. The big move on it. Well, it's volume the last few days, though. Borrow fees back up a little bit on SMX. Way fewer shares. Check TUP out, see what we got. The TUP does not look like it's heavily shorted for some. Kind of interesting. Unless they're maybe using the options. Wow, look at the liquidity on those options. Dude, this has got to be from that RC tweet. 13,000 volume of those calls. We might be setting up for some kind of big move. Means you don't have weeklies, but maybe that's good. Gonna be hard to string together monthlies though for a gamma squeeze. But yeah, the borrow fee is 0.4% on Tupperware. Just doesn't look like a. But maybe that's good. It's good. It's not heavily shorted. Better candidate. No, I don't think it's all from RC's tweet. I don't know how much traction that TUP got, but the volume on that 2-strike is a lot. But maybe it's all organic. Bye, climbing up here. AI moving up. Do it. Do it. Do it. SMX looking nice, consolidating at this high level, around $2. UOPS right up here also. SPY, double doji, might be finding a top here. Yesterday, one of its highs.
2022 last year, first time it's done that. It's growing at about just under 8% year over year, which is actually the slowest growth rate since 2009. So e-commerce is slowing down. The actual dollars data shows that. Our data shows that as well. So that's a little bit of a concern. However, this is the winner in the group. Shopify is doing a fantastic job. If you look at download and usage data, it's up about 6% year over year, which is that green line right there. That's the 90-day moving average of purchase intent. And you can see it's basically at all-time highs. While the stock is off quite a bit. I mean, you talked about how it's up since the beginning of the year, and it is. But when you look at
down on my
where it
Tesla
was,
short,
a year ago, a year and a half ago, it's really down compared to where it was. So purchase intent being so high and the stock price being fairly low relative to a couple of years ago is pretty good divergence opportunity. So we're seeing a lot of people really happy with this, and they're increasing the number of usage in visitors and usage downloads at really high rates. So we're very happy about that. When you compare them to some of their, I'll use the word competitors, but it's tough. It's tough to compare to their competitors. You do a scatter plot on that. They're exactly where you want to be, top right. This is a company
Office reopened
very
people
well.
Tupperware.
Etsy, I think, would be one of the, maybe closer ones. Amazon. You can make an argument for each one of these having a competitor.
Sounds like they're maybe in trouble financially, though.
Fairly unique, and they are doing really well. They've
but
got
trade's working out, so that's cool.
Customer happiness up there near 85%, and they're the only ones growing of this group. Where, as I said, e-commerce has been slowing down. The growth rate has been slowing down quite a bit. So we love where they're at now. And, they were upgraded today by JMP Securities, who is not a client of ours, but if they were, they would have been on with us when we upgraded them back in January. So, we've been bullish on this since 38. We put out an alert to our clients. Looks really strong, everything moving forward. Again, got some macro going against them with the slowdown in e-commerce, but they're the leader. They're the one that is really enabling people to get on and monetize their content.
I did it just as a test on this account, see if I could short.
Very quickly and easily. It's just the best app out there. So
yeah, I'm not gonna close it today. I'll probably add to it.
How they do over the next few months.
At some point.
Landon, I'm going to keep my question pretty simple because it's kind of a theme here, and that
maybe today I'll add. I'm not sure.
Shopify has a lot of entrepreneurs, a lot of small
companies. Yeah, today's probably a good day to add. Really,
which frankly,
I just see red into the 9 here. Bearish MACD. Yesterday we did make that engulfing candle. As far as price action, it's not all that clear. We're seeing a lower high, I guess, here.
Allbirds and Netflix, and now they
haven't really seen a lower low. It's the same wedge.
Brought in this streetwear company, Supreme, and Mars, another company. Is it crucial
below the 50 moving average
for the future of this company
I think it could come down.
To keep getting the big, more stable, more dependable companies on their platform rather than the small little entrepreneurs in terms of overall risk?
Well, I don't think that the small, I'm going to be biased here. I don't think that the small entrepreneurs are at risk because it's a long tail play.
Greenish,
I mean,
gray,
if you get
Ace Ventura.
1,000 small entrepreneurs,
Well done,
maybe half of them are going to fail. but you have so many that it's going to be a fairly predictable number over time.
Your stop loss, that's good. Yeah, I mean, it's like momentum stopped. Got such crazy momentum, might as well.
Maybe one day it'll be one of the large ones, but
could consolidate here for
the
who knows how
long
long.
tail definitely works for them. But of course, if you're going
SMX
after
up 30%,
maximum number of revenue coming in through your program, you're going to want to have the big clients, and the fact that they're able to land those, I think, really says a lot about
their
their
website.
ability as a company to increase their revenue.
Yeah.
So I don't think it's risky to rely on the small entrepreneurs because there's just so many. I mean, if they had all their eggs in one or two small baskets, then yeah, that'd be concerning. But it's a long tail play where all of that, there's thousands and thousands that are going to add up to the equivalent of a few large companies. But of course, getting those big ones in the door is
grab another
big for the
short on
company.
Tesla.
And
looks like it's making a little double top there on the 5 minute.
Is very bullish.
Yeah, and they do rely on the consumer, right? We've got retail sales coming out tomorrow, so we've seen spending pull back on goods, not maybe on services so much. So when you look at this and you look at the trend that you guys are seeing on that 90-day average on that one chart you had, I mean, the divergence between the stock price and some of your data continues to expand at this point, even though we've seen that rally this month. Do you see that, propelling them moving forward because they are that unique product in the e-commerce space?
Sure, and I'm glad that we got this chart up right now because you can kind of see what happened here, right? They were on a nice run and things were starting to grow, and then COVID hit and they expanded tremendously. Everybody wanted to start an online business, and this was the easiest way to do it.
Yeah,
so
Lockheed Martin. I mean, they're super high right now, though. They're like all-time highs, aren't they?
The stock reacted a little late to that, and then it kind of
got the defensive
little,
trade,
I guess, ahead of itself, and it started anticipating that steep uptrend could continue on forever.
Down
and
here
when
a bit.
it didn't, investors came back down to earth and said, you know what, maybe this isn't just a moonshot right away. This is going to take some slow growth. But what we're seeing now is that the uptrend has continued. The pre-COVID uptrend has continued, and it's just at a higher level now, and it's a little bit more expanded, right? It's been multiplied. So I would say that if you look back on this, compare it to the stock price compared to where it was pre-COVID, and you're thinking, well, this is a deal, in my opinion. I mean, this stock price is very undervalued. In fact, when we put out a report on it in January, it was part of our undervalued, oversold bucket of stocks. And you might not think a company like this that's a little bit more, tech play, a little bit, I guess, riskier compared to some of the other companies that you might call oversold would fit in that category, but it absolutely does. I do think this
is
at
least not
even today when it's at 46. We went
I would wait for these to
about
hit crazy lows.
And I think the upgrade today had a price target of 65. But based on where the trajectory is, if the economy turns positive at all, I think this one could really run. It could double over the next couple of years. If the economy stays a little bit more stagnant, then I think a 50%, 75% move from here over the next 12 to 18 months is very reasonable.
Yeah, so still positive. And remember, I mean, this stock was trading over $176 a share.
I think SMAX will keep going up.
2021. So even though the stock has moved up this
year,
I think you make a good point that the data is still trending higher and it's still relatively low to historical values. All right, Landon, great stuff, great data as always. Appreciate it.
Thanks, guys.
That's Landon Swan, co-founder of Lightfolio,
Stop looking at me, Swan.
Shopify. And Kevin, I kind of wanted to hit on this ahead of the retail sales post the upgrade out of JMP. They put a $65 price target on it. It's about $19 above where it is. How do you want to look at this from an example trade perspective?
Zella's defensive
on May 4th.
The Navy?
Yeah. So we still got a couple of weeks to go. So what I did, every now and then we should get back to our fundamentals and look at options trading 101 and the first trade you should make in terms of options, and that is the covered call. And if you think there's good news on Shopify. It's down significantly off its high. If you think that this is a stock worth owning, the first idea you should have is possibly a covered call. Buy the stock, look at, I went the April 28th, which is the week ahead of the earnings event. The expected move there on April 28th is about $4. Right, I got that lined up. Yeah, about $4. And all I did, Tom, was go in and buy the stock and sell the 50 call on April 28th. I do that for about $45.63 is the debit on this. And all I'm doing, Tom, is looking for the middle. Either it goes to 50 or that 50 call goes to 0. And then when it gets there, you can extend duration into that earnings event where the premium will be higher the volatility will be higher than it is because of the event, and you can sell into that or not, or you can go into it with just the stock.
I saw a little
do
double
either
top.
one. Either way, you can either unwind
price
it
action's
up around
showing more of a
50
consolidating.
or cover that short call before the earnings event. Extend duration if you want to, or just keep the stock.
Yeah,
let's break this down. Looking on a little 5-minute time frame and trying to scalp it, then yeah, but this is not a good one to scalp. It's too illiquid.
And Kevin mentioned this is one of those first strategies that a lot of options traders learn when they get into this. It might not be right for everybody, but it is definitely one of the building blocks of the option strategy world. Buy right. Cover call strategy. For every 100 shares of stock you buy, you sell one of the April 28th weeklies that expire in 15 days. The 50 strike call. Pay roughly about $45.65 for that. So there's going to be risk. $4,565.
Level of bets on which stock price he's talking about.
To zero, right?
I've only seen
on that.
Top is the one I've seen rallying today.
Is
the other one's rallying.
Price that you paid $45.65 on that. Anything below there. And this is, Kevin, real quick here on this one.
I don't know if it's from his tweet or not,
strategy, but it does not pay a dividend.
Exactly.
And typically we don't
SMX,
look at stocks that way. Maybe we look at a cash security.
Well, you don't have to.
32%.
You can, but here's the thing that I like about this. It's not a very expensive stock.
Right.
Oh, VBX,
and
yeah.
The premiums in the calls are pretty high. Like
Futures?
15 days from now, Tom, the premium, this is about 64 cents. So every 2 weeks, think about that, 26 times. You could do if the average is around 60 cents times 26, if you do it every 2 weeks, it's a big number that you're taking off the price of the stock.
CX, yeah, 200%.
Right. Without a dividend,
bias,
you could do a diagonal. You could do a
Jim. All right, I thought you were Rick.
In the money, 70 delta, longer dated option, absolutely. But the first thing I do is one of the options.
Yeah, we looked at this earlier today. Actually, someone mentioned
for
it.
an expensive
oh
stock,
no, it's up a
and
lot.
it cuts into it. This is only $45.
Why is it up?
So it's not as price intrusive as some of the other big ones might be if you're trading a Lululemon or some of these big name stocks. So yes, can you do that with a diagonal in this name?
Sounds like you want to get out.
Yeah, capital differential.
Yep.
Not trying to swing trade this.
Other strategies based on a lower.
I was looking on a daily
time
frame, so more of a swing
stock, but. As Kevin mentioned, as you get closer to April 28th expiration, you do have that ability to roll or adjust that short.
You're green, and that's all you wanted, little green. Take it.
As you move forward, if the market's open, liquidity is provided.
Hey,
so
Daddy,
good look at that type of strategy. Kind of fits in well.
What if he just tweets 3 Bs, 1 Y?
And like Folio's data there on the covered call strategy.
Could be multi-day,
let's take a quick break. When we come back, we're going to talk another financial, and that's Citigroup.
I guess just look for
earnings ahead of tomorrow's open.
Look for a little pullback.
Right back.
See where it kind of finds support. Let's see. I had a little one here. It'll probably make it to VWAP. He picks him up VWAP if it holds. Kind of a tight stop if it breaks below it. Pretty tight. 182, $2.02 on SMX. Come on, baby, another break. Let's do it. Hold it for days yet to minimize trading. I'm up on my Tesla short. Yay! Yeah, I don't know if I'm gonna like shorting shares that much. It's just a lot of capital. I only have 6. So let's see. It could turn into a pretty big whoa, actually that would be big. We came back down to these lows. No, it wouldn't be that big. Big hugs, hey. Hey, yay, yay, yay. Come on, SMX, you can do it. You can do it! Go! GTII up 3. This thing to get wild too. M2M, I don't, this is almost just an experiment for me. I just don't know why I'm holding this still. must fight short illegal traders. New high there on SMX, 2280, 2774. We're hitting it. It's 40%. That is neat. Could have added more, I suppose.
Today, 40 points off the close that we saw yesterday to 41.26. Yesterday going out around 40.86, and you've got the Nasdaq back above 13K today after a brief visit below. We saw some selling yesterday in reaction to those Fed minutes, but I do want to point out here to help kind of put this into perspective, not one of the four majors has taken out the highs from yesterday yet, so kind of contained and somewhat
it's really liquid though, be careful.
Albeit after today's PPI number coming in lower than expected, but we did see the revised number from last month's a bit higher than prior levels, so that got revised up a little bit. But with this, Tom, we're seeing
you guys are all liking it now.
Dollar, which is coming off.
The highs.
We're seeing rates which have
like yesterday
held below 3.5 and the TMX around 3.42, and you've got VIX, which is coming off, all very much conducive of the move up today.
I'm not set to stop on this, no way.
This is a continuation.
Way too sketchy. It'll just book down to it.
Really, this year in some ways.
I sold yesterday. It made this huge move to VWAP.
VIX definitely coming off near 2-month lows here. But I think one of the keys here, Ben, for equities, especially the Nasdaq, is that dollar touching near 12-month 12-month lows here.
Yeah, I mentioned it has come off, and I think that partially a reflection of what we've seen in terms of indices rallying back, because the dollar was kind of a safe haven amidst some of the concerns that we saw. But obviously with, we've got bank crisis concerns.
This was another one of the speculated ones.
Demand, loan expectations, economic growth thoughts in terms of what we can expect. If you remember, Tom, back in mid-March, we were up around 105.
Maybe for some of it.
You pointed out the lows that we saw.
I don't go all in on anything. That's stupid.
Here to 100.84. That really speaks to the shift we've seen in terms of Fed expectations, right? The move we've seen in rates. Today, within 2 ticks of that February low that we saw,
look at it?
Right into those year low prints here. Also have seen other currencies on the move, right? You got the ECB, which is remaining a little bit more hawkish in terms of their approach towards driving inflation lower, and possibly has a little bit more work to do. And then again, as I mentioned, indices to the upside contributing to that downside momentum in the US dollar. Last thing I want to point out, with the dollar lower,
I wasn't going to look at it after I bought it.
To 83.50, and gold's benefited as well to near 2050, and
I bought it yesterday, and then I actually ended up selling it
in August of 2020.
Because of the little double top and RSI divergence, but it held up. So
all right, thanks to Ben
I didn't need to sell it. Today I bought back in. I guess I don't need to look at it.
For us. But now let's bring in George Tillis, a senior markets correspondent here. George, we're talking Citigroup.
Yeah.
And I look at this bank as, maybe the forgotten one out of the big money center banks. It seems like you hear a lot of the headlines with JP Morgan, even Wells Fargo, with some of the issues they've had.
I did get a little spooked yesterday. I saw some profits.
Bank of America,
I want to take it.
Just kind of behind the hidden.
I don't have a problem with it though. It wasn't because it was dropping heavy that I got out. It was at a high, so I know it wasn't from
a little bit of a different
fear. It was from the TA, really.
I'll explain in a sec, but one of the things I will say is just price-wise.
I only missed out on like 4% though, honestly. Today it's up 34%, so not a big deal.
Money center banks like Bank of America and of course Wells Fargo, which are very low
profit hour. So, you know what it is? It's sub-up hour.
The estimates for EPS
check the subscribe button. If it's red, you failed me.
That's expected to be down about 17% year over year, and that's probably because of the fact that the cost of funding is going up as net interest margins are compressed. Loan loss provisions are probably going to increase, which is going to create a situation where they have to sequester more money for economic losses that are potential.
It was like I literally caused this wick down here, and I sold 165.
Sales are expected to be
I bought back in today once it was like up here, like 4%.
Compared to last year.
I've added to it. I added on this dip to VWAP.
Both of these figures, both earnings and sales for the quarter, are actually higher.
If you're subscribed or not. Sure, get a very honest polling there.
Last quarter, the company reported $1.10 in earnings, but also about an $18 billion quarter in terms of total revenues. So you're looking at about a 51% increase quarter over quarter in earnings, but also
I want to do polls too.
In sales. With the bank itself, some would say trading at a significant discount to their respective competitors like JP Morgan. If you just look at the price to tangible book value, it's less than one times that. Whereas if you look at JP Morgan, it's trading about 1.3 times, and even Bank of America at 1.2 times tangible book value. So it is trading at a discount, but at the same time, you have to think about Citigroup as one of these businesses that really is less loan-centric than the others, like, of course, Wells Fargo and Bank of America. And I think that's
it's just illiquid, and so it's
those
two
respective banks.
TA might
but at the same
get a
time,
little
their
skewed on
Treasury
it.
and Trade Solutions division is a massive global division, and it's a huge revenue driver for Citigroup, and they're basically a major clearinghouse for international.
Looks like Wheels Up is kind of hit a top.
Bonds. So there's been a lot of volatility in the bond market that may actually
SMX maybe also, I don't know.
But I think if you look at the discount that it's trading at relative to its
day traded
respective
though.
larger
I tried to
peers,
day trade it yesterday, so
for quite some
I'll just leave it.
because it is more susceptible to institutional trading versus loans. Now that may not necessarily be a bad thing considering the interest rate and liquidity environment we're in. And maybe again, that's why they've actually outperformed as a business, or their stock has, compared to those other peers that I mentioned.
George, this company is still in the middle of their restructuring what they're doing, and you're right, they're different from some of the other banks. They get plus 80% of their revenue from institutional
I do want to sell this today, though.
And what they do there. So they run a little bit of a different business than some of the bigger money center banks like JP Morgan and Wells Fargo, correct?
Correct, and that's the thing. That's why I think the stock has been outperforming is they're less balance sheet constrained relative to the other money center banks, which have larger loan portfolios. So loan portfolios are typically more stable, more predictable, and that, again, gives a little bit more peace of mind to investors in companies like Bank of America or Wells Fargo over
40K?
time.
I thought you already put 5K into it. Now you're putting 40K in?
If you look at some of the others that I mentioned, like Wells or Bank of
I
America,
just don't
they're
believe
down
you,
double
Rick.
digits this year, whereas Citigroup is actually higher by about 3% year to date. So it's a little bit more of a nimble situation for Citigroup. I think the institutional service division, which is very large, is not necessarily as stable as a loan portfolio, but that's not the case in this environment. I think now
he's not being
that institutional
honest with
trade
us.
division, especially that Treasury trade division, is actually pretty promising in this environment. So I can't say what will happen on earnings, but I can see why the stock has been outperforming its other larger peers.
Flushing below VY.
All right, great stuff, George. Thanks for breaking down
Citigroup
ahead of those earnings for us. Kev, kind of wanted to turn to this one because the option market's only pricing in about a plus or minus $1.60 move in the share, so relatively muted.
Crap.
So I looked at a strategy here that takes advantage of maybe an outsized move. So we looked at Nathan earlier in the show on JP Morgan. He was looking at a 1 standard deviation move that he wants the stock to either go down or up based on that double calendar strategy. So I looked at something where what happens if Citigroup moves more than 1 standard deviation? What if it goes 2 or 3 standard deviation moves? And we've seen historically some moves like that in a lot of stocks. So I looked at buying an iron condor here, Kevin. I went out to the April 21st monthly series, so giving yourself 8 days. So it's not a true earnings play because you're giving yourself an extra week in this trade. And I just looked at buying a put vertical and then buying a call vertical, both out of the money on this one. So let's break this down. Buying the April 48 call, selling the 51 strike call, and then against that on the put side,
SMX
buying
pulling
the
back a little bit. So there's a little divergence there on the 5 minute.
42.5 strike put.
Price
You're
action
paying
still
roughly
looks pretty good.
$1.05 debit
Like the
for
high
a
VWAP.
$3 wide iron condor, Kevin. So you're risking just that what you pay, $105 per spread. But the reward's pretty good, but you do need a move.
Yeah, exactly right. I mean, they expect to move about $1.60. So line that up with your strikes, and you know the move that you need there. The good news is, if you get that big move and you've given yourself 8 days, not 1, for that big move to happen, this is a chance for almost a triple on this name. So if you can get a move, higher than 49 or lower than 44.5, you've got a pretty good chance to do okay on this trade.
Yeah, and the max profitability, you see there from the risk profile that we have up, that max profitability comes in below 42.5 and above 51. So you need a pretty outsized big move in this stock. Yeah, to max out on that profitability. The key thing I think with this type of strategy is when you're buying iron condors is time decay works against you, but then also you want the stock to move. You do not want it to be between 45.5 and $48 on this one moving forward. So I think that's key, but a good look at buying an iron condor going into earnings, expecting a big move over the next 8 days. All right, that's going to do it for Kevin and I today here on Fast Market. But stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up right after this.
Many traders may be willing
GLS. Technoglass? What the heck is this? It's nice smooth rally there. BBBY with the move up 12%. PDF of 5th edition? No, I have no idea. We'll make a digital version. That's book you read? Nice. Well, make a digital version. Is that a short I can buy? I mean, is that a short you can buy? Shorts you don't buy, you sell. New high there on SPY. Yeah, I'm thinking new lows on Tesla. I don't think that 100 is gonna hold. I like to go long on it. I think in the 60s. That pre-COVID high, I think it was. But we'll see what the momentum does at that point. Is that what you were wondering? Can you short AMC? Yeah, you have to check with your brokerage. Need margin. GFAI going again. Popping up through VWAP. Up 7. %. Yeah, you can chase this one. This thing moves pretty quick. Pretty good on capital allocation at this point. Being in the market. Final wave's hard to predict. GFAI 10%, 10.5. %. 11.5. Yeah, I mean, these intraday moves are crazy. 21% from this low to that high. See what it does at this 35 top ad yesterday. Guess that was this morning. Yeah, this morning. 500K in SMX. Do it. Eyes coming down here. Pretty big rejection on there. What stocks I have that would be affected right now? BBBY is ripping. Yeah, I forgot to mention this earlier. 15% now on it. I think I want some exposure to this thing. I don't know the catalyst, but there must be something going on with it. This thing can go crazy. Such a high though. There's all the ones you guys compared BY to. You guys in BBBY know what's going on? SMX coming down a bit here. Hey, Mohammed. FIE, Faraday Future Intelligence, Electric. 15%. Yeah, it's at a nice support. Pretty good. Looks like it's bouncing on that support. It's nice. Rallying, consolidating, breaking out of that next range. Yeah, that one looks good. Put that on my watch list. I'll wait on BBBYs. Wait for a pullback. I don't want to get some shares on it though. Options are pretty liquid actually. Still kind of going. SMX consolidating nicely up here. GFAI. Faraday Future Intelligent Electric. SPY new high. New high in the day. Just breaking out there a bit. GFAI rejecting that 35 level. Bebla. Bebla. Oh yeah. Little poppy there, up to 3.5.
A clear path to improving their sales levels as the brand moves into a peak volume period. TD Cowen today also did reiterate its outperform rating with a
no, I had some cash card puts on Rivian
price target, which I almost have to like check to make sure I'm reading this correctly.
But I actually closed them.
Chipotle stock is relatively speaking a relatively high price tag,
price
but all things
considered,
this name has just been an area of resiliency in a time when we hear that consumers are pulling back on their spending. They're dining more at home to save money. Doesn't look like that from Chipotle's chart, at least
it did have nice RSI divergence.
No doubt, and I can tell you my time away from Chipotle, the quality of the food has maintained itself. It's still always a delight when you get a chance to have this for a meal, but what really impressed me, and I didn't notice this maybe over the years, is just how really nice the experience is to use the Chipotle app. Sweet Green is another different restaurant brand within this kind of fast convenience
Medical scene in Minnesota, wonderful, lots of
space
great
that has done a good
there.
job in their app as well, be it for pickup, be it for delivery. Just really enjoyed the experience. And I think anytime that you can leave a place, Starbucks has really leaned into this over the years, with ease, efficiency, and comfort
Thursday,
with their app, you're more likely to go again. I think Chipotle has done that very well. I'm going to say I'll go for Chipotle.
Up here.
Okay, and did you know that Chipotle is actually suing Sweet Green for using the word Chipotle chicken in one of their bowls, which I thought was the most bizarre thing because I feel like Chipotle is a pretty commonly used term, but an interesting story between Sweet Green now battling it out with Chipotle, and I also typically associate the two, at least because the ones by me are right across the street from each other, but we'll be moving forward today with our two upvotes, those being Meta platforms, as well as, of course, Chipotle. We'll be looking at some charts as well as some example trades coming up next.
Whether you're an experienced investor or just getting started, TD Ameritrade.
Hi, 412, 17 area. See what happens there. And shoulders on SMX. You should sell it then. Just get out of it. You ever hear the phrase or the proverb, perhaps? You are your money's worst enemy. You always touching it, always messing with it, always tampering with it. That SPY rip. Closing 413.23. That'd be a pretty bullish close. Upstart had a nice bounce on that support level. Same with the firm. All these engulfing candles yesterday. Peace riot. This is being held up by SPY but not ripping. Yeah, that's true. Not ripping it, it's not pushing at all, it's just being held. Relative strength is awful. Spider-Man on his gravestone. Greatest day in trading for me if it holds? Wow. All on here on Happy Money Stream. SMX holding up still 33%. Thanks, Rick. Appreciate it, man. Yale, baby. Oh, let's see. Yeah, big breakout there on Mara the last couple days. Yeah, FFIE still on the up. So it does look pretty nice. Just playing that horizontal support.
The move off of the lows from 88 back to 220,
bluish,
holding above
owl,
the 50.
talking
This
about
year,
Meta,
the move up, I mean, you can see how it's catalyst above the 200, above the 50. This is a stock that's doing well, to say the least. We're up 82% year to date in shares of Meta.
Excited about Meta's chart. I don't know what is, because that was wonderful. And areas of consolidation, that's the only reason I got out of bed this morning, was to look at Meta's areas of consolidation on their chart. But now when trading this name, Alex, you can't look at an example trade that is anything less than bullish. So love to see what you're thinking.
You know, I think Meta bulls are ready to run through a brick wall after that presentation. And so say you're in that camp
coming down a bit. I do have actually an order for some options on it.
Analyst. 250.
That'll get filled.
See if we're going to get to 250. Only time will tell. But I got a trade that will benefit from that happening in short order. And you know, after that presentation from Ben, I'm starting to become a believer possibly here. So looking at it here, buying a call calendar to the upside, the May, June, giving it a little bit of time for this to actually happen. If it's going to, but no doubt about this is a bullish strategy, looking for some upside. Stock right now is trading closer to 220. This, of course, will peak out near 250, as that's what the call calendar is centered around. But we talk about this every time with this strategy. It's super customizable, Jenny. It's something that can benefit from, obviously, various different price targets. You just got to be more precise. The more accurate you are in that and centering it around the strike, the better. And so with this, the debit in this case is $2. That means $200 in risk. And you can see on this, by that risk profile, how it benefits. Closer we are to that strike in that first option, the short options expiration. That's where that apex of profitability is most likely to occur. And so if you're a little bit more bearish, a little bit more neutral, maybe select a different strike. But this one simply centered around 250. That was the price target from the analyst. And bullish because, well, 250 is higher than 220, so you're going to need an upside move for that to happen.
Yeah, absolutely. And it just seems like that momentum continues to build in this name. But now our next name is Chipotle. And Ben, it's a tough act to follow, because I do know Chipotle's chart isn't as strong on a year-to-date basis as Meta, but it is still an outperformer in its respective, food space, delivery space, restaurant space.
Yeah, I think Chipotle steals the stage, right? I probably don't even have to say anything. Just start clicking through the charts on this one. Taking a look here, first and foremost, again, kind of a granular look. We're looking at the month, or month that was basically, or the year that was. Now that I look at it, we're talking about from 1460 up to 1742. And in this case, we can hop right in and identify some of these areas of value that have been established at higher and higher levels. Let's identify them. You got 1490, 1550. We're talking about a very well-defined staircase type pattern, as I mentioned with Meta. Very limited retracement, right? As long as we're forming balance around 1712, we want to hold up above 1640. The bulls are looking for a breakout above 1742, that vertical conviction to the upside, and then a new area consolidation to form at a higher level to solidify that working assumption that value is moving higher and higher, and the trend continues to the upside. Okay, let's step away from the hourly candles here. I wanted to show you something in terms of the daily, and I cut right to the chase on this one, guys, because I actually wanted to show you, look at the move we've seen since the spring of 2020. High conviction trade to the upside, and then really since 2021, we've been kind of sideways around the 1600 level. You can see that in terms of this area. I've identified the balance that's forming.
Is that red earlier? Her dress is actually more like
I want to show you something. That's one of the reasons I like looking at price activity through this lens, the lens that there's two phases of development, the vertical phase, the horizontal phase, and then if you can stack those horizontal phases up, you can determine trend, up or down, right? Well, look what happened here in this instance. You've got multiple situations, reoccurrences of this pattern that plays out within this pattern, this bigger, longer-term bull pattern. We could even do this one more time here. And again, you see how it starts to stack up, and you get that kind of granular aspect of price activity feeding into that larger, bigger picture here. Let's take one more step back. I want to show you guys where things stand in terms of the 50-day, the 200-day moving average. You can see, look at Chipotle
new
just
high there,
taking off here. Now, I don't eat there as often as you guys do, but I am a big fan. This one has shocked me, I'll be honest. Look at the triple top here that we're at. The 1754 area is key. And then again, full circle in terms of what I promised earlier in the discussion. I've got a side-by-side here. I've got Meta on the left. I've got Chipotle on the right. And yeah, these are definitely not only stocks that next geners are very familiar with in terms of lifestyle, but also if they've been long these stocks, they're very familiar with handsome rewards at this point. These stocks have done very well. We're going back to the beginning of the year, and both of these, you can see the strength.
Yeah, and Ben, both of these names do report their quarterly results, not this upcoming week, the next week. I believe Tuesday and Wednesdays when they report. So we hope that we don't see a giveth and taketh event, because they're both seeing some really nice momentum into these earnings events, which does typically make me a little bit nervous. But wonderful breakdown on both of these charts. I got a lot to be fired up about now. Thank you, Ben Lichtenstein, our chart master. And Alex, been trading this name. Obviously, it has been an area of strength. Not the outperformer Meta has been. So for that reason, today, walk us through a more neutral to bullish leaning strategy.
Yeah, I think Ben highlighted that this stock has been a little bit more sideways over the last few years as opposed to Meta, which has been more of a roller coaster ride, obviously under tremendous pressure and now making a recovery. Chipotle has largely done pretty well during that time. So
I know, yeah, Rick, you should probably sell it.
You just expect that to continue, a little bit more neutral to bullish in this one's particular performance. So that's what I looked at here. Going out to the May monthly options cycle, selling a put vertical below the market. What we're looking at in particular, though, Jenny, I know Ben had centered around the 1640 level. We're going to be just above that here, the 1650 being our short strike. One really quick note on this particular name, because of that really expensive stock price on a per share basis. Of course, I'm not reflecting a valuation or anything on that, but just the fact that this is a $1,650 stock, it's going to really limit the strategy playbook into what you can do, just because of the total capital allocated to each strategy. So oftentimes,
people that hate on it are, of course, the loudest.
Account, if they wanted to
wow, that's just because it's so good. It's so popular.
They will
There's
use
a reason for that.
risk-defined option spread to do so. So that's what we've done here. $5 wide spread. We can still control the risk on this the same way that we would for a $20 stock or any other stock that we wanted to be participating in. And so, in particular here, the 1650, 1645, put vertical, if we collect $1.50 for this, that's 30 cents on $1 of risk. $3.50 in risk to make $150, not accounting for transaction fees here, Jenny, but a straightforward risk profile. Stay above those short strikes. You expire worthless here, keep the credit. Breaches those strikes, potentially these will offset through assignment and exercise. You can get that max loss. $5 is just a smaller percentage on a $1,650 stock or a $1,700 stock than it would be on a $20 stock, for example. Obviously, on a $20 stock, it's 25%. On a stock that's $1,700, you're talking about, you know, a much smaller number. And so because of that, it becomes a little bit more binary. It's probably more likely that this will either be entirely out of the money or entirely in the money. It becomes more likely that you'll either potentially get max profit or max loss. Doesn't mean it's impossible for this to end up in between. It just becomes harder for that to happen because it's a smaller window or smaller margin of error, if you will. So that's just something to consider, but break even would be 1648.50 to the downside, so that's something to consider on this one. But this is a neutral to bullish strategy. needs for this to hold on to its levels, not go lower, where in the case of Meta, we looked for something that was going to go higher and get to new levels.
And maintain some of that sideways price activity we've seen, like Ben and you pointed out now. But also important to keep in mind for both of our example trades today, they do have multiple legs. That can lead to higher transaction fees. Short options can be assigned at any time.
This ain't to a lower level trader.
Expiration can add risk, like unanticipated exercise.
She waits there so patiently.
Now, coming up next, it's time for FOMO. Today we are looking at McDonald's with shares touching new all-time highs.
Like that.
Earlier in today's session, we'll dive more into that restaurant stock coming up next.
Okay. Buying out the highs here. SI I've been bar coding. I haven't gotten filled on BBIG. I don't know if I want to now, but still kind of do. I'm an engulfing candle. Good volume today. Coasted. Thundercube, you've been around this channel a long time, haven't you? I feel like I recognize you from like years ago. You just haven't been around much lately. I think I remember you from Twitter. Tesla coming down a little bit.
The ego on you.
Crystalline Banana, that's another one that's been here a long time. Congratulations. Thanks for that gifted sub. Ace. Ace. Greenish, bluish, reddish, grayish ace. Look at all those subs. Thank you, man. I appreciate it. Thanks, Papa Ace, guys.
The ego on you.
Well done, sir. All the lurkers just... it's automatically assigning it to them now because they've enabled gifting on here. So... got Crystalline.
The ego on you.
Convergy, Brian, Garvey, Jonas Noodles, Ramus, S. Yeah, all you lurkers I'm calling out. Olga. Olga's been here a long time.
The ego on you.
Crystalline's been here a long time. Then you, Thundercube. I remember you from a long. I was the first to cheat with Girk. Oh, you cheated on me with Girk, huh? Yeah, I remember you from
the ego on you.
Your name from a long, long way ago. Papa! Lots of egos on yous.
The ego on
Bedrock. I hope all you lurkers are getting memberships or at least subscribed. You can come thank Papa Ace. It's only right to do. SMX, little flush there to VWAP.
a slow churn lower, and it's a holding of Alibaba. So I mean, this isn't necessarily moving the needle per se today, because I mean,
that's what he gets for cheating on me.
Recovered basically since the dip. We're seeing shares up today. So
he was the one you were targeting too, I bet.
Is this really a SoftBank story or an Alibaba
then
story?
You got all the
Alibaba, all things considered, I mean, has had some decent price activity this year. Shares are still up about 66% from their yearly low.
Yeah, this is more of a SoftBank story rather than an Alibaba story. Once again, they've been really structuring this type of sell for the last year and really telegraphing it. They've been very transparent about this transaction here. So I would say it's more of a SoftBank story. They did, SoftBank had some significant exposure, maybe a little bit over leveraged themselves when it came to their portfolio. So once again, they're trying to just raise some capital, try to minimize their China exposure. And once again, SoftBank's not the only one trying to limit their China exposure.
GFAI still at the highs there?
There's a lot of optimism about China reopening and
what
that
could actually
do for equity prices. There's also that geopolitical risk, and I think a lot of companies, not only SoftBank, are trying to minimize that as much as they possibly can as tensions start to ramp up around Taiwan, as well as some of the other trade deals that are going on through other countries that we also have alliances with. So I think this is just something that's going to be SoftBank specific, and we probably will see
a few X out of the chat, maybe.
Yeah, Kevin, I'm just curious your thoughts here on when we talk some of these Chinese ADRs. You mentioned a lot of the things I was going to say, like the Chinese regulatory scrutiny.
There's a way to do it on your phone,
ongoing
I'm pretty sure.
Volatility we've seen in Alibaba now for the better part of the last 2 years, and after shares topped out back in October of 2020 at around $300 a share. I mean, right now we're at $95. So what are sort of the added risks here when looking at some of these Chinese stocks? Because I do think that's very important when looking at names, not even just Alibaba, Baidu, JD.com, or a few others that come to mind.
Yeah, I mean, we saw some of the biggest risks the last year and a half, almost 2 years now, actually, since the Trump administration. They were, towards the end of their administration, putting Chinese companies on this, I would call it a blacklist, but it was basically that, where they would basically halt all trading in those securities on all exchanges, and that became a really big deal and was actually very difficult for a lot of U.S. investors. So I think that's going to be the major risk, not only the regulatory nature of China, but also our retaliatory measures that we put in place to be able to block companies that might be a part of the Chinese regime that we may perceive as
that could be
some
it too.
Form of influence.
YouTube not being linked to a Google account,
military, and
or it's just harder to find on mobile.
We are dealing with them, so I think that's going to be the biggest risk. And if you talk to a lot of investment managers, China exposure is not
I think
a core
Thunder was
holding,
like one of my first.
There's a lot of investment managers that would say try to keep
subscribers.
exposure below 5%, and that's not a recommendation for myself. You can go and look at that because of the risk that is out there, but it's a little bit more high beta though too, Jenny. So at the end of the day, sometimes that exposure does provide you a really decent alpha, as you were talking about Alibaba. 66% move is nothing to laugh at, but I think the regulatory nature, especially what's going on with Taiwan, some of the rhetoric that we're actually seeing today, does put a lot of risk in the marketplace, and investors probably should tread lightly at the end of the day.
I completely agree. And just that uncertainty. I mean, we've been talking about this same narrative for now quite some time. It doesn't feel like we're getting any sort of easing per se, at least. I mean, I know Alibaba's shares are up on the year, but it does feel like there is still that major overhang. But really great breakdown of the Alibaba SoftBank ongoing story, we'll say. Kevin Green, senior markets correspondent for the network. Now I'd like to bring back in Alex for FOMO. And we are continuing our restaurant conversation today. Alex, we are looking at McDonald's with shares touching new all-time highs earlier in today's session.
Who said that?
I think it was you
Brian
that said
about
something
McDonald's?
along the lines of, there's those who like
McDonald's
McDonald's and then there's those who are lying. I think that was you who said that, and I'm with you. McDonald's is it's a staple of the American diet, be it positive or negative. It's just true.
They just got that really bearish news, right?
It should be true, and I feel like there's so many haters on McDonald's, and there is nothing better to have at the airport specifically. That is truly when I indulge
basically
in
right
McDonald's.
at our level there at 412.14.
We also are seeing some positive price activity this year. This name's been on quite a tear after announcing some corporate layoffs, which do impact those in the Chicagoland area because they are headquarters actually not very far from here. But we did see a note today from Oppenheimer reiterating McDonald's as a top pick, saying they see upside to street estimates for the fast food chain. They raised their price target to $315 a share from $304 with an outperform rating, saying that conviction is strong despite shares elevating to these all-time highs versus the S&P 500's tumble of about 14% from its peak, highlighting the fact that McDonald's has a really resilient business model. Now, of the analysts covering this name outside of Oppenheimer today, 17 analysts in total, 14 lean bullish, 3 are neutral. There are no sell or sell equal ratings in this name. We also saw a note earlier this week from UBS highlighting very similar strength, saying McDonald's is set to see share upside driven mostly by continued global sales momentum, competitive advantages, and solid strategic initiatives, as well as some continued confidence in their U.S. same-store sales growth, some higher global unit growth, and upcoming catalysts that they only see further strength and further upside to some of the estimates in the near term. Now, McDonald's does report their first quarter on April 25th. That's not this upcoming Tuesday, it's the following. So we do get their earnings somewhat in the near-term horizon, but shares are up about 9% for the year, up about 15% over the last 12 months, which I think is more notable. And like we've said, at all-time highs, up 26% off their low. This name doesn't move with quite the same round of swings or momentum as, say, Chipotle or Meta, names we discussed earlier, Alex. But the fact that it is a more stable player, I think, is also a huge reason why it's a great FOMO candidate today, because stability is welcome in these markets, let's face it.
Yeah, and that resilience is something you can actually put your finger on. I mean, this is one of the few names, this is one of the points the analysts named and made that actually did well in 2008 and 2009. It was pushing their earnings revisions higher during the downturn. Not very many names could say that, and that's something to keep in mind as these recession fears continue to heighten, Jenny, into the second half of the year.
Yeah, and I also think it's important that they've been maintaining their relatively low prices. I know they have had some price increases, but McDonald's is cheap, and right now when times are tight, I think that is an attractive aspect of it, of course, to consumers. So the fact that they're able to keep their costs low, I mean, they're such an enormous company globally and here in the U.S. I mean, it's just one of these names that there is the belief they will be able to weather the economic storm better than some. And gotta love the golden arches. There's the haters, Alex, and I'm always going to be a proponent of McDonald's. But trading this name now, we do have that earnings event in about 2 weeks. We're also right at all-time highs, which is, I'd say, a difficult position, but also the momentum, the fear today is definitely, it feels like, to the upside.
Yeah, and I just kept this really short term here, Jenny. I just went out to next week. I think there's optimism brewing.
GME, I don't know, man.
And it's obviously
like
just making
it's
new
still bullish
highs.
looking to me, but
that maybe continuing just a few dollars higher. This is something that could benefit
I don't,
from that.
it's
so
just
looking at
crazy.
the next Friday's expiration,
just
which is the April monthly.
Yeah, the options.
Looking at buying the 285,
48%,
290 call vertical.
Tomorrow.
We're able to do this for a 250
45% next week. That's
that
I've never seen it that low on
GME. Even of 287.50. The stock's closer to 288.
So the market maker is basically not implying moves coming.
Probably a little bit higher at this point, but
nonetheless, a whole lot.
the same logic applies. Keeping that risk reward roughly 1-to-1.
If we are in
this,
move above
290,
I don't know. Now that we're holding up this level, it seems like
below,
we're maybe more in this range.
That would be your max loss and max profit potential.
It's all messed up now.
If you look at the risk profile here, Jenny, it's pretty straightforward.
Might need an actual catalyst to move the stock.
We're starting near that break even where that white line is at the very center of this risk profile graph.
I have some calls on it, but
higher,
we get a
above
pop.
290, that's where it peaks out max
like
profit. If it were to move lower, below 285,
I'll probably sell them.
Peaks out to the downside, or bottoms out to the downside, and there's
SMX popping pretty good off the VWAP there.
Loss potential. Neither accounts for transaction fees, and of course both
are
assuming a $2.50 debit for the fill price on this, but the general tenets of what we talk about with debit spreads all apply here.
Bullish trend to me.
Risk to reward, break even near where the current share price is, or somewhere in that ballpark for both those factors, because it's directional in the end. This is something that needs the stock to go higher, and we've talked about it so many times. And in the end, stock's either going to go higher or it's going to go lower. That's a 50-50 proposition. So keeping that risk reward sort of in that 50-50 ballpark, I think makes a lot of sense.
And new high on SPY there. The upside with this momentum holding actually fairly well, while also not being, I'd say, overly exuberant, which is also important.
I think we're going to chill here for a while.
For our
pretty much.
Today. Now coming
so
up next,
if we don't,
look at another name that's outperforming on the session today.
Make a lot of money then.
That is all things Amazon, with shares up about 3.7%. With several pieces of news, we're seeing Andy Jassy write a letter to shareholders. We're also seeing Amazon enter the AI race. Renita Young will
I actually sold on the pop yesterday, and then 2 days ago or yesterday. No, yeah, yesterday. I had some calls that were green. I'm like, I'm green on these. Might as well sell them. Which is a weird thing to think about when you're holding GME, because you never want to sell anything that's green. You want to hold it till it's red and dead. Anyways, then I bought back in here on one of these lows yesterday. hoping to get another pop today, but never really came. So now I'm just holding. But yeah, I'll probably close on any kind of pop. Mine aren't for May though. Mine are, yeah, they are.
Ego on
May
you.
5th. Thanks, Ace. Look at that. He sniped him. Well done, Ace. Thank you, sir. Appreciate it. Proper aiming on that Thunder Cube snipe. Got him. Think a run can happen, even though I know, and that's the kind of thinking that makes you lose all your money. But yeah, I know. I still kind of think it too. That's why I like to have some exposure. Probably need some more time. We've got earnings. GME has earnings next month, so that might be the next catalyst. Just a stair step up. Buys squeezing here, up 1%. Broke yesterday's high. Oh. I'm just getting to the top of this range here, and we've got a lot of volume trade around these areas. See what comes. 412.86. And I don't know on GME. Really don't. Mood on BBY is, Ace asked how far till it gets to 0. So we learned that. That's only 30%. That's the mood that we're thinking about. How much more till we're just at 0? So yeah, 28% now. We're getting close to where it'll just be free to own those shares. That'll be cool. Besides that, yeah, broke the low. I sold back out today. Yesterday we got that engulfing candle, which sucked, and then yeah, broke through the low today. So I'm waiting for momentum to the upside again. Very special powers. You're on our Discord, right? Thunder, you were at one point. Look at that move on SPY. SMX holding nicely above VWAP. I like this FFIU play one of you guys pointed out. Me randos. So nice historic support, it's got good volume. And a MACD crossover maybe today. Tess is even getting a little pull in this SPY move. Durka. SI still barcoding. PTI up 2.5. Short report. Yep, you're welcome. Nate Dag. Oh, you're Nate Dogg on there? Oh, yeah. So you've been on Discord for a while. That's right.
AI customers so far, and so it's interesting to note those things, and the fact that another part, Morgan Stanley analysts actually said, based on a February survey of chief information officers, they expect AI to become a larger part of cloud spending, right? No surprise there. But here's the
that's
shocker.
Exactly what I was thinking.
They feel like Google and Microsoft may be the largest beneficiaries of that, not Amazon. And so, yeah, we have a lot of different things in there that some of them may be surprising as we hear more about AI.
Yeah, no doubt. I don't think it's a surprise to hear that these companies have been working on this for a long time. I mean, major breakthroughs could be, the next big thing. I mean, we're looking at a time that's going to be, basically different as machine learning and AI becomes a bigger role. It's going to be, the pre-AI time and the post-AI time. It's just a fact. That's just going to happen. But I think it all ties into the same thing, which has been, as Meta laid out, I know we're talking Amazon, but it all kind of comes back to this theme, the year of efficiency. What's more efficient than having machines do things that they couldn't do before? And so all of this spending, especially when you're talking about these companies that have the money to spend,
we've got
it's now
the
just
Happy
directed
Crew.
towards something a little bit different. No longer virtual worlds, but in fact,
me on there,
artificial intelligence. Any final thoughts here before we say goodbye, Renita?
The final thoughts, just to say that I'll be watching this stock really closely to find out how folks are going to react to this going forward and into the next earnings season.
Yeah, and I think that this earnings season will be one that will be very critical for Amazon because they have not been the outperformer post-earnings that they were the past, at least for several quarters now. They've been somewhat of a disappointment. So any way to get the street excited about this name again, although all things considered, they are 20% here today. I just feel like we are overall very hard on Amazon because they are such a strong company. But we will leave it there. Appreciate this good breakdown on Amazon and the AI space, which are pretty much two buzzwords of this market. Renita Young, Senior Markets Correspondent. Now coming up next, it's time for Under 30. We are looking at VF Corp, which has been somewhat of a disappointment this year.
I don't know
seeing now
why
some upside from
BBY
Edward
is so
Jones.
funny
We'll
looking
discuss
down
that
here.
stock more with George Tillis coming up next.
I don't know what's going on, but today does look similar to the other day still, which is maybe a good sign. Sort of. This had this weird down wicks, but barcoding basically around VWAP. So that rally started. Wait, what? Oh, that closed. That was the next day it rallied. I thought it was the end of the day. Weird. So that day actually closed like that. It was the next day that ripped. Huh. So yeah, maybe today won't rip in today. I'll lose my BY. That's so nice of you, Ace, to be so considerate and generous with your money in here with the gifted memberships, and then also willing to sell your shares to people, off exchange and everything. You don't have to pay for fees and commissions. Like, awful. Truly. What a man. Up just rallied all day and then just starts barcoding here. It's so weird. The NGO's looking good. Been a while since we traded this one. Strategic investment. Greenish grays are tricky. Let's see. Got BNGO. Looks like they have some options activity. I don't like it. Big spreads again. Moving up pretty good with this little SPY bounce. What do you know? 0.3. Options are still actually red on here. Can't believe the IV is 54%.
For the network. So George, what I saw here was this Edward Jones note, but also the fact that of the analysts covering this name, price targets range from $18 a share all the way to 60. So that is such a range. We need your help here.
Well, it is a range. This is an interesting situation for VFC Corp. I mean, if you look at the chart over the last 3 years, it looks really bad. I mean, the stock is down about 70%. In that time frame, it's down about 60% over the last year. So there may be some compelling valuation for VFC Corp, which really has some great brands. I mean, you mentioned Vans, North Face, Timberland, the Supreme, JanSport, those backpacks that you see all the kids wear that go to school. Those are, again, very popular brands, but the company's really been struggling for quite some time. Now, if you look at some of the upgrades recently, I mean, Edward Jones upgraded the stock, Williams and Blair actually upgraded the stock about a month ago as well. They actually see some potentially compelling valuation based upon the fact that the company seems to have spent quite a bit of time really focused on growth at the expense of near-term, management. And I think especially when it comes down to expense management. So I think maybe if the company is going to be focused more on operational expenses, dealing with supply chain issues, inventory management, at least in the near term, could potentially see a major trend reversal, but we just haven't seen that yet. And ideally speaking, if you look at the sales in the last year for VFC Corp, they were actually down slightly. Also, earnings were down about 13%, but I'm looking at forward guidance between the analysts that are providing quite a wide range for the stock. The expectations for sales are around 9.5% with EBITDA around 15%. So it looks to me like analysts see something promising in the next 4 quarters for VFC Corp. It may end up being a situation where now shareholders are putting so much pressure on the board of directors and management to start cutting expenses and really clamping down on cost of goods sold and seeing if they can actually improve on their economic margin, considering that, again, they had a lackluster last 4 quarters or last year compared to the expectations in the next 4 quarters.
George, you alluded to that disparity that Jenny was talking about between the analysts. You talked about some of the things they've been doing, and we've obviously watched the market reward kind of a shift away from that CapEx spend, more on margin expansion, which you also alluded to.
Yep.
Is part of this disparity maybe also explained possibly just by the belief in different analyst camps on the effectiveness of what this brand has been focused on, or this group of brands has been focused on, and whether or not all this money spent towards growth ultimately is going to work?
Yeah, I think that's the good question. I mean, I think at the end of the day, maybe they need to spend on marketing their brands more versus essentially too much growth for the business. It's a lot of capital expenditures is what I'm trying to say, is what they've been focused on in the past 2 years. Obviously, it hasn't manifested into great shareholder returns, but I think if they start focusing more on expense management, I mean, I'm going to use, Meta Platforms as just an example. Once they addressed really what the issue was, cutting expenses dramatically, you saw the stock just make a huge reversal over the last 2 quarters. I'm not saying that's going to be the case for VFC Corp, but I do think that that's going to create a compelling reason for a reevaluation by institutions and, of course, money managers for a company and brands that are very well recognized and very popular. It seems to me that despite the brand recognition, there seems to be some financial mismanagement, or if you will, business mismanagement. That's what I'm trying to say here. Financially speaking, there's room for improvement because if you look at gross margins for their brands, gross margins are around 53 to 54%, which is actually very robust for the retail space. But if you look at their net income margin, albeit again last year there was a growth contraction, it's still around 3.5%. It's positive, but it certainly could be better. And I think that's really what Wall Street is waiting for here. When are things going to improve from a net income standpoint? It is positive, but it's just very low. And with that said, when you see low net income margins like you see in VFC Corp, at least on a trailing basis, a slight improvement can actually magnify or gear a stock return quite a bit to the upside. So just to conclude here, just look for a major trend reversal. And what I use is really simple. Use a weekly chart, 21-week moving average. If the stock price starts to breach that level, and it does so in 2 consecutive weeks, that might be a turn of events for the stock. But it hasn't proven that yet, so there's no reason to rush into it.
Yeah, and George, it seems like the overarching theme here, the thing that they're missing perhaps, is cost-saving initiatives they're not able to execute as well, because in this retail space, obviously a theme we've discussed this whole year has been the fact that consumers are pulling back on some of this discretionary spend, but we're not seeing the same price activity in other retailers. So does that just come down to poor management? I mean, are there just steps this company can take to revive themselves here? Because like you said, it does seem like their costs remain an issue, inventory is another issue, as well as supply chain, but they haven't been able to do anything about it yet, because the apparel space as a whole is not seeing the same degree of weakness as VF Corp. And that's not to say these aren't important brands, because they're well-recognized brands. I mean, JanSport, you see absolutely everywhere, but that's not translating at all to the stock.
Yep. That's the thing. I misspoke just briefly a moment ago. There's no issue with the finances of the company, at least from what I see. What I see is business operations issue. And that's something that can be remedied or fixed. And it's going to take some time. Usually things start to turn around over a couple of quarters, but the stock hasn't been basing yet. And typically speaking, when you start to see stocks reverse, especially over a multi-year downtrend that the stock is still in, the stock will start basing. In other words, you'll see some sideways trading. I haven't seen that yet. So you can't really go against the trend. The trend is still to the downside. That's going to put undue pressure on the share. And again, trying to catch a major trend reversal before it's happening is just too difficult to do. So patience is really key here. I think if they start addressing some of the operational issues more so in, say, let's say analyst call or maybe even conference calls, it'll start to show some improvement. But you can't essentially say it's going to improve tomorrow or the next day or even the next month. You have to let the market dictate the language for you of a trend reversal. In other words, you'll start to see sideways trading action. And then, of course, like I said, if it breaches 2 consecutive weeks above a 21-week moving average, that might demonstrate there's actually something going on internally to fix the business conditions of this company, which, again, has very popular brands, as you mentioned.
Yeah, so it seems like it'll be more of a wait-and-see story. We do get their quarterly report on May 18th, so we have about a month until then, so we'll have to see if we can see any sort of reprieve, because, I mean, shares are down 43% from their high, and just on the 5-year chart, it's even more painful than that. So we will leave it there, though. Great covers on VF Corp today. George Tillotson, your markets correspondent for the network, and that also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list with Nicole Padalides.
Went to the stores. We went to 2 stores.
Hiring cooled in the U.S. in March, but the labor market remained strong enough to justify a final quarter-point rate hike from the Fed in May, said Catherine Judge, senior economist, CIBC. We had natural gas inventories data today. Rose to 1.86 trillion cubic feet. There's natural gas inventory plus 25 versus plus 27 expected. That makes it sound like it's less than expected. Only 48% of US workers say they use all their vacation days. IMF's Georgieva says the economy is slowing down, which will lead the Fed to recalibrate their own policies. 25% of college graduates don't make more than the typical high school grad. IMF's Georgieva on banking crisis says it has been a helping hand to Fed. Inflation's coming down, but not fast enough. The number of Americans working as freelancers just is at an all-time high or all-time record of about 39% of the U.S. workforce, or 60 million people. Average cost to raise a child to 17 is now $310,000, up more than $26,000 from a previous estimate made in 2017. Probability of a downturn in the next 12 months stands at 65%, up from 60% odds in February, according to the latest Bloomberg monthly survey of economists. Banks with less than $250 billion in assets are responsible for roughly 50% of U.S. commercial and industrial lending, 60% of residential real estate lending, 80% of commercial real estate lending, and 45% of consumer lending. Australia is quitting coal in record time thanks to Tesla.
Still up 1.5%. So you are seeing green across the board after we got in wholesale prices, which dropped. And that's
down a
the
bit.
big story as we await more news.
GFAI
Meantime,
rejects
for some
that
of the
new high.
biggest stories that we're following here, Renita Young, Senior Markets Correspondent, TD Ameritrade Network, taking a look at the big
Reporting
news
to
on
Young.
Amazon.
Yep.
Andy Jassy, CEO, sent out a note to shareholders. What are we learning?
Well, Nicole, in that note, Andy Jassy said although it was one of Amazon's toughest times in history, he is confident that the cost-cutting measures the company's been taking will pay off in the end. So far, it's axed its telehealth service. It's also pared back plans to do a warehouse expansion. Also, it stopped or paused those plans to do an enhancement of its fresh supermarkets. But Andy Jassy also talked about new investments, and one of them is this big push into generative AI that's been more than 2 decades in the making. The company is introducing a new cloud service called Bedrock, and through it, developers will be able to enhance their software with generative AI systems very much like ChatGPT. And Amazon Web Services is offering access to language models through Bedrock. Now, after some of the hiccups that happened with ChatGPT, with accuracy through the Google engine, search engine from Bing, Amazon says that it's really concerned about that accuracy and that they want to ensure that their models produce high quality responses for people who will use them.
Understood. All right. And then we take a look at Delta Airlines. Yesterday, we saw American Airlines coming under pressure. What's the story on Delta today?
Well, Delta Airlines shares have turned negative on the day. The reality has set in that this company actually did miss expectations on both earnings and revenues. Now, let's take a look at the numbers. Adjusted earnings per share missed expectations. It came in at 25 cents, and revenue was just below estimates, came in at $12.76 billion. But these were both in line with the guidance that the company gave at the beginning of the quarter. However, cost per available seat mile and total revenue per available seat mile reached parity with one another at 21 cents. These were both higher from the year-ago figures. And the company, believe it or not, it recorded a record number of advanced summer bookings, and because of that, the company executives feel like this volume is going to be far beyond pre-pandemic levels going into the summertime as people do more of the experience trade.
Yeah. All right. Thank you for that, Renita Young. Appreciate it. Good to see you.
You too.
Let's take a look at the bigger picture. Matthew Johnson's with us, President Owner, Johnson Wealth and Income Management. Thanks for being here. So what did you think? We got the PPI, and in fact, we saw the biggest drop in nearly 3 years in wholesale prices. Is it enough? Is it enough on the heels of the CPI for the Fed to finally say we're taking a pause, or should the Fed keep hiking?
Well, thanks for having me on first and foremost, and the answer is no. No, not at all. So the Federal Reserve, I believe, is going to stay very stalwart, Nicole, in their efforts to be able to bring this inflation down. You know, it's good to see all of the green on the stock market. It's good to see these numbers coming down. We've seen inflation actually reduced by more than expectations and coming down to 5%. We see the PPI today where there was a number of analysts that said, nope, it's not going to change at all. And yet we saw it drop by 0.5%. So that's all good information. But the reality is that we're not out of the woods yet. We know that the Federal Reserve, looking at their minutes, last month, there were several of them that wanted to raise interest rates by 0.5%. But in light of the banking crisis, they decided to kind of nudge that down to 25 basis points. So I think they can raise interest rates in May. I think that they should raise interest rates in May. I think that they have to raise interest rates in May. Now, after that, that's what we're all looking forward to, which is the pause. And that's when they're just going to be pausing to see if inflation, as it were, just behaves itself. And if they can keep that under control, great. But also referring back to those minutes again, we also saw that they gave themselves kind of a back door. And they said, but we will increase interest rates again in 2023 if we need to. So it could mean another 25 basis points increase sometime down the road. Let's hope not, but it could happen.
Yeah, absolutely. In the meantime, as you talk about banks, we're waiting on some bank earnings. Tomorrow we'll be delving into that a little bit more. But there is the concern that you have sentiment, consumer sentiment pulling back, the concerns about a credit crunch. I mean, the word recession was used yesterday. I mean, these things sort of filter into the psyche, right?
Well, they absolutely do. This is the human element. This is what makes investing exciting and dangerous all at the same time, right? The Federal Reserve can't control everything. And they understand, much as we do as human beings, that when you do this over here, then it's going to have an implication over there. And I believe as we come into earnings season, we're going to see a much clearer picture as to what the real financial damage or implications to the banking sector is going to be from these rate increases. Certainly, we've seen a lot of outflows from banks. Who can blame the average American? You know, if you got one bank that you're banking with and they're going to pay you, say 4, but the bank across the street is going to pay you 4.5, you're going to be moving your money. Who blames that person? But we have to understand that there's going to be a lot clearer picture as these profits coming out, or these earnings are coming out. And I think with the banking sector so under the radar right now, they're under such scrutiny, they're not going to be nearly as sanguine on their loans as maybe they have been in the past. And so that's going to also lead to maybe a little bit of downdraft to corporations and the accessibility that they have to working capital.
What do you tell investors at this point now? I mean, sometimes we say cash is king, or we know people are pulling some deposits out to put them into money market funds or treasuries or whatever. What should they be doing or definitely not doing?
Well, that's a great question, but the answer to that question, Nicole, is really, on what side of the stage are they on? Are they on the accumulation
You're still in
stage?
SMX? That's the longest we've ever held something.
I'm trying to caution them to wait until the earnings start coming out, because that's going to probably cause some more volatility. And that's going to be an opportunity for them to nibble and buy some good quality companies at lower prices. On the flip side of the coin, if you understand that you're on the distribution stage, okay, so you're not looking for a lot of risk, you're not looking for the opportunity of growing double digits, you're just trying to keep your principal safe, and you're trying to make certain that you've got the income to meet your needs. Then this is really where we want to be focusing on things that are more fixed income. We want to be focusing on good quality blue chips that are paying sound dividends in that 3.5%, 4.5% range, if at all possible.
Claims next week
and
still.
That stage of your life is really what's going to be determining how you're investing. I still honestly believe that we're going to be waiting until the beginning of next year before we see the Feds cut interest rates. I don't think that they're going to be doing only a short-term pause. I think it's going to be longer. And we're going to have to wait to see how things shape up. But once the Feds begin cutting interest rates, if that becomes a reality, and I think it will,
range right here.
That's when we're going to see all asset prices go up. So now is the time to be able to buy and to nibble and to get those good quality income producers at discounted prices.
Yeah, understood.
Bullish
so when
MACD on the hourly here.
When do you expect them to cut rates, and do you think the market
waiting for a pullback by end of day,
and when would
going
that
long
be?
on calls?
Well, I definitely believe that they will be cutting interest rates, but I don't think that they're going to cut them right now. I think that it's more likely that we're going to see our first interest rate cut probably sometime in the beginning of the first
SMX,
quarter
I think,
of next
yeah, I think
year.
it does.
That's my hunch.
Consolidating up here.
And if
So
that's the
looks
case,
good.
let's think about the economy as a car.
Had a big move last
when you're
3-4
raising
days.
interest rates, you're pumping the brakes on the car. You're slowing it down. So stock prices are going to move lower. Fixed income is going to move lower in price.
Yeah, it's
when
gone
you start
220%
cutting
last
interest rates
4
and they
days.
start going down, we know that our country is very addicted to low interest rates. We love low interest rates because then we can build houses, we can buy cars, we can, do a lot of the things that we want to do, and this is what creates growth. And so we may be able to load up on buying assets today at discounted prices, realizing that down the road, that's when we're going to see the appreciation as the Feds begin to reverse on those interest rates.
Per-day move there.
Right. Matthew Johnson, good to see you. Thank you. Matthew
You as
Johnson,
well.
President, owner, Johnson Wealth and Income Management. Okay, later this hour, CFRA's Ken Leon will join us. I want to talk all about the banking sector, earnings preview. This kicks off tomorrow in a big way, and then a slew more next week. Let's find out what he's thinking, what he's watching for, and which names in the banking sector he really likes. Then we will focus on outer space. Which stocks could be a part of the new space economy, and is it an attractive investing opportunity? And our panel will examine
Jeez, Tesla, the reversal there. Yeah, you're right. In that high SPY close, we'll see. BMOP's way down here, but volume's pretty light today. Still a breakout from these levels, so looking bullish.
keeps outperform rating there, and shares of McDonald's are up nearly 10% this year. Alibaba shares reacting to news that SoftBank has moved to sell most of its stake, in the Financial Times reporting that SoftBank has shed about $7.2 billion, lowering its stake to about 4%. Back in 2014, the company's U.S. IPO, SoftBank had a 34% stake, despite the news.
New high there on SPY, new low there on BBBY, flush through the bottom.
An FDA review
25.50 low of the day with some volume.
$20 billion last year. The phase 3 trial shows promising results in the fight against certain types of cancer. Today, the analysts at Citigroup upgraded the stock to buy and raised the price target to $130, up from $105. And Apple announced plans to use more recycled materials across its products, including 100% recycled cobalt batteries by 2025. The analysts at Canaccord Genuity lifted the price target to $180, kept a buy rating. Meanwhile, Bloomberg reporting Apple increased its iPhone production in India by 6% during 2022. All right, let's check out Bitcoin right now. It's been at the highest levels since June. There it is, 30,755, up 2.7%. Let's welcome in our next guest, Mark Falter, President of Mid-America Wealth Advisory Group, to talk about our current state here. I mean, as we see the Dow on pace for this 5th positive day in 6, and things are, sort of rally feeling, at least to the point that you got some up arrows and we're not on the low end of the range, right? But we got all the inflation data now.
Yeah, but you know what? I don't want to get people too excited about that, because I still think the Fed's going to raise rates once, maybe even twice more. I think we're in a new era. I think these high interest rates are going to stay for a while. I've talked about this before, Nicole, and that is, I don't want to say that we're back in 1975 again, but we're sure mirroring it, the type of market that it was back then.
So, and I agree with you. I mean, it's so hard. It's not like we have a crystal ball, and we've been in somewhat of a range, right? You could say 3,800 to 4,100, something like that.
New high on SPY, yay, confetti.
A lot of people have higher targets. They do think that we could really retest.
We're going to start filling this gap here pretty soon.
10%. Do you think that's a possibility? I mean, how much of a possibility?
This is a SPAC, huh?
And would it be in certain sectors or just the whole market together, do you think, this pullback?
I think we could see the whole market pull back, and yeah, I think we could pull back that much. Because here's the bottom line: is what causes inflation? Is too much demand for too little supply. Well, the problem is supply is not getting increased, so we got to shrink demand. The only way that Jerome Powell can shrink demand is to basically kind of keep that consumer optimism down. And he does that through raising rates. And the people that say, "Well, I'm going to go borrow money to buy that thing," because that's what he's got to stop. He's got to stop people from buying stuff. Well, then the interest rates are going to be so high.
I figure tomorrow's going to be another big green day.
Like right now, it's an interesting thing.
I have all my margin available to trade it. Not stuck in
it's amazing how many people we have calling us from the mortgage sector, because mortgages just aren't getting issued right now because people aren't selling them, because people aren't buying homes. So it's starting to work.
Interesting, and the concern is the credit crunch and how much it could slow everything down. But I do think there is sort of that same issue, even though I guess most people would say we've peaked, whether it's housing or cars or, rent's still very high, but, maybe we've peaked, but still people are being priced out. It's still very expensive.
Yeah, and I'll tell you something I really kind of got to thinking about the other day, and I've been doing more research on this. I got a radio show coming up on this topic. I got to tell you, sometimes I wonder if the Fed really doesn't just want to try to inflate their way away from some of this deficit. In other words, they may be telling us what we want to hear, but at the end of the day, do they really want to see inflation go away right away? I'm not convinced they do. I think we're going to be dealing with inflation for a very long time. Let's put it this way. When Jerome Powell tells us that it's going to be a long road and some bumps on the way, I don't think he's kidding. I think it's going to be a longer road than what most people are anticipating.
Well, those are two different comments. One is that it's going to be a long road, and that seems sort of, at face value, I understand that. But to say that they don't really want to get rid of inflation, what do you mean?
Well, I think, like I said, you can actually look at different studies on this to where the Fed can actually sort of decrease the impact of the national deficit, because all this money that was borrowed at lower rates. And I did a whole radio show about how the inflation at these numbers can make this $31 trillion less impacting to the Fed. And so obviously they don't want to see it get back to 1975 levels. Let's put that for sure. And that's why he's being making such aggressive moves, trying to get it down, trying to slow the demand down.
All right. You know, we'll see what happens. I mean, I think most people are still, I think we're at about a 70% likelihood that we'll see a rate hike in May. So I think we can pretty much count on that at this moment, unless something happens again in the banking sector. I mean, people like Warren Buffett say it's not over. Jamie Dimon has sort of warned there's going to be repercussions going forward. So you don't feel like it's really over. You want to give me a quick thought on the banks and earnings season tomorrow?
I think we're going to see another bank or two maybe do the same thing as Silicon Valley did, because see, a lot of them did buy bonds. Every one of them just about bought bonds, and these bonds were bought at lower interest rates. And if they're being forced to sell those, they're obviously not going to sell at the price that they bought them at, and it's putting the banks in a crunch. So I think I don't think we're over. Now, I don't think that we're going to see a run on banks like a Greece situation was back several years ago, but I think we're not over yet.
Okay. Let's get to some of your picks here. I'm going to start with Lockheed Martin as we obviously talk about our national defense. Tell me why this is a good story here and maybe a good stock pick.
Well, we like them because of their dividend. Of course, that's kind of our favorite thing to look at is their dividend, but they're a very solid company, you know, positioned well with the F-35. The F-35 is actually 35% of their volume right now of sales. And that is one interesting plane. If you actually do some research on it, it's a large part of their sales, very high-tech plane. They've got some very good profits right now. Sales in 2022
I think they have a vertical takeoff one
$66
too.
billion, and the net income was $5.7 billion in 2022. So very good company, I think.
All right, and it's interesting how you picked that over some of the other aerospace and defense names. I mean, clearly the dividend is the goody part of that, for sure. Tell me about a name like Costco. When you think about the big retailers, names like Costco and Walmart and Target, and maybe some of the dollar stores, why is Costco the standout?
Well, I'll tell you, you know, we have talked about Walmart in the past on here. We're still buyers of Walmart too. We're kind of really in several different holders in this same area, but I think the long-term sales for the company are very, very good. They don't really have a huge dividend. That's not really why we bought these guys, only at about a 1% dividend. But their increase in sales year over year has been very good. Net income last quarter was about $1.4 billion. So just a very, very smartly run company.
Yeah, understood. How do you think the consumer is feeling? Because that's all about GDP, and whether or not we're going to head into a recession is really all about the consumer.
It really is, and I'll tell you, that's again one of the reasons we're looking at Costco, we're looking at Walmart, because everybody wants a better buy when we're heading at times like this, because inflation is going to get a little bit worse before it gets better. So it's causing prices to go up, so they got to look for the best price possible, and that's where they're going to find it, those places.
Yeah, and just quickly on earnings season, as we did talk about the banks, and you said, look, another bank or two may go the way of SVB. What about earnings season overall? Do you think that the estimates are still too frothy? Are you going to be listening for guidance for any one thing in particular? Do you think that people might bring down the guidance?
I think we're going to see earnings season coming a little weaker than expected, but again, even if we were to see things coming really, really strong, the government Fed would make a move to pivot against that. And it sounds terrible, but basically pivot against that to keep the markets low so that they can decrease optimism, so people will quit spending money and try to get inflation down.
You know, just to go back to the housing, I think it's unbelievable. I mean, we do see people, as mortgage rates come down, you know, we start to see more sales and more mortgage apps and things like that. I mean, there's definitely correlation where the rates are, because, you know, when you have a dip, then the numbers improve, right?
Right. And, you know, the thing is, I've got a lot of real estate sales people as clients, and the real estate sales have definitely slowed down. You think about it. I mean, it wasn't just 18 months ago. People could buy a house at 2.5% to 3%. Now you can't hardly get one under 6.5% to 7%. You know, on the 30-year rates, and that's a game changer for most people. And hence the reason they're looking at places like Walmart and Costco to go buy things at a cheaper price. Because it's really putting a crimp on the average American's budget right now, this inflation is.
For sure. I mean, it adds up. Mark Falter, great to see you. Thank you so much.
Thanks
Mark.
again.
President, Mid-America Wealth Advisory Group. Coming up, we have to talk about the banking sector. The earnings begin tomorrow. CFRA's Ken Leon is with us. He has strong buys, and a
Let's see here. Oh, you have a short on SPY? If you picked a Jenny, please. CXI AI still going? Yeah, there you go. $6. Starting to fill that gap. Got kind of a vacuum up until $8 on here. Now it's going more. It's consolidating SMX, consolidating at a high above VWAP. Looking beautiful, similar to what it did here and here, here. This is when you buy it. It's boring. Oh, it's exciting. A former Meta recruiter says she was paid $190K a year to do nothing. Meta brings in a DJ to play dance music in one of its cafes as the company urges workers to return to the office. Almost 60% of working Americans age 45 and older expect to have less than $500,000 saved for retirement. The metaverse is still the next big thing, Meta insists. A long, shallow recession is more likely than a deep and long credit crunch contraction, says Mizuho. Hard to say. The Fed has so far saved the stock market from crashing thanks to massive liquidity. Ed Yardeni said 6.2 magnitude earthquake. It's Canada. Volatility index hits its lowest level since February 15th. Suspect in San Francisco murder of Cash App founder Bob Lee is in custody. Suspect was known to Lee and is the current owner of a tech company named Expandit. Binance says Ethereum withdrawal requests may take up to 15 days to several weeks to be fully processed. Amazon did not grant its chief executive Andy Jassy any new stock in 2022. FAA to refer more unruly airline passengers to FBI. Jeez. Apple's in talks to manufacture MacBooks in Thailand. U.S. officials identify leaked classified documents suspect as 21-year-old National Guardsman. Arrest is imminent.
And, you know, this is really all on the Fed, on their bank examiners with smaller banks. And all this will, again,
yeah, I think it's
when the Fed releases its supervision
report
come
down too.
May 1st.
Momentum's
for the
up.
larger banks who are so diversified.
Again, it's come up like 300% in the last 4 days. So
commercial real estate loans.
That being said, I still haven't sold.
In the magnitude that smaller banks are. And that's the sensitivity as you have in terms of deposits to loans,
yeah, gap filling at
duration
6.2,
risk, and asset liability
CXAI, yeah,
mismatches, which is mostly in the smaller banks.
Or CXAI.
So up at the large cap banks, which is really where investors usually are anyway, it's an opportunity because the stocks are selling their 52-week lows. And what we see is some green shoots in the capital markets. Trading's going to be very good. Underwriting,
a
little bit is happening, more maybe later, and M&A is picking up. So it's a real good time to look at some of the stocks we're recommending.
Right, so trading's good, underwriting meh, but will improve, and then M&A activity, that was good. You did talk about investment banking revenue for names like Goldman Sachs and Morgan Stanley, and you expected that to be a little bit weak, even though you have strong buys on both those names. Why is that, and why the strong buy then?
So both Goldman Sachs and Morgan Stanley were upgraded from hold to strong buy during the crisis in the middle of March. Just outsized opportunity here on risk reward. Also, we're in the trough of the capital markets. Even if we only see some improvement in the second half of the year, they're also going to gain wallet share. The other crisis, which is an opportunity for Goldman and Morgan Stanley and JP Morgan, was Credit Suisse, which is really shrinking its position in investment banking and becoming part of UBS as an asset manager. All this is tremendous opportunity for very well-managed, well-capitalized banks. We also think that when you look at what was the crisis in March, only Bank of America had an assets held to maturity that was viewed to be high, $108 billion, and there's unrealized losses there in treasuries and MBS. But they got $2.3 trillion of deposits, so not a big deal for Bank of America, but the stock got hit. So on the commercial banks, what we're looking at is we probably peaked, to your point, on net interest margins, but NII is still going to be pretty good, and loan activity will still be positive but slow down. You know, it's just going to be tougher to operate as a traditional bank.
Okay. Yeah. Let me ask you this. What did you think about how you had these consortium of banks giving out the money to try and save the regionals? What did you think of that? You know, I guess they're going to demand that money back at some point. I mean, what was the big picture takeaway? I mean, you must have been sitting at your desk going, oh my goodness. Like,
yeah, so,
you know, you tell me, what did you think?
So I've been doing this for a long time, and you know, if you got burnt once, which was when JP Morgan and others had to buy Washington Mutual and others, and then they had lawsuits after that. So this time, you know, they were just putting up really assets or deposits they're going to get back, probably backstopped by the Fed. So there wasn't a lot of risk there, and Jamie Dimon this week talked about the importance of smaller banks. But bottom line is this, deposit flows have moved from small to large banks. JP Morgan yesterday, you can go there and get a 5% yield on a one-year CD from a fortress balance sheet like JP Morgan. That's the real story, is it's a strong book. So I don't think it was a big deal for these banks to work with the Fed because it was nothing like what they had to bear and the after effects in 2008.
Right. Right. You know, burn me once, don't burn me twice. And the JP Morgan Washington Mutual story, I remember it well, and it's something that people still talk about on Wall Street all the time. You know, Jamie Dimon saying never again, I'm not doing that. 9%. In the meantime, you have a sell rating on one name, or at least one that I know of. Why? To explain why Citigroup is a sell.
Well, Citigroup is not a sell. It's actually a hold. We do have a sell today from a hold. I had in the notes that it was a sell. Okay, so I thought in our notes we saw a sell on Citi. So we need to cancel. That is a hold. All right, which one's the sell? Rockets. In the conversation you had before my interview, we talked about the housing market, both the forecasts for existing homes, housing starts, and mortgage originations. The Mortgage Bankers Association looks for a V-shaped recovery in 2024. It's not going to happen. And they're going to come up with their latest forecast April 20th, digesting what happened in March with the banks. So RKT, you know, we think, you know, the stock is trading near 10. Our target is 7. And that's the majority of their business. It's a really well-run organization, but they're just in a tough business in terms of mortgage origination.
Right. I mean, you know, this is has a lot to do in the housing market, and that's probably part of the issue in the big picture. Ken, did I leave anything out? I mean, what's going to be our takeaway on this year and on 2023? Are we going to say higher at the end of the year? I mean, you got a long-term view?
I think banks are going to outperform the market, and particularly the large banks are going to be able to gain market share and also benefit from either a slow economy or a moderate recession. Banks have sold off enormously.
I suppose
it's a
I
good
may
time
have
to come in.
chewed on a couple cubes here or there.
All right. Ken Leon, wonderful to see you. Thank you so much. Global Director, Industry and Equity Research at CFRA. Thanks. We're set for tomorrow. Still ahead in the second half of our show. Well, we'll take a look at outer space and find out which stocks could be a part of the space economy that you'll want to take a look at. As we head to break, take a look at winners and losers on the S&P 500.
I'm bouncing there a little bit. Yes, I got a little volume here. I'm just gonna break out. Just weapon rob people. Dragging its heels to fill a gap. I mean, you gotta give it a little slack. Goes up 280%. Yes, SMX still there. Little pop, little poppy, poppy, hey poppy. Hey, Poppy.
Contributor here on the TD Ameritrade Network. So you are watching the U.S. dollar, which I saw that downtrend. You and I have been following it all week, especially we got the FOMC minutes, we got all our inflation stuff. What catches your eye about these levels?
Well, just the conviction associated with the trade to the downside, for one, Nicole, and the fact that we've now taken out some key levels for the year. The dollar index coming under pressure as of recent. You pointed to some of the contributing factors. I mean, we've got rates, we've got the indices, which have been rallying, right? That oftentimes kind of takes away some of that premium the dollar had seen in the past. So it's that safe haven type product. And this overall concern in terms of the Fed, as far as, yes, we might get one more 25 basis point rate hike in May, but then we could be in pause mode after that, which has sent the greenback into new lows for the year. As I mentioned, now taking out the lows from February back down to 100.84 today. Last I looked, I mean, we were on the lows, so we could have taken that out at this point, but a well-defined trend lower here. You're looking at the daily time frame, and the move that we've seen off that spike high last year up to 114, but it was just back in mid-March, Nicole, that spike on the right side of the screen there, we were up around 105, and you know, today one of those days where you could probably put a blindfold on, I could spin you around 10 times, have you throw a dart, and you would hit a bearish indicator for the U.S. dollar. Again, as mentioned, coming off, this is also a reflection not only of some of the fundamentals we've pointed to, but also a hawkish tone from the ECB recently. The fact that they're still kind of struggling with inflation, maybe a little bit more so than we are here in the U.S. Though you can see the euro currency up to 110, 111 area. We've also seen the British pound, which has strengthened. The Japanese yen has strengthened. And while the Bank of Canada left rates unchanged this week at 4.5, again, possibly the neighbors to the north there, an indication of what we can expect. Currencies are definitely a focal point, again, as the dollar's into new lows for the year.
All right, so we'll watch for that. And then what else are you keeping an eye on? I mean, I know you watch the VIX very closely. We'll get all those bank stocks tomorrow, but we watch these levels of the major market averages in the VIX really closely too. Yeah, big time. Coming out of the break, Nicole, you pointed out all four of the major indices in positive territory. And when you see that, you can expect to see the VIX lower, right? But especially, I mean, look at the NASDAQ up almost 2% here right now as we head into this late day trade. And there was a lot of fear headed into the CPI, the PPI, and we're seeing that just come out, right? Letting air out of the balloon in many ways as the VIX comes down to 1802 right now, back down below 20. I want to point out the year low from February, still down around 1706. So we've yet to take that out. But I want to point out the March high, if you remember, when that bank debacle played out on the right side of the screen, they're up around 31. Now, this is probably a reflection, again, I think you could tie it back to what we're seeing in the indices, right? I mentioned the NASDAQ up 2%, but you got the S&Ps taking out the highs from March. So, again, I would expect to see the VIX taking out the March lows, and we are a reflection, again, of how investors are coming to grips with the Fed in terms of central bank, higher for longer, that narrative, but they also like to see the indices rallying back here and holding convincingly above the 50-day, the 200-day moving average in 3 of the 4 majors. All right, thank you for that, Ben Lichtenstein. Good to see you. Appreciate it. Thank you, Ben. Okay, time to change our focus. You want to zoom out, talk outer space? Why not? We have a pro here. Wait to hear all about this.
Did Weber went bankrupt?
Managing partner, Space Capital.
Oh,
also, the author of The Space Economy, Capitalize on the Greatest Business Opportunity of Our Lifetime.
I mean, the market's just been
that a Harvard professor said this book has been called an indispensable guide to the revolution that's happening in space. This comes from more than a decade of experience on your part. What's your experience with space?
New public companies.
Well, it's a pretty exciting time.
Public, their stock plummets because
everyone knows we've been following what's happening in space. We've been operating in space for decades, but it's only recently become a category for investment. And the reason for that is because of a lot of effort that has happened over decades that has sort of built to this moment where SpaceX was able to remove the barriers to entry, reduce the launch costs, and make space accessible for startups and innovation and entrepreneurs and investment capital for the first time, really. So we've now seen $270 billion of investment capital in the private markets invested in the space companies over the last decade. And we're on the precipice of something that is equally interesting. So SpaceX's new vehicle, it promises to reduce the cost by another order of magnitude, making a lot of the space existing space infrastructure obsolete,
so for Tesla to be selling off
accelerating progress in existing markets and opening up entirely new ones.
I mean, as you were talking about the storeship, right?
Well, that's what's sick about shorting shares.
And the materials that go into that. It's just
more.
The evolution. I mean, we were talking about if you're born in the 70s, you're almost closer to the year 1920 than you are now. I mean, it just shows you how everything has evolved and how quickly it evolves. At this point now, when you look at the different SPACs and things that have been happening,
how many shares you sell?
What are some of the themes? I mean, I know something like UFO, Procure AM has the UFO ETF. I mean, a lot of the things you do are more in the private space, but it has names like Global Star, Dish, EchoStar, satellites. I mean, what are the themes that we should be watching?
There's a lot that's been happening in the past several decades, particularly in satellite communications. There's been a lot of private equity capital into these companies, and some of them are publicly traded. With a lot of these more innovative companies, the companies that have been enabled by SpaceX over the last 10 to 14 years or so, most of the action's still in the private markets. We're still a bit early. From initial seed capital to IPO usually takes 6 to 8 years. So it takes some time for these things to develop. But we're at a point now where we're starting to see some of these companies go public. Some of them went prematurely, where they weren't even pre-profit. A lot of them were pre-revenue, and some of them even pre-product. And so some of those are having a hard time on the public markets. But we have several in our portfolio, for example, that are legitimate IPO candidates, and we're kind of just waiting for the IPO window to open again.
Right, understood. And when you talk about something like SpaceX and Blue Origin, I mean, who would you like to spend time with? Richard Branson, Elon Musk,
Rick,
Jeff
how many shares you sell at what time,
what
price?
What kind of conversations would you be having? Because there's the excitement of space and what we need. I mean, there's even talk about migrating to space. At the same time, we think about national security, and that has come up a lot this year, right?
Yeah,
more so than I remember in a long time.
I mean, absolutely. So space is becoming an increasingly critical part of our national infrastructure. And it currently is. I mean, for example, GPS is the most successful space technology in existence. Without the timing element of GPS, our global financial markets would not exist. We wouldn't be here on the New York Stock Exchange floor. Geospatial intelligence, Earth imaging companies are playing an increasingly important role with the Ukrainian conflict, providing a ground truth for what's actually happening on the ground. Satellite communications with SpaceX and their new Starlink satellites have enabled the Ukrainians to stay connected and combat Russian misinformation. And so this is just one example, but I mean, in the downturn of the market last year, in Q2, when the market was in its steepest decline, we were seeing government agencies like the NRO purchase making their largest ever satellite imagery purchase for multiple tens of billions of dollars over multiple years. And so a lot of these companies are seeing record revenues in this market because of that.
And I think you hit on a lot of things. I think the Earth imaging stuff is really interesting. I mean, we've had a lot of guests on who actually do that, and even during COVID, to see the improvement of lush green lands or water that looks clear or whatever. I mean, the improvement of the Earth overall during COVID when the world sort of stopped. That being said, I mean, with satellites, are there concerns here? Is there something, because you talk about a lot of money that's being put to work, and probably mostly for good. You mentioned $270 billion. Do you expect that money to rise? At what rate do you expect it to rise? But all good things, or anything that concerns you?
No, I mean, sure. Look, the venture market in Q1, like, we're just starting to get the numbers in for what happened in the first 3 months of the year.
Yeah.
And it's not great, right? I mean, in the U.S. and globally, venture dollars slowed by 50% year over year. And that's affecting the space economy for sure. I mean, VCs continue to contribute the most amount of capital to these companies, making up 60% of the capital and 75% of the rounds this last quarter.
Yeah.
So, the venture market holistically is affecting what's happening here, but there is a lot of innovation happening again, and there's a lot of dollars that are on, dry powder that's sitting on the sidelines looking for companies with great business fundamentals.
Right.
And the companies that we were just talking about, the types that are providing essential insights to enterprise and government customers, are seeing record revenue.
I don't think I believe you, Rick. You're not on our Discord, are you? It's a third crash today.
Like
crash, okay.
Starship coming online that are going to completely change the game.
Right, yeah.
That's a SpaceX's next gen vehicle.
All right, so we'll leave it there. I mean, Richard Branson, for example, had at least one part, his subsidiary,
He's having a rough quarter.
Was having a tough time because, you can only commit so much capital. You have to raise. It's a pretty tough time. I'm sure you'd love to sit down with Elon Musk and talk more. Do you talk with Elon Musk?
We have talked with these people. I got to tell you, Gwen Shotwell is the one that's running the show over at SpaceX, and so that's why we know we're in good hands.
Okay, Chad Anderson, congratulations on your new book. Just came out on April 11th, so people could look for that. Managing partner at Space Capital. Thanks for being here. Still ahead, we bring in our panel to discuss fintech stocks from Block to MasterCard. You'll want to hear more about that and what you need to know, and we'll do some stock picks in this space coming up.
Minutes. Here we go. $60 up, well done. Well done. Here's just another joke. Outside, lay in the grass. The GFAI making a move again. Broke out of that high, up 310%. Still filling this gap. We picked it up on this double bottom, 51%. Oh, those intraday moves are crazy.
Or a babysitter, I haven't paid them in cash in years, right? So there are a lot of tailwinds here that are really serving to kind of propel this whole fintech phenomenon forward over the next several years.
Yeah, and I know you're looking at cybersecurity and fintech, and I also want to bring Dominic into the conversation. Dominic, you're looking at a lot of these names that we know, household names, names like Visa, MasterCard.
Yes, I saw that.
Tell me a little bit about some of these names that you think are the outperformers.
No, not
in the
SS. It was the BBBY subreddit.
Absolutely, and it's really a pleasure to be here as
Across
well.
everything but BBY, I saw it.
And, you know, Visa's our top pick and has been for quite a long time. And, you know, one of the reasons why we like Visa is because we think it's a flight to quality still for quite a long time. And as we move forward, inflation pressures are likely to be a little higher than longer.
Squeezy runners last week.
And so that kind of boosts the volume year-over-year growth model near term versus other companies that are just seeing it on the expense inflation side. And so they have top-line revenue benefits from that. And that's likely here to stay for quite a bit of time in our view. And the estimates, although a little high still seem more achievable than some of the other peers. It's really important to remember that a lot of these stocks, the guidance involves a stable consumer. And we think that the consumer is going to actually slow their spending over this year. And so that's why we're net neutral to cautious on this space. But we still really, really like Visa in particular. And MasterCard, we think, is a great secondary play, but it's a perform-rated stock in our coverage. We think that the revenue growth expectations near term are just a little bit too high for that one, in particular within cross-border. And so we're sticking to the sidelines on one of those. And we think that the guidance overall among the group is still a little bit high and has to probably come down as we walk into the quarter, given the intra-quarter data that we did see in February versus January.
Yeah, I know you were also watching Fiserv. That was another name on your list. And I did want to ask you about Block. I mean, it had some sort of crazy headlines over the last week or so.
And the user that posted would be banned
Antoine, let me
for
ask
life.
you this. In the world of cybersecurity, right? I mean, now everything gets tracked, but I guess cybersecurity is such an important role quickly.
Well, when I'm thinking of an investment in a long-term space that I'm looking for growth over several years, it's very difficult to try to figure out which ones are going to emerge as the leader, especially when you're in the emerging phase of a long-term trend. That we saw that back in the internet phase when the internet first came online. There were several companies. Many of those companies went out of business, and then over time we started to identify Amazons of the world, et cetera. So I like taking a more broad bite at the apple. But if we're going to try to figure out an area to focus on, I tend to focus on derived demand, meaning that irrespective of which of these companies actually emerges as the leader in the space, we know that for any kind of financial transaction, if you're moving money around the world, accounting for that movement, and then on the back end trying to be able to offer financial services around the movement of money, it has to be a secure transaction. So security in this space is critical. It's a derived demand that's going to be pervasive regardless of which of these companies ultimately emerges. And I think that's a good way to kind of get a bite at the apple in the fintech space.
And Dominic, I don't know if you can give me 10 seconds on Block just because so many people own it.
Yeah, sure. So we've downgraded the stock at about 82 before a lot of what you've seen came to fruition. And it's really just based on a tougher environment for their customer base and their growth trajectory likely slowing. And so, you know, the recent worries don't make that easier for the stock to outperform, especially given some of that short report that we saw that was in the news a few weeks ago.
Yeah, thank you for that. Antoine Harris, Dominic Gabriel, thank you both. Great to see you both. Thanks. That's going to do it for us here on The Watch List. I'm Nicole Petalides. Thanks for being with me every single weekday, 11 a.m. and 2 p.m. Eastern Time, live from the NYSE. Keep it right here. Oliver Rennick.
SPY, new high there, 413.65. Or 14.4. Yeah, 0.35. Got 415.11. It's been quite the melt up today. For 30. Crazy you're short, thinking short on Tesla and that bullish on SPY. That's what it seems like, Ace. If it's fixed, no more cycles, and with the amount of liquidity that's been pulled out of it from DRSing, you're okay with that. Yeah, I mean, it's a stable stock, very stable. Only problem is you can't sell covered calls for much value anymore. I mean, it's still relatively good in the whole market, but for what it was before, it's awful. But you weren't selling covered calls anyways, so you don't miss the volatility, huh? 890. Jim's trying to time the top. SMX coming down a little bit here. SPY be ripping for sure. Early.
Traded inversely to the dollar, and we still see that playing out here. It also seems to add more evidence to what bonds have been saying about the Fed's path to light inflation print, CPI, and then PPI this morning has investors pretty optimistic that Jay Powell and crew are going to be able to take it a little bit more slow and gradual from here. Now, as far as the cuts go, we'll get there when we get there. No evidence from the FOMC minutes this week, no evidence from the commentary from Fed officials that such a deep reversal and pivot would be in the cards unless there is a deeper, significant downturn in the economy beyond what the Fed already sees ahead, because they do think that we are going to see further fallout in credit. They mentioned that in the minutes, but they don't plan to cut. So there may still be some lingering tension between investors and the Fed, but right now investors are in control, and the narrative seems to be very compelling as the dollar breaks down and yields continue to remain pretty low. 10-year right now is kind of pushing back a little bit in the second half of the day, so we're at 3.45, but we're still hanging out near the low levels of the year for the 10-year. Would just point out, though, that this is the real kind of yo-yo problem that investors are going to get in here as we look at loosening financial conditions through the stock market, and also the potential here that activity in housing, the mortgage apps we've seen pick up as rates come down, that is all potentially inflation conducive. We may not have to worry about it right now, but it could very well be something to contend with later on this year as we've gotten the disinflation, but be careful not to call it deflation just yet. The response, though, is pretty clear. High beta stocks are rallying. Bitcoin's charging forward. Risky stuff is winning right now, and that is a pattern that we're quite used to. The stuff that's lagging are the more safety-style trades, like XLU utilities, staples, some of the defensive names and sectors that worked out when inflation was the main problem last year.
Got a little ways to go.
A back seat. So
it's actually 970 is a gap fill,
be a bigger problem, but the market
you're gonna get some support here at $8.
As long as inflation numbers
resistance
are under some degree of control, or at least the market's perception of it, a lot of optimism is here. We can have a debate about just how in control those inflation numbers are by the Fed, but at least a couple misses here does add plenty of evidence to the growing data set that it's calming, it's cooling a bit. I got Renita Young and Kevin Hanks to walk us through some of the other big moves and stories here this afternoon. Kev, the pickup in this market throughout the day, trade near the highs right now. What do you think?
This has been
I could easily just stop and halt down.
The data came out this morning. It's been a slow grind higher all day that has just simply picked up momentum. The rally is broad. If you look at the S&P 500, it's basically every single sector, every one of the 11 sectors in the S&P, with the exception of real estate that's pretty kind of unchanged. Everything else is stronger. And it's been a slow, methodical grind throughout the day, Oliver. And a little bit of divergence between yields and the U.S. dollar, but you can't argue with a NASDAQ that's leading this market. If you look at
come down a little bit here.
Visualize the S&P 500, it's a top left. The more you get to the top and the left of the visualize of the heat screen, the colors just get more green and more green, Oliver. I mean, it's led by consumer discretionary and communication services. So really strong day that really has gone up very methodically and slowly and never looked back, Oliver.
Okay, the tech strength showing back up, kind of just when the market needs it, because we did get a little wobble in Tesla. We got a little wobble in Apple. We'll look at that heat map here in a sec. Let's talk about Apple in specific here, Renita, because there's a couple stories, not exactly like groundbreaking stuff, but it doesn't have to be for Apple. It seems like as long as there's no discreetly negative news, we know the company is going to lead the charge in times like this.
It does. Apple is doing what Apple does today. And so right now, the biggest thing that Apple is doing is reducing its reliance on China. The first couple of pieces of news that I'll tell you about. First, there are reports that Apple is in talks to produce MacBooks in Thailand, and that the reports also say that the company's already been mass producing the Apple Watch in the same region for about a year now. And that is interesting news because we know that those tensions are continuing to build between the United States and China, and both Apple and actually not just Apple, but many other companies, many of its suppliers are reducing their reliance on China as well, trying to find other areas to produce their companies. They're trying to avoid any kind of a hit that may come to business if this tit-for-tat situation continues to heat up between the United States and Beijing. Now, another piece of information is a report that more than $7 billion worth of iPhones are now being produced in India in 2023. That's a huge push, and about $5 billion worth of those had been exported from Apple or from those countries to other countries, I should say. In India, it accounts for a chunk, about 7% of all global iPhone manufactured or mobile iPhones that are made, and that's up from just 1% in 2021. And then we have a couple of price target raises. The first one comes from Canaccord, who increased Apple's price target to $180 from $170 and kept a buy rating on the shares. Now that price target raise represents about a 9% move to the upside from where it's traded right now. And the analyst said that it was a modest increase and that they did that because of iPhone estimates. They're actually using those iPhone estimates to offset the lower Mac sales that are experiencing right now, are expected to come through because of the lower PC demand.
We saw that earlier in the week, that story about the drop in PC demand hitting Macs.
Absolutely. Okay. We did see that. And it's not just hitting Macs. We know it's also hitting other big brands of computers as well. And also, Credit Suisse raised the price target to $188, and that's about a 14% move to the upside from where it's been trading today. And the analyst is keeping an outperform rating on the shares, saying that iPhone sales have been resilient during this quarter. And this analyst thinks that Apple's going to guide for the third quarter revenue up year over year, and for gross margin around 44%. And we'll see more to come for the second quarter earnings report. That'll be out on May 4th.
Okay.
People can start front running it.
A little domestication of the supply chain, not all the way to the U.S., but away from China. Market likes it. Amazon's having a great day here. We're going to talk about that a little bit later on. Some of the comments from Andy Jassy on their plans. Kev, tomorrow, though, we do have banks kicking off the earnings season. The economic data, the heavy-hitting stuff, is past us here this week. What about earnings? Does that have potential to rock the boat, or is this a market that seems to have fully chosen its direction here?
Yeah, that's a really interesting way to start off earnings season with a group of banks, JP Morgan, Citigroup, Wells Fargo, that have frankly sold off hard in relation with, you know, the banking issues with SVB and others. So all these names, Citi being probably the strongest of the three, JP Morgan down significantly from where it was just a few weeks ago. So we're going to get those earnings, and we're going to find out. Number one, did the flows go from smaller banks towards the larger banks? What is going on with trading? What's going on with IPOs? What's going on with mergers and acquisitions? What's going on with FICC? There's going to be a lot of issues, but Jamie Dimon's the
speed of velocity. Probably going to get halted again.
And I expect them to put up, you know, fairly good numbers. It'll be interesting to see how they explain or how they guide through the, you know, this banking issues that we've had. Remember, you can make a case that the big banks since 2008, they have 3 times the working capital that they had back then. So even though the flows have been towards them, we'll see what that means in terms of earnings, right? It doesn't mean really just because that money comes over that they're
must have a lot in there if you left 5K on the table.
They still have to find revenue from those deposits. So yeah, it's going to be interesting. I think that and along with some retail sales data that is supposed to be down 0.4 for the second month in a row.
If the halting, like,
we'll see if we get any lift from that. Another check on the U.S. consumer, but
was it supposed to be 10% in 5 minutes?
Us off. Also, United Healthcare should be a big day. We finally get a bunch of names that we can deal with.
Is that the gap fill?
First quarter earnings season starts tomorrow, Oliver.
Seems like the banks might be
actually going for a gap fill.
Specific, nuanced event though this time around. Changes the way they're going to categorize things, the fallout from the regional bank situation, whether or not that's going to be able to wrest the narrative from tech. It's going to be a pretty high bar for those companies. We have to get some blockbuster numbers out. Appreciate it, guys. Good setup here for tomorrow, and a little recap here. What's moving today? Kevin Hanks and Renita Young.
You're right with the gap fill. Power hour. That's crazy.
From Invesco, strategist. Who has a pretty interesting thought here about maybe where sentiment lies beyond just the stock market prices. Paisley, welcome to the show. Tell me what you see right now as the equity market finds a lot of conviction.
We're not at the end of the day yet, so.
Yeah, I think investors are always looking for transparency and looking for confirmation. And so I think today with the positive data that we saw, in the sense that it might give us relief that the Fed will likely cool or pause every 5 minutes. Future hikes after the main meeting. That transparency, that confirmation, I think, is what investors were looking for. We also know that investors have a lot of cash to put to work.
From the double bottom today.
So I think today is a little bit of a relief rally in the midst of what we're seeing as a broader economic contraction as we look
964
forward over the next several months.
Is that cap bill?
That
97
cash
something?
maybe left to be put to work. Is that part
973.
of what might constitute certain degrees of caution still in the investing
Get back to its SPAC price of $10.
Landscape beyond kind of this
all in one
strong mega cap tech trade? What do you guys see as
maybe
sentiment left to turn?
Yeah, so in general, I'd say as we take a step back, we're looking at a pretty sharp U-turn in overall risk appetite in the markets.
Coming down again.
We take a step back and think about what happened in the month of March, even though we did see equities increase in price or rally over the course of the month. If we look underneath the surface, the drivers of return were actually more in the defensive parts of the market. So that goes across asset classes as well. We actually saw fixed income outperform equities, and within equities, we saw more of those defensive sectors. So we're pulling that through into our positioning for the second quarter here, and more of that overall defensive posture. We think at this point, investors aren't likely to be compensated for taking risks. We think that overall asset prices have not yet reflected what we think could be downside in the months ahead as markets really digest a lot of this data. And I think the May meeting for the Fed will be really imperative to see whether or not that is a pause
from
following
8.3 to
any potential rate hike.
Okay. The potential for cuts later on in the year, how much of this rally depends on that in your mind?
Hold on. Left 10K,
I think
mid
the
10K.
Fed's going to be data dependent.
Yeah, it really got crazy up here.
So I think today's market rally is not going to impact whether or not the Fed were to hike rates in the back half of this year. We've seen markets already pricing in a rate hike. So we need to have more clarity to see whether or not the markets and the Fed are on the same page. I think today's data is another proof point that likely the Fed will be on the same page as the markets, and expectations for that back half of 23 recession are likely to be more likely today than they were, say, last week.
Paisley, thinking about the driving force here, it seems like it's very central bank driven. It's macro. We do have these earnings coming up. Obviously, banks, there's some tension here. But it seems like the market, if it were worried and earnings really mattered, then why would we be rallying as the recession odds go up? I mean, is this truly a market that is trading bad data as a positive thing?
No, I think there's a little bit of confusion in the sense that we're getting bad data, which then requires the markets to rally. And I think, again, that's just a confirmation that the markets now believe the Fed has more information to make that right decision. So whether or not they do decide to hike, I think markets are still pricing in 25 basis points. Today's confirmation of some weakening in inflation or disinflation would likely lead the Fed to pause. So markets are now more confident that the Fed is going to react positively in the sense of not overheat the economy by continuing to hike into the summer and early fall.
What about the cracks we're seeing in the labor situation? Economic surprise index has been dropping pretty fast here. Of course, some of that comes from inflation data, which may be a positive thing with the implications from the Fed. But if inflation comes by way of demand slowness, does that not find its way into earnings eventually and make these stocks even more expensive than they are?
300%.
Yeah, I think there's a lot of factors at play. If we think about the corporate earnings season ahead, as you alluded to, banks are obviously in focus, but I think broadly, we might see impacts of not only the inflationary pressures that have been felt over the last several quarters, but also the employment impact, sit on your hands right? So we've already started to see broad layoffs in some of the sectors of the economy that are more recession-proof. So McDonald's, Walmart, being some examples of those. So I think as companies are digesting and we're getting the data, which we know comes at a lag relative to the actual earnings. But I think the first quarter reports that will come out in the subsequent weeks here should be pretty telling to see if companies are really structured to weather recession that could come later in the back half of this year. So in general, I'd say, again, we're taking some risk off the table. We're still in the markets. But again, looking to take risk where we think we'll be compensated for it, which is in those more defensive parts of the market.
Got it. Okay. So you're certainly aware, cognizant, and can see the logic for why the market's kind of doing what it's doing, but still doubting about the sustainability of it, it sounds like.
Absolutely.
Okay. Very helpful. Thanks, Paisley. Good convo. Appreciate it. All right, when we come back, let's talk some more about earnings companies, but more specifically the brands, especially as we've seen more and more reports of lingering inflation that's causing consumers and buyers to be a little picky with their brands and their choices. Pricing down is what we've heard a lot about. Which are the companies that are going to be able to withstand that environment? We'll be right back.
Buy, squeeze, and new high there. SMX showing its lack of liquidity. A wick down to VWAP back up. SXAI is actually consolidating up here. Pretty incredible. SI will be pumped for today anymore? Nah. It's a good buy around 150. And could sell it at 160, 168 there. But yeah, down here I'm going to be picking up more shares probably. I do have bank earnings tomorrow. And SI's earnings actually I think are next week, so coming up at least. A couple big catalysts to move it one way or the other. SMX at the high there. Yeah, I still like SI for sure. I think this is a longer term play. But with earnings of banks coming up, we could start seeing some action on it tomorrow. Because you think this will probably move in sympathy to the bank earnings, whatever banks have them tomorrow. But again, with your gains, you want to be slow to get back in, slow to reinvest. All too often, on gains, I would be excited and just put my money back in, and then slowly lose it, trade by trade. Not waiting for the right setup again. Spot looks like it hit a top there. Big doji up there. 30 minutes to go. Here's how far SPY drops here. Move to VWAP would be pretty big. Record low volume. 1.4 is quite low. Day's not over. Wow, since we've been under 2, hasn't it? Maybe. See what happens by end of day. Even cheaper. Yep, BBY all-time lows. Yet again, 25.50. I don't know if you saw this. This was earlier. 215. But yeah, we're back at those levels. 25.51. Another 9% day to the downside. Well done. Only like 27% go to 0.
Amazon
arrived.
Has been a little bit of a struggle
Almost made it.
In the post-COVID era, but it seems like Walmart generally has been a better reward for investors. Costco's chart is one that's fascinating because it's kind of coming to a point where it's not trending higher, it's not trending down. How are those big retailers going to handle this? I mean, are they still making changes to their supply chains?
Dude, CXAI might keep going. This is crazy consolidation up here.
Because even though the disruption has kind of slowed a little bit, you still have an enormous cost of flexibility that's built into that. Retailers in particular want optionality so that they don't get caught in that pinch. When we think about industries that have that high cost to serve element. So think the last mile delivery types of businesses, the pickup in store types of businesses. The question that we're asking is, what's the time elasticities that consumers have? Because I may be willing to wait, to use your McDonald's example, 2 minutes for my McDonald's. If I have to wait 5 or 10,
yeah,
probably not. But now if I'm going to the latest Jean-Georges restaurant, I could probably wait 15 or 20 minutes.
You might have to wait a month.
Might have to wait a month. So that question of how much time is a consumer willing to wait for the product starts to become very acute when you think about companies like Amazon and Walmart that are challenging themselves for that last mile delivery. Because delivering that bar of deodorant or that bar of soap versus the $70 luxury perfume, the cost margin that a retailer is able to absorb is very different. So getting that time elasticity right is incredibly important.
It's pretty amazing. Just the other day, I had to replace some headphones, day of, from Amazon. Amazing. I mean, specific gaming headphones that normally you have to go a couple stores to look at. It is really incredible. Last point here, because you talked about the death of brands in the middle. Is there any potential for death of brands that like exploited the extreme luxury consumer, though? And for that, I kind of think of a stock like
he was just totally making it up.
At the end of the day, if push comes to shove, are people going to say bike's a bike?
Well, I think the bike versus the experience is very different. So if you're going to be selling a bike, and even when they came out, the challenge was
GTI is so boring to watch, but this thing does make big moves.
And that lifestyle question becomes an interesting one, because even in the retail environment, experiential shopping, things like that, if a brand is able to enhance and make the experience worth the price, they'll be able to survive. But if it just becomes a stale environment, it'll be very difficult to maintain.
Greg Portell, great to catch up.
Nice to see you.
Absolutely, very fun conversation. Lead partner of global markets at Carney. Coming up, we got some options trades. Somehow Tom has managed to find 2 bearish trades in today's market.
36%
and maybe a little more chat about being stuck in the middle. Best Buy is on the list today. Someone is fading the stock. We'll be right back.
They're still great people. How do they do it? They're great. Good one. Condon accent. Yeah, I think consolidating up here is pretty crazy. Finished sale. They having a share offering. Crazy, man. Generative AI could drive a 7% increase in global GDP and boost productivity growth by 1.5% points over a 10-year period for Goldman Sachs. Amazon is attempting new measures to get customers to return fewer of their online orders, including charging a fee to return items to UPS stores. Bugger. The evidence against market timing is overwhelming, yet many still do it, falling prey to their emotions. Buy and hold. Max Intrid, screenshot that and look at that every time you want to trade. Not just buy companies you know and like and believe in and use. Demand for vacation homes has plummeted, 52% below pre-pandemic levels. Holy crap. I haven't noticed this. Oh, vacation homes to purchase, that's Redfin. Yeah, but the prices still are inflated to crap. Bud Light owner Anheuser-Busch is reportedly pausing its marketing efforts and reevaluating its influencer partnerships. The Fed meets again on May 3rd, and the market is currently pricing in 70% probability of a 10th rate hike of 25 basis points. When was the last time the Fed funds rate was above 5%? September 2007. Yep, there it goes. And PX. Is this another pharmaceutical one? Ixion? 93%. Wait, this is not another SPAC? Are the SPACs starting to squeeze? That would be awesome news. I'd love to get me some SPAC action. Was this a SPAC? Oh, what is this? This one just had a split though, notice that? Very interesting. I guess it didn't just happen. A while ago. October. A long time ago. Oh, but look. Looky. Dropped the day before. Plummeted on the day that the split. Kept dropping, but then a huge rip up, back up. Isn't that interesting? Tons of volume. Big gap up a few days before the split too. I found it the good ones. Good job, Tree. Still some buying pressure, pretty crazy. No halts to the downside or anything. You've traded that last one you just mentioned a couple times.
To move lower after that early week pop that we saw. Trader came in there and bought 2,000 of the May 35 strike puts for an average debit of 114. So the break even to the downside 33.86 over the next 36 days. That's about 8% below the current share price in there. The stock is up about 17% so far this year,
never
down
halted. It's crazy.
3% today on that report out of TechCrunch that the hackers claim to have stolen about 10 terabytes of data from the company, including reams of customer information. So that's not a good look as they parse through this and how much damage it's going to do maybe to this company's stock. But this trader's betting on some downside here. It's not a massive trade. It's only 2,000, but we typically don't see large block trades in Western
Okay,
digital.
I have
so,
time. I'm going to
this stock's weak on
do a recap video
for the overall
so,
market, but yeah, hackers,
cut off the stream.
10
Exciting
terabytes
day.
of data.
Exciting day.
That equates to about a 3% loss.
Marucha restaurant.
Shares.
Yeah, it's a lot of data.
Figure it is.
Yeah.
A terabyte. Okay. All right. 2 week stocks
thank
on
you guys
the
so much
day.
for your
Let's do a
likes.
good one.
Yep.
Amazon's up
Subscribes,
big.
better have done it. Hit that notification bell if you
4.5%.
haven't.
Jane's going to walk us through
Ace,
some of the
thank you
updates
for all your
later.
gifted
Don't
memberships
steal
or
your thunder.
dono.
Give me the trade.
Need to
That
be
CEO
generous.
came out with his annual letter.
Much
This is the
appreciated,
second
man.
one for CEO Jassy from Amazon.
Thanks,
and he
Tree.
says
Thanks, Jim.
they haven't fully monetized a lot of what they have in the cloud space and AWS. He did state that AWS has an $85 billion worth of annualized revenue run rate. They're starting to lower prices for some of their customers, Oliver.
Yeah,
I think
recap should
that's
be out
key is holding
30
on to
minutes
those big customers
over my trades.
as demand sort of weakened a little bit. Instead of
We
getting
mentioned this
rid
one
of
too,
AWS
CXAI.
or maybe moving to another cloud
what we're
provider,
looking for
they want to give some of
tomorrow.
their bigger customers
Friday. Thanks,
a
Trace.
little
Thanks,
bit
Big
of a
Hugs.
break here as
Thanks,
the
guys. We'll see you on the
growth
recap
in
video.
that segment
Amir.
continues to
Sub up,
grow
like
and
up,
the
comment down.
competitors
Happy money.